From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Shorting a stock purely because you think it's expensive is a death wish.
These are companies that are growing their market.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Futures on the S&P 60 minutes out from the opening bell, a little bit softer across the board here on the S&P 500. Likewise on the NASDAQ, we're down by 0.1%, down by 0.5% on the Russell of small caps, which is where a lot of the leadership has been, Lisa, over the last week or so.
Yeah, and maybe this was single-handedly because of Emily Rowland coming out and saying, really, guys.
Not a fan.
Well, yeah, she basically saying it doesn't make sense with the idea that the economy is softening and that the Fed is going to have to cut rates. Why should small caps outperform? You could be right on the macro call and wrong on market performance, and that maybe is what you're seeing today, although it's hard to draw too much conclusion from the action of this morning.
I know there are a ton of views out there. I'll just explain Emily's view just a little bit more. Her view is if the Fed is reducing interest rates, it's not for the right reasons, and ultimately that's why she doesn't like the rest of the equity market away from big tech. She's
saying buy quality, and that's the reason why she likes big tech, even though it's expensive, simply because they are delivering the earnings. I just have trouble understanding what valuations look like with lower rates after the rally that we've seen on the heels of higher rates, but also higher growth. It becomes this sort of challenging moment remember when big tech was actually a rates play?
Yeah, of course, yeah.
That got lost and it was sort of irrelevant. How does it become a rates story now, or does it just not, like she was talking about?
Previous regime, so not so long ago, low rates, low growth, by growth, by tech. Higher rates, better growth, by the cyclicals, by financials.
Right.
I had a guest on earlier, he was basically saying lower rates better for the banks. We know why, given the experience of the last year, and kind of vice versa with the tech story of the last regime as well. Kind of flipping this all on its head, aren't we, a little bit in the last few days?
Or you could just make it really simple and say low rates, good for big tech, high rates, good for big tech, low rates again, good for big tech, and that's what we're going to see after the bell today.
It's been true. We'll see what we get from NVIDIA. It's been a series of beat and raise, regardless of what you see from the Federal Reserve. That's NVIDIA. As the bond market too, with a 2-year at 386.50, yields lower by 3 basis points. The 10-year 382.92. Let's finish on foreign exchange. Lots of talk about these outflows in the FX market, engineered by lower interest rates of the Federal Reserve. Just this overweight consensus trade building up over the last couple of years of money that's just seeked out higher rates, and those higher rates have been the United States. And that's been a story of dollar supremacy, US supremacy, US exceptionalism. Are we undoing that with a few rate cuts at the Federal Reserve? Is that enough to trigger a lot of outflows out of dollar-denominated assets?
People were saying that, and then today, not so fast. Honestly, this is going to be the difficult question, especially the ECB officials. I want to go back to this. The ECB officials who we spoke to in Jackson Hole all had one concern: weaker growth. Poster child, Germany. How do you then talk about the potential for a couple rate cuts in the United States on the heels of not weakness that we've seen yet, just simply to normalize rates, is really undermining the idea of a stronger economy than what we're seeing over in the European region.
The euro negative 0.7%, euro dollar 111, just about. Under surveillance this morning, Vice President Kamala Harris and her running mate Tim Walz taking part in their first joint interview on CNN tomorrow night. It will be the first substantial interview for Harris since she replaced President Biden at the top of the Democratic ticket, if you consider sort of those other exchanges with reporters on the sidelines to be a broadcast interview, I guess. This truly is the first.
This is going to be very highly watched, perhaps as watched as some of the other events. It's sort of now a new calendar item before September 10th. Key question to me is Waltz a liability or a benefit to her? Does it distract from her being able to answer questions? And if she doesn't answer with real policy, does that become a problem as well? Because those complaints will only get louder at a time where a lot of people want to even have a framework, a rubric to understand how she will govern.
It's become an issue. And people want to see a lot more of what we're going to see in the next 24 hours. And hopefully we do. Of course, this is a bias of the media. We want to see those exchanges. But also, don't you want to know what you're voting for just in terms of policy and not just vibes?
Who was it the other day who we were saying, isn't this becoming an issue? And they said, it's an issue for media people, but it's not an issue for the polls. People are still voting for it.
It's working in the polls. Let's put it that way. I mentioned that a little bit earlier. Traders on hold ahead of the market's so-called make-or-break moment after the closing bell when AI giant NVIDIA reports earnings. Any disappointment is expected to rule markets given the company's weight in US indexes. NVIDIA is up almost 160% year to date. After the numbers drop, our good friend and colleague Ed Ludlow sitting down with CEO Jensen Huang at 6:30 Eastern Time. I can tell you we'll catch up with Ed in about 20 minutes. So if you've got questions for Ed, shoot them over. We'll talk to him in about 20 minutes' time. Traders also keeping an eye on this week's jobs data, jobless claims and core PCE, as the labour market becomes a sticking point ahead of the Fed's decision on September 18th. Stephen Stanley of Santander with this to say, I'm especially anxious to see the August employment report. While they will both be important, I would gauge the August jobs report as likely even more pivotal than the August core CPI reading. Things have changed a lot in the last 12 months. Stephen joins us for more. Stephen, good morning to you.
Good morning.
There's a line in your research. You don't love that Powell gave up optionality. Was that a mistake? What don't you love about it?
Yeah, I think, so my view is the Fed's going to go 25 in September. And I think that's where, it seems like that's where most of the officials were leading it up to Jackson Hole. You heard words like gradual and methodical, and there seemed to be a lot of tea leaves pointing in that direction. And the markets really were only discussing whether the Fed was going to go 25 or 50, not whether they were going to go at all. So he pretty much locked in a September move. Okay, fine. And I guess he's waiting and going to let the data dictate what the market's going to price in, which can be dangerous if the markets go a different direction than what the Fed was intending.
Let's explore that danger. I assume you mean a big upside surprise in the jobs report and unemployment drops back. We get like 300K on payrolls, unemployment drops back. Are you saying that's why it's dangerous?
Well, that would actually be, I think that would be fortuitous in the sense that the markets would then probably scale back their expectations naturally. I guess if it goes the other way and the numbers are somewhat weak again, not disastrously weak, but a little soft again, the Fed is still thinking they really only want to go 25. Look, it's the first move. We want to be cautious, but the markets are way out ahead of them.
You think there's a conversation that begins about 75?
I don't know about that, but I mean, you know, certainly the odds of a 50 would go up if the labor report is on the weak side.
What's the argument to not move aggressively based on this argument that inflation has come down materially and that monetary policy is significantly tighter, more restrictive than it was 6 months ago or a year ago simply by virtue of that discrepancy? Yeah,
I think two sets of points. One would be on the economic fundamentals. I mean, the economy still seems by and large pretty healthy. I mean, GDP growth was 2.5% to 3% in Q2, and it looks like it might be similar to that in Q3. Consumer spending has been strong. So we have seen a little bit of softening in the labor market, but it doesn't feel like the economy's just tumbling off a cliff. At the same time, inflation, while it has come down, is not quite back to target yet. So there's arguments there, I think, for going cautiously. More importantly for me, though, is looking historically at the way the Fed has tended to operate. And they do tend to be more cautious at the beginning of a cycle. And the reason is because they like to go in a series of moves, right? They don't want to go back and forth. They don't want to ease and then have to come back and tighten again. So they kind of tiptoe into it a little bit. And they've done that historically, both in hiking and in easing cycles.
Is your biggest issue with market pricing right now the magnitude of rate cuts or just the pace of how quickly the Fed gets there?
I think it's the latter. I actually have been pretty aggressive on how much the Fed would do, say, by the end of next year. And the markets have kind of come in line with that at this point. I just don't see them moving in 50 basis point chunks over the next few meetings.
Did you not read anything into Fed Chair Jay Powell not using those words that you mentioned, the gradual, methodical, all of those types of language indications that we heard from other Fed officials?
Yeah, I think that was very significant, and I was surprised. I thought he would try to kind of push the market off of that 50 basis point move. I guess my takeaway after having a couple days to think about it is I feel like maybe his audience was not so much financial markets as it was the general public, right? I mean, I think he felt like he was obligated to give the broader audience, whether it's the political realm, the media, you know, kind of Chairman Powell speaks a lot to the broader public, right? And I think he just wanted to say, hey, heads up, we're going to be easing soon. Because, I mean, for the markets, that was no news. The markets have been, you know, as I said, but just debating what the size of that move was going to be.
There was a word in that speech that jumps out, though, and it was my confidence. There was a separation there between his belief, I think, and the committee. And we had a guest earlier this week making that comment as well. And I was trying to think whether this was the Federal Reserve chairman trying to push the committee into a bigger decision that maybe some were reluctant to make. And you can see that in the minutes from the July meeting, that there were some people pushing for a rate cut and a lot of people weren't ready to move. And I think you could sense that in anticipation of the speech in Jackson Hole. In the 24 hours before that, we had a series of policymakers, Governor Bowman as well, sounding somewhat reluctant to reduce interest rates in September, and certainly reluctant to go as far as he went in that speech. Yeah. And I always wondered whether this was sort of like Draghi-esque, pushing the governing council to make a decision they weren't quite ready to make. How much daylight is there between him and the rest of the committee?
Yeah, we'll never really know for sure. Powell is someone that has tended to try to operate by consensus, so he has not been as much as, say, a Greenspan or even a Bernanke, someone that's tried to pull the committee hard in a certain direction. But that may be going on behind the scenes. There's no doubt that when you get close to a turning point, that's when the nuances, the shades of gray come out. And as you say, we have seen that. We've seen some people who are clearly more eager to get going than others. Perfectly natural to see that at this point in the cycle.
Does it matter how fast they go?
I don't think it matters in terms of, you know, one single move, what it might mean for the economy. Does it matter whether they go 25 or 50 in September? Does it matter whether they go in September, October, or November? I mean, it's not going to make or break the economy, but I think it does make a difference in the sense that it will manage market expectations. And financial market conditions do matter. Powell and others at the Fed have told us that. And so if let's say, hypothetically, let's say the Fed goes 50 in September, I would have to imagine the markets are going to price in 50s again and again and again. And so,
yep. And maybe more.
Do you want to kind of feed that beast?
Before you go,
that's got to be a...
What's your number for next week, for next Friday?
So I'm actually a bit optimistic. I do think the number is going to be better. I think July was a little bit distorted. So I've got 190 for payrolls, and I've got the rate ticking back down to 4.2.
The median right now is about 155. Small survey, though, still putting together those estimates. Stephen, thank you, sir. Thank you very much. Stephen Stanley there of Santander. If you are joining us just now, we're 50 minutes away from the opening bell, so welcome to the programme. Let's start with the equity market price action. A little bit negative here by 0.06% on the S&P 500. The NASDAQ 100 down by about 0.05. Some underperformance on the Russell, on the small caps down by 0.4. Looking for something close to 200K on payrolls next week from Santander and Stephen Stanley after we heard from Andrew Honhorst of Citi a little bit earlier this morning, looking for about 125 in their estimate.
Yeah, and why it matters is the sort of delta between 25 and 50 and the pace of getting to lower rates. You mentioned that a couple of Fed officials on the committee talked about the potential for a July rate cut. We have some color from our colleague Christopher Condon out of the Fed team on Bloomberg News on who those members were, which I thought was interesting, that it was New York Fed President John Williams and Austin Goolsbee of Chicago. And I wonder if the regions are sort of important in terms of metropolitan areas in the Northeast, or how we can sort of extrapolate this out. But nonetheless, kind of just some interesting color, especially with one of the big three, John Williams, looking for a cut as recently as last month.
A cut on the so-called discount rate, and I think for a lot of people reading between the lines and suggesting maybe there was a push elsewhere to cut federal funds too. Latest detail there. The other thing I want to talk about as well is the bond market. So let's turn to fixed income, 2-year, 10-year, 30-year, and the shape of the curve. The 2-year versus the 10-year right now, let's call it effectively flat. Let's just call it that for the sake of the conversation. 386.50, 382.92. Why would I want to take on additional duration for basically the same yield that I can get at the front end of the curve. Now, we'll get a lot of bond salesmen come on the program and say reinvestment risk, reinvestment risk. Other people would just suggest to really unlock that cash at the front end of the curve, you need a high yield at the long end. And what we heard from BlackRock 43 minutes ago was exactly that. You need this curve to normalize. So BlackRock, and him specifically, looking for this curve to normalize and looking for something like 0 to 60 basis points of steepening. So you get 60 basis points of steepening, he thinks you really start to unlock some of that cash and people start to deploy it further out along the curve.
To me, the big test is going to be tomorrow. We've got $44 billion of 7-year auction notes being auctioned off. And to me, that will be an indication. Do you see the same type of success that we saw yesterday in the 2-year note and today potentially with the 5-year note in the longer duration because of that concern, the lack of certainty? Even if you don't believe ultimately it will face off with a market.
So the US Sullivan told Chinese officials that the US will take the necessary actions to prevent US technologies from undermining national security without limiting trade or investment, according to a statement from the White House.
Extending duration. Has it become less attractive, given what we were just talking about moments ago?
It has become less attractive. We've been talking about this for a while. I wanted you to be the first one to hear it because we've been talking about it for, I think, close to 2 years now. And all the points you made are the key reason. It's just the risk-reward between investing in, say, a 10-year at 3.8 and the idea of rolling T-bills, because you're basically making a decision if you're making that sort of investment. It's just less attractive. Now, we also think the 10-year can kind of hover in this range for a little bit, and we agree with the points you made about yield curve steepening. We think it should steepen for good reasons and really a bull steepener as short-term rates fall between long-term rates. If we look historically what happens in a normal, still positive trend growth environment, the yield curve should be steep. So I think we'd see short-term yields fall below that 10-year, and we think it could hover around here for a while. So that risk-reward balance from a tactical standpoint isn't as attractive. We still think investors can consider it. We're kind of saying at benchmark duration, but we're not really pounding the table as much as we were when the 10-year was at 4.25%, 4.5%, or 5%.
I could hear Bob Michael in my ear saying, do people who missed out in buying the 10-year yield at 5% yields on October 19th, 2023 really care about the yield curve dimensions here? Are they really trying to do calculus here to understand how much that curve is going to shift at 3.83%? On an absolute level, why wouldn't you say, all things being equal, yields will come down so you can have conviction that with any slowdown enough for the Fed to be cutting rates, you can invest in longer-term bonds and be just fine?
Well, I think just fine is a good way to put it. If we look at what that yield is, if you hold for that term of the bond, you get certainty there. But there is potential opportunity down the road once those rate cuts come. And going back on John's points before, that risk reward doesn't look attractive. How do you get regular investors to understand what a yield curve steepening means? And I think that matters because at the end of the day, for a lot of investors, it's yield, it's income. And I can still earn higher income with short-term rates, short-term investments. As the Fed does begin to cut rates and once that yield curve normalizes, we think maybe then there'll be more of an opportunity. Once the Fed gets to, there's no magic number, but if it gets to that 3% area and we do see a 10-year still in the 3.5% to 4% area, that'll probably be more attractive for a lot of individual investors.
You're focusing on just the income aspect and how to get the most income at a pretty safe moment. And I'm wondering, you're talking a lot about investment-grade bonds. Spreads have come in pretty significantly. Why is this still the correct way to add income rather than duration, rather than some other ways to play it?
I think if you look at duration, there is risk to the downside should our outlook, turn incorrect. And we see yields rise. That's a big sensitivity to that increase in interest rates. If we look at investment-grade corporate bonds from a credit risk standpoint, we're just really not that concerned. We are worried that growth can slow, but we're not worried that a recession is necessarily on the horizon. That's kind of our firm view at Schwab. We're seeing signs here and there, but not in the next quarter or two. If you look at the investment-grade market, fundamentals are still relatively strong. We're seeing the share of BBB bonds come down, which is a positive development. And we think those companies have investment-grade ratings for a reason. Strong cash flows, a lot of cash on the balance sheet. So we think you're in good shape. But again, those yields have come down also. We talk about risk reward. Spreads are low, whether it's investment grade or high yield. And if you look at that IG market, we could have gotten 5.5% yields about a year ago. Now we're looking more like 4.5%. And to get closer to 5, you have to take more credit risk in BBBs. And not that we'd shy too much away from that, but we wouldn't say dive in headfirst in BBBs in case growth does slow more than we're expecting.
Before you go, can I just nail you down on something? So top of the interview, we were talking about extended duration has become less attractive. If there are limits to price appreciation, given how we've reset things, Are you questioning the efficacy of Treasuries as a ballast in the portfolio as well, or is that a step too far?
That's a step too far.
Okay.
We still think bonds
it's the second time we've done that today.
Sense.
All right. Colin, thank you, sir. Colin Martin at Charles Schwab. You can see what I'm trying to get at this morning.
I appreciate it. I think it's a good way to kind of create some drama on a pretty drama-free morning. But I actually am with you. It's sort of, there was a moment where bonds were not the ballast of the portfolio. People went into gold. People went into Bitcoin.
Still going into gold.
They're still going into gold. They're still going into Bitcoin. But I just wonder if that dynamic has shifted back to what it has been traditionally.
I've asked that question twice, I think, in the last hour. Both BlackRock and Schwab are saying that's not the case. Colin, it's good to see you. Thank you, sir. Thank you very much. Equity futures right now on the S&P just a little bit softer going into the opening bell, about 42 minutes away. Let's give an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Hackers.
Hi, John. We're seeing some retail stocks moving into the open. First up, Kohl's. Those shares are higher 2% in the pre-market after the company boosted its full-year profit outlook as it makes progress in cutting expenses and reducing inventory levels. However, the retailer did report a revenue miss for the second quarter, citing a, quote, challenging consumer environment. Meanwhile, Foot Locker shares are falling in the pre-market, down more than 8% after the retailer reported earnings that failed to satisfy investors. Foot Locker beat on revenue and snapped 5 consecutive quarters of negative comparable sales, showing a 2.6% gain in the second quarter. But that update was not enough to sustain the stock's 46% rally since its previous earnings report in May. And Britain's Dan Evans won the longest match at the U.S. Open since tiebreakers were introduced in 1970. Evans' upset win over 23rd seed Karen Khachanov, taking 5 hours and 35 minutes. Evans also fighting back from 4-love down in the 5th set to win the marathon match. Elsewhere, 3rd seed Carlos Alcaraz comfortably moved into the second round, as did women's top seed Iga Swiatek. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Thanks for this morning. Up next on the program, we'll set you up for the day ahead, including earnings from NVIDIA after the closing bell. We'll catch up with Ed Ladlow, who has a sit-down conversation with the man at the top of that company a little bit later this afternoon. Ed, just around the corner.
The Vivian Tom clientele.
Yeah, power women, like the dragon, dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, they are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
People ask me all the time, what is the key to being a really good investor? And I tell them, it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
.38 minutes away from the opening bell. Equity futures softer here by 0.1%. The bond market quiet, unchanged on a 10-year, 382.16. The trading diary, the calendar for the next 24 hours, nothing quiet about it. NVIDIA just around the corner. We'll get Fed speak from Raphael Bostic at 6 p.m. Eastern tomorrow. Another round of jobless claims and the second reading of US GDP on Friday, core PCE and new Mitch sentiment. Well, let's turn to today's main event. NVIDIA reporting after the closing bell. Bloomberg's Ed Ludlow sitting down with the CEO, Jensen Huang, in an exclusive conversation at 6:30 Eastern Time. I'm pleased that Ed's dropped by early this morning on the West Coast to catch up with us. Ed, fantastic work, buddy, and I'm looking forward to the conversation a little bit later. What's the lead question for you and the team?
Yeah, I think there really is only one question right now, John, which is when does what's happening move beyond hyperscalers? Like the story around NVIDIA is very basic, that they make a high-performance GPU or an AI accelerator, and all the investment and the capital expenditure that we've discussed is concentrated in just 5 names, which is the biggest cloud providers plus Meta. And for all the big picture forecasts and the debate about how enduring this investment cycle is, there comes a point where you just have to ask, well, when is there going to be more than that? The small and medium-sized enterprises, governments, because it's hard to see the long-term demand, although right now in the short term, there's no sign that the demand is fading, is there?
No, which is a reason why it seems like people are prepared for potentially a $300 billion surge in the share prices after market.
Correct.
I'm just wondering if we have any sense from him about what the next phase is. We were just speaking with an analyst, Angela Zeno, who is talking about the potential to move out into systems, which is what we're going to hear maybe about the Blackwell program. How much is this sort of them getting bigger and then eating their own customers?
The idiosyncratic story is exactly as you described, that NVIDIA wants to do more, occupy a broader space, which includes services and software. You know, when you think about the basics, again, we're talking about GPUs that go into a rack, that go into a server, that go into a data center. They just want to provide more of those complete systems. But actually, you know, Jensen Huang, people call him the godfather of AI for obvious reasons. He has a firm grasp on the end use cases of what AI development is unlocking, be that robotics.
Commentary from Fitch Ratings will expect a weak property market in China to remain a drag on performance for issuers in several sectors over the country for the second half of this year.
Given to NVIDIA, does he have a firm understanding of how many dollars are coming out for the customers in terms of top line growth or whatever it is for them? And I think that would be quite interesting to discuss as well.
Hey, Ed, looking forward to the conversation. Join us tomorrow morning following that one.
I will.
It's going to be fantastic. Thank you, sir. Ed Ludlow sitting down with Jensen Huang, the CEO of NVIDIA, 6:30 Eastern Time later on this afternoon. Following those numbers, big earnings release from Wall Street coming up after the close, later a little bit later.
The liability of getting too big. I'm just wondering at what point we're talking about they want a bigger share of the pie at a time where they already are the biggest company in the U.S. and possibly the world soon to be. So to me, it just sort of, some of the regulatory pressures might get interesting too.
It's interesting the line of questioning that Ed's sort of got prepared. It's the conversation we've had all morning. It's less of a conversation about them and more of a conversation about their biggest customers right now.
How long can they keep investing to the degree that they have been without getting some pushback unless they get some real return on investment?
Look out for Ed leading our coverage of all of this on the West Coast throughout today. Coming up tomorrow, Dan Ives of Wedbush. When they say people, call him the godfather of AI.
One person.
Dan Ives of Wedbush, Brian Levitt of Invesco, Anastasia Amoroso of iCapital, Earl Davis of BMO. Good luck for the rest of the trading day from New York City. This was Bloomberg Surveillance.
Top names at Jackson Hole are on Bloomberg.
So we know that unemployment rates have gone from about 3.4% to 4.3%. That's a big change. Now, it's from super hot to solid, right? So I don't want to make it seem like labor markets are weak. But it really starts to tell me that things are much more imbalanced than they have been for quite some time.
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah. But with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
If I were at the Fed, I would be thinking about the tools that we have in the toolkit differently. I would be utilizing quantitative tightening, and to a great extent, they have. Post-COVID, $12 trillion came into the global economy from central banks everywhere. And right now, we've seen about $5 trillion has been hoovered back out. That still leaves $7 trillion sloshing around in the system globally.
The effective Fed fund rate is unchanged at 5.33% for August 27th.
Adjusting that for larger GDP growth globally, probably we need to see about $3 trillion more come out before we get to an equilibrium of where we were before COVID. I don't think the Fed really appreciates the quantitative tightening tool as much as I do, and I think as much as the markets do.
Earnings. I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Futures on hold ahead of the most hype earnings report of the season. 30 minutes until the start of the cash trade. I'm Katie Greifeld.
And I'm Shonali Bassick. Matt Miller is off today, and Bloomberg Open Interest starts right now.
Coming up, the countdown to NVIDIA is underway. The world's most valuable chipmaker reports after the bell this afternoon, with investors betting on another blowout quarter. And later tonight, NVIDIA CEO Jensen Huang joins Ed Ludlow for a special edition of Bloomberg Technology. Don't miss that exclusive sit-down at 6:30 p.m. Eastern. Plus, also keeping an eye on retail following a mixed bag of results from Kohl's, Foot Locker, and Abercrombie. Next hour, we'll get the view from the C-suite with Abercrombie CEO Fran Horowitz. Let's take a look at where markets are trading. Of course, about 30 minutes until the bells ring. You can see pretty flat overall. The S&P 500 currently down. You could call that 0.1%. I'll go ahead and call that unchanged. A little bit more on big tech, an emphasis on little there. Of course, everything could change tonight when NVIDIA does report those numbers. And you take a look at the bond market right now, absolute crickets, Shonali. 10-year Treasury yields camped out at about 382.
Well, some places where there are fewer crickets. Let's look at those individual stocks here. Pre-market movers on our radar. NVIDIA just moving modestly ahead of those earnings this afternoon. The chipmaker is a barometer for AI spending across much of the technology industry, and shares are up 160% this year. Abercrombie & Fitch posted net sales that beat estimates in the second quarter and raised its full-year outlook, yet you do have it down still more than 9%. We will dig into what's going on there. Foot Locker snapped 5 consecutive quarters of negative comparable sales, but progress in the company's turnaround plans wasn't enough to win over Wall Street. And you have Foot Locker shares pre-market down more than 8.8%, Katie.
And yeah, so you do have some movement under the hood, but I want to draw your attention to yesterday when S&P 500 turnover was just $61 billion. That is the second lowest total of this year, and really speaks to the fact that we're in summer. But finally, it's the most important day of our lives. We do have NVIDIA after the bell, and it feels like the entire market is waiting with bated breath. So let's get now to Seema Shah. She is Chief Global Strategist over at Principal Asset Management. And you think about where we are. We're between Jackson Hole, ahead, of course, of that August jobs report. We finally get NVIDIA earnings. How high are the stakes right now when it comes to sentiment?
Thanks for having me on. It is so high. When we've been doing, just like everyone else, we've been looking at the macro data, seeing if there's a slowdown underway, recession risk, etc. The thing that we keep coming back to is that although we feel confident about the general state of the economy, the other big risk out there is what happens to the big tech sector, and of course, NVIDIA. So let's say that today is a disappointing number, really takes away a lot of the very positive market sentiment, which has been driving technology and therefore the market, then I think the market is going to be really challenged in terms of how much further they can go. I think sentiment could be fairly fundamentally damaged if, of course, it's repeated another quarter. So definitely all eyes on this evening's results.
Well, with that in mind, I mean, what are you expecting? We got a little bit of a preview from the Magnificent Seven, mid-July, early July, and there were some wobbles there. There were investors questioning what's the return on investment here on the billions of dollars that are being spent on AI CapEx. What's your base case here?
So our base case is that there's certainly room for disappointment. I mean, expectations are pretty lofty. We're trying to look at the big tech story in terms of a long-term strategic play. So, for example, even though valuations are pretty lofty, and as I said, there is definitely room for disappointment, we haven't really reduced our exposure. We're looking at, say, over a 6-month, 1 year, 2, 3-year horizon. Are these companies going to continue to deliver? Is AI still going to be that forefront of productivity and growth? And for us, the answer is a resounding yes, but we need to be willing to sit through some potential volatility and painful moments, I think.
When you think about the investor reaction we've seen so far in big tech and the really mixed feelings there have been around CapEx spending, how do you think about that in terms of what you want to see from NVIDIA? Can you afford them spending a little more to get ahead even further, even if that return doesn't come tomorrow?
I think the market is going to start getting really impatient. So I think that is one of the key concerns, is that impatience is starting to grow. And you almost need to see some kind of some clear delivery starting now. You know, I think people's expectations have become a little bit more realistic as the quarters have gone on, but we're still not there yet. And as I said, that impatience is growing.
You know, you think about the broadening story in the market as well. NVIDIA, you can see why it's such an important report today, how sentiment across the rest of the AI sector certainly hinges on today's report, as well as sentiment across the market. But at the same time, say NVIDIA doesn't hit every mark every investor wants it to hit. You kind of made this joke during the commercial break that it's being parsed as closely here as an FOMC report. And if it doesn't hit every mark, does it give more or less credence to the broadening story?
So I think, Shanali, this is the key question that we're all fighting with. You know, we have expected to see a broadening out of the rally, more companies delivering stronger growth, earnings results. You're seeing that come through. So that is certainly keeping sentiment going, but we're also going into an economy which is slowing down, hopefully going to be avoiding recession. So I think, you know, the challenges are growing. So if we then start to see some of these big tech companies really starting to disappoint, I don't know how strong investor sentiment can, or how strong it can remain in the face of that slowdown plus a disappointment. Now, I do think that things will bounce back. And I think that the recession will be avoided, so that broadening the rally can be sustained. But we're not going to see anything like the gains that we saw in the first half of this year, certainly in 2023.
Well, let's talk about that a little bit more in the concept of a bull trap, of course, when the market attempts to break out to new highs, but ultimately tests that and then reverses lower. You have Michael O'Rourke from Jones Trading warning of that possibility on the terminal today. How high do you think the risk is? Like you said, there's risk of disappointment here when it comes to NVIDIA. Do you see a bull trap as likely when it comes to the broader market?
So I think the next couple of months are going to be really volatile, a lot of swings either way. I mean, it's just focusing on the macro data even for the moment. You know, we know that the market is going to pass through every single data point that comes from here. Is it recession? Is it not recession? So there's obviously volatility within there. There's also a lot of expectations built into what to expect from the Fed come September. So if they don't deliver a 50 basis point cut, then I think there's potential for disappointment. For us, what we're trying to do is we're saying, okay, look, the next 6 months are going to be difficult, but we need to try and take a longer term view of not just of the economy, of course, what is the Fed going to be doing, but also what is the big tech companies going to be doing? What is that growth story? Where is the productivity coming from? From that angle, we feel quite reassured, but I think you have to be ready that there's going to be some fairly uncomfortable moments coming up.
If you think about that potential for volatility, how much cash, Seema, do you keep on the sidelines to be able to prepare to pounce on any potential downturns?
So you want to be in some liquidity. I don't think cash is the right place to be. There's a lot of opportunities. We all talk a lot about equities, but within fixed income space, you're already seeing a lot of flows into some of the longer duration stuff, the high quality credit, because those are the areas that should provide some kind of downside protection if the economy continues to slow down. So I don't think that you need to be in cash, but you definitely need to be liquid so that if you do get these moments of dislocation, just like we saw 2 weeks ago, that you have got the ability to pivot into areas which we think can continue to deliver some upside over the coming quarters.
Well, Seema, if it's not cash, where do you find that safety? Where do you find that liquidity, that place to put your dry powder in this market?
It's tough, right? But within fixed income, some of the more liquid parts of IG, even having some kind of exposure to treasuries and on the longer duration side, something that will give you that movement. But of course, when you're looking across the asset allocation space, there's so many opportunities out there. You've got your equities, and not just in the US, but looking outside the US, some areas within Asia also looking pretty interesting. Then within fixed income, as I said, IG credit, the high quality side is looking good. Preferred securities, even where you've got high quality and a pretty good return. And then even with alternatives, with rates coming down, you're likely to see REITs and areas like that continue to, or at least start to perform better. So I think it's important that investors look at the whole scope of things and say, cash isn't the only place. In fact, with the Fed starting to cut rates, there's probably some reinvestment risk. So they need to start deploying some of that firepower right now.
Seema, really quickly here also, what is your favorite trade in this market? To the extent that you are putting fresh money to work in a new trade, what is that trade?
So we think that actually we're not really shifting it that much within our portfolios, even the last couple of weeks. I think it's about having that long-term strategy. But within your best ideas, I think somewhere areas such as preferred securities, which has got that exposure to financials, to utilities, that is getting that very, very risky, the less risky part of the market, and you're getting a high return. I think that to us is looking the most attractive right now.
Seema, thank you so much for your time. That is Principal Asset Management Chief Global Strategist Seema Shah on a very highly anticipated day of earnings for NVIDIA. I want to also now bring you some breaking news. We have now that Supermicro is going to be delaying their Form 10K filing for the full year of 2024. Remember, Supermicro is a firm now that has absolutely soared this year, but then just yesterday was targeted in a short selling report. The shares now down pre-market another 9.6% after a plunge yesterday of about 2%, 2.6%, Katie.
Yeah, we'll continue to follow that one. We do have some other breaking news as well, and that is that the CEO of Telegram has had his detention and he will be brought to court. This is according to a French official who also says that he will face a judge on possible charges. Remember, he was detained in France earlier this week, in the past week or so, stepping off of a private jet. And now we know that that detention period has ended and he will be brought to court. Shanali will continue to follow that one as well. Meanwhile, let's get a look at the stocks moving ahead of the opening bell. We're going to do that with Abigail Doolittle.
Despite the fact that we have futures down slightly, we have lots of big winners beneath the surface, including Ambarella. Shares are absolutely soaring. The company probably best known as a former Apple supplier, at least right now not a significant Apple supplier. Well, they put up a good quarter. Their guide is a big boost above what had been expected, and some analysts saying that AI and automotive could be very significant going forward for Ambarella. Turning to an internet apps software company, we have the shares of Box here up 5.2%. They put up a good beat, billing strong investors, analysts very supportive of this quarter. And then in the retail space, we have two companies doing really quite well here. Kohl's off of its highs, but up 0.8%. They lifted the full year view. Inventories have declined. Their profits beat. On the year, though, into today, down 32%, and significantly a 36% bearish short interest. So the bears not wanting to let this one go higher. And then Chewy up 1.8%, not because of the picture of a cartoon puppy, but they did put up an okay quarter, solid quarter. But there's evidence, importantly, according to some analysts, of stabilization within certain categories, plus profits equals Chewy up 1.7%.
Yeah, a busy day on the earnings front, of course, in this late July trading session. Abigail Doolittle, thank you. Now coming up, a number of retailers boosting their outlooks, but the stocks not rising in response. We'll take a closer look at the retail landscape next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
And now to high interest, a look at what's making headlines around the world. HSBC's incoming CEO may cut layers of middle management, laying off a number of country heads across the global network. And it's the latest sign that Europe's largest bank is looking to rein in costs as central banks begin to cut interest rates, threatening margins of big global lenders like HSBC. The cuts are likely to be announced next month after the CEO is officially installed. And the U.S. special counsel investigating Donald Trump is pressing ahead with prosecuting the former president on charges of trying to overturn the 2020 election. This comes after the U.S. Supreme Court found Trump partially immune to prosecution related to his official acts as president. The move from special counsel Jack Smith's office will kick off a fresh round of legal wrangling between prosecutors and Trump's lawyers over whether the indictment can survive under the Supreme Court's more liberal definition of presidential immunity from criminal charges. And NFL owners voted to allow private equity firms to buy stakes in their franchises. It's a move expected to attract billions in fresh capital. Private equity can now own as much as 10% of a firm. It's a move that Mark Patrikoff, the founder of athlete investment platform Patrikoff Co., says was inevitable. We spoke with him just yesterday, just before the decision.
It's certainly going to change the game. I mean, what individual wants to put up a $700 million check for a business where you will have no control, no path to ownership, et cetera? So institutional ownership was inevitable.
All right, and we do have some breaking news. This out of quant firm 2 Sigma. Their feuding founders will step down, hand reins to new CEOs. We're talking, of course, about John Overdeck and David Siegel stepping down from day-to-day management. Of course, after clashing 4 years here, they will become co-chairman, still advise the $60 billion quant firm, but handing the reins over to Carter Lyons. He is a 13-year veteran of 2 Sigma, and former Lazard general counsel Scott Hoffman. They will both take over as co-CEOs on September 30th. Really interesting development, Shonali. Of course, we've been watching this feud unfold in public increasingly.
We certainly have, and it's interesting. They chose an internal veteran here, Carter Lyons, and Scott Hoffman worked at Lazard for a long time before coming over. Interesting to take a lawyer and make them a co-CEO. You have to remember that this was a feud that was even made public to investors in regulatory filings, and a lot of that fight between Overdeck and Siegel was about how they managed, how they and others in the firm were compensated, and what their role would be. So it certainly turns a page of what's been a historic quantitative investment firm on Wall Street.
Yeah, you know it's real when you have to put it in a regulatory filing. Pretty interesting development here. Of course, we're going to unpack this later in the hour. Again, that is that the 2 Sigma feuding founders, they will step down, new CEOs taking over on September 30th. But let's get back to the earnings landscape, because it's been a mixed bag this morning for retailers. investors. Kohl's shares are climbing on a boosted profit outlook, but just so. Meanwhile, you take a look at Abercrombie, beating on sales, not enough to impress investors, though, and Nordstrom reporting last night, offering an optimistic outlook, but still only about an 0.1% gain in the pre-market. Let's unpack this all with Mary Ross Gilbert. She is senior retail analyst for Bloomberg Intelligence, joining us now. And I want to start with Abercrombie because it's down double digits in the pre-market despite beating on sales. Is this just Abercrombie being a victim of its own success when you think about how high expectations were for this stock?
Yeah, good morning, Katie. I think with Abercrombie, look, they're hitting it out of the ballpark, and we sort of expected that, and we think it's going to continue. So this company is able to continue to extend categories, and it's also a tale of different customers here. With Abercrombie, the two brands, which are Abercrombie and Fitch, household income is in that 100 to 150,000 range. So they're in a better income demographic. And the management here is so focused on delivering what this consumer wants. So as we know, of course, the wedding shop continues to be successful, and that's continuing in the fall because weddings are now year-round. Also, what the company did is they have their NFL line, and they keep extending it every year. So this is the third year. It's been further extended to include sweaters and other items. And so that's also going to further boost the business. On Hollister, they have the collegiate line now across 32 colleges. So all of you are with average prices increasing, and even the promotional activity is pretty minimal. Showing this team is executing, they're delivering, you know, with double-digit increases. I mean, that really shows there's a lot more to go here. And they said that there's a lot more, 80% of the business. And then even overseas, they're really under-indexed overseas here.
Mary, something I'm interested in is even though you're seeing such promise in the performance, you are still seeing the stock down pre-market more than 10%. Same goes for Foot Locker, where you see shares really dipping on the morning here, even though they're showing signs of progress. Is there something to be gleaned that they have to meet to appease investors that are very worried about this sector?
I think when you see this kind of growth, it's sort of like with NVIDIA. When is this going to kind of be tamed, and is it going to be lessened? And so I think it could be short-lived, frankly. And I think, you know, once we start to get through the holidays and we see how that turns, different movement.
Mary Ross Gilbert of Bloomberg Intelligence, we thank you so very much for all week of earnings and consumer earnings, even when you have NVIDIA this week. We're going to speak to next hour the CEO of Abercrombie & Fitch about those results, Katie.
Yeah, and coming up, shoppers are putting takes a not-so-sweet bite out of discretionary income. We'll unpack in our Social Climber segment up next. This is Bloomberg.
top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. You know, basic technology adoption.
Nobody covers business like Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets. All right, it's time now for Social Climbers, the companies making waves this morning. And first up, J.M. Smucker in an earnings jam. The maker of Jif peanut butter and Twinkies lowering its sales and earnings outlook for the year, with the company saying that sticky inflation was to blame for slowing sales in its sweets and baked goods category. Next up, at least one company is benefiting from the CrowdStrike outage. The cybersecurity company SentinelOne reporting stronger customer growth and second quarter profitability as CrowdStrike customers look to diversify their cyber risk. And finally, Foot Locker still feeling a step behind. The sneaker seller reporting sales that beat expectations thanks to a rekindled relationship with Nike, but the chain merely reiterated its sales guidance for the year, leaving investors unimpressed. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal, Shonali.
I'm going to take a check on futures as we wait for this market to open because it's been a choppy trade. If you think about it, we are down about 0.1% on the S&P 500. On light volumes, NASDAQ 100 down 0.2%. Ahead of that market open, Russell 2000 feeling a greater dip. We did see these bad feelings yesterday too. It turned around. NVIDIA doesn't report until aftermarket, Katie.
Yeah, I feel like nothing matters basically until aftermarket today when we do get that NVIDIA report. There was a really interesting quote from Stuart Kaiser over at Citi in a Bloomberg News article this morning saying that basically NVIDIA stock, it's more than 25% above the lows earlier in the month, but the bar is pretty high, risk reward probably not great going into the print. However, even strong NVIDIA numbers and rate cut pricing won't be enough if payrolls are weak. So there's a really interesting line to tread here between the macro and between NVIDIA.
And the timing, right? Because even if you get NVIDIA today, say it's a blowout quarter and you get weak payrolls next Friday.
Yeah.
You saw how the market reacted the last time we got payrolls. Let's see if that kind of negative sentiment is still under the surface when we know a rate cut is coming. People might get a little more excited for that potential for 50 this time around.
Yeah, big time. And of course, added scrutiny on that payrolls print, given that we got those revision numbers and boy, were they big.
Boy, they were big. Now, coming up, we're going to talk to somebody who knows a little about this. That is Citizens JMP head Mark Lehman joining the show with expectations for NVIDIA earnings, the IPO market, deals markets, and how rates will affect it all. This is Bloomberg.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste.
I think this is also how I grew up, making your own clothes and making something that's well special and well unique. It's like timeless. And now you see that everybody is looking the same, like wear sweatshirts and wear t-shirts. And for me, it's just like when they wear something that's special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough to ensure that it is
So 1 minute now until we get the markets on open imbalance and the US cash equity open.
Realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
Looking now to the markets on open imbalance, S&P 500, 60 million to the sell side, NASDAQ 100, 5 million to the sell side, Dow 30, 15 million to the sell side, Mag 7 stocks are 10 million to the buy side.
All week, and you really have been able to see that in volume. Of course, it's been light as a feather Tuesday and Monday and maybe Wednesday as well, given that NVIDIA reports after the bell. But you can see that we've been on a bit of a downdraft when it comes to markets. Of course, a lot of sentiment riding on NVIDIA, which reports after 4 p.m. today. You can see the bells are ringing right now. You can have Orion on the New York Stock Exchange. There's two of them. And then you take a look over at the NASDAQ, you have Guardant Health. But let's get a check on the major averages. Of course, 19 seconds into the trading day. Pretty much flat. As I said, the S&P 500, the NASDAQ 100 really in wait-and-see mode ahead of that big mega cap reporting after the bell. The Russell 2000, though, there's a clear direction there, and it's lower. The Russell 2000, those small caps, currently down about 0.4%. Meanwhile, there is more action under the hood right now. Let's take a look at Supermicro, which says that it may not file its annual 10K form for the fiscal year in time. Yesterday, remember that Hindenburg Research said that it's shorting the company on, quote, glaring accounting red flags. A spokesperson for Supermicro said that the company does not comment on rumors and speculation, but Shonali, obviously the market is commenting, with shares currently down about 11% pre-market.
Another stock here that the market is commenting on, even with positive results, Abercrombie & Fitch. It boosted its full-year forecast and beat on earnings per share, but the stock is lower as investors raise the bar for the retailer's outlook. Abercrombie's CEO joins at 10:30 a.m. Eastern to discuss those results, and at the open we have Abercrombie stock down almost 12%. And we can't ignore NVIDIA, of course, the big moment of the week. The $3 trillion chip maker will report after the bell with the potential to move the overall indices. The options market is applying swings of nearly 10% in either direction. You have NVIDIA roughly flat, down about 0.5%, or 0.5% really, before those results. Let's get a closer look here on what to expect with Bloomberg's Abigail Doolittle.
Yeah, a little bit of a calm before the potential storm, Shonali. Take a look at NVIDIA on the year. This is the good news and the bad news. Up 158% at the highs on the year, at one point up more than 180%. So the question is has the stock gone too far, too fast? Is it priced to perfection, especially when you compare it to the stocks, up just 23% relative to that up 158% over the last roughly 8 months? Now, something that I think investors need to pay attention to is the growth. Now, the growth is tremendous. Of course, That's why this stock has gone so high, so far, so fast, having to do with the AI craze. But take a look at the April quarter. The sales growth on a year-over-year basis, 262%, really incredible. Now, this quarter, it's 114%, also incredible. But look at that sequential decline. Are investors thinking about this? Even if they beat in a big way, there's still going to be a big sequential decline in growth. This quarter for profits, up 156% for any other company, really incredible, and still incredible for this company. But last quarter, the year-over-year growth, almost 600%. So again, even if they beat in a big way, there's still going to be a sequential decline in growth. I'm not sure investors are paying attention to this. It reminds me of Apple, what happens to their numbers in some ways, and all of a sudden, folks are very surprised. If we take a look at the chart of NVIDIA, something interesting is happening from a real near-term perspective. This chart is a little ugly, so I don't like it from an aesthetic standpoint, but the messaging is important. Back in June, when the stock started to reverse a little bit, you can see the near-term uptrend. Again, a trend line is not to show the trend. You can see that it's to show the reversal. We came out of highly overbought territory over the last couple of days. The near-term out of that July dip uptrend is reversing, and you can see the RSI, it's actually flatlined, Katie. Investors are really not sure what to make of this quarter, these numbers, the guide. It's really going to be crucial and very interesting to see what they in fact do put up.
Well, I like that chart. I think it tells a good message, but I respect that you respect aesthetics. Abigail Doolittle, thank you so much. Let's keep this conversation going with Mark Lehman. He is head of Citizens JMP Securities, and you think about where NVIDIA is trading right now. We did have that wobble midway through summer, that big drawdown when it came to shares. Now we're up 25% from those lows. What does positioning look like in NVIDIA right now, and how do you expect those dynamics to play out after the bell today?
I think it's amazing how many eyes are on this, obviously, late summer going into Labor Day. I do think there's been a little bit of a shift from the institutional perspective. Some of the people who got overweighted the stock because of the ascent of the stock, my guess is it's probably curtailed some of their holdings going into the print today. And I think they've moved some things around. This has been a quarter where the Magnificent Seven has diverged, where you've seen some unbelievable performances by some stocks and some muted performances by some stocks. And I would expect NVIDIA to have a terrific quarter. And obviously sentiment will be interesting today and tomorrow, but more importantly, when we get back after Labor Day, how people position themselves for the third quarter will be also as interesting. Because again, we don't have a full house this week. There's a lot of people who are not in this week. So that's something to pay attention to as well.
Yeah, we are painfully aware of that fact that almost everyone's on vacation right now. Of course, could make for some very interesting trading when we do get those numbers. But you think about really the interplay between the macro and the micro, specifically when it comes to NVIDIA. Shonali and I were talking about this just a few minutes ago, because NVIDIA is really kind of being placed in as much importance as a Fed meeting right now. What do you think the real driver of this market is?
I thought my anniversary, which is today, was the most important thing. I guess I'm wrong.
Happy anniversary.
Well, thank you for that. I think the macro backdrop is obviously more important. Maybe not tomorrow, maybe not the next couple days. I think the macro is as important. We have a Fed cut coming next month. We have an economy that's clearly doing fine but slowing. We have an election that's going to have a lot of rhetoric over the next 75 days. I mean, there's a lot being thrown at the market, so I don't want to pay too much attention at this print. It is important. We're going to get some other big tech prints that are also as important, but the macro backdrop is equally as important. And I think we've learned over the last few weeks and months that it's slowing down, but the consumer is still doing just fine. And I think at Citizens, we're seeing that as well. We're going to be busy after Labor Day because I think there's plenty of things that are going on in the capital markets. And I think that's more important, frankly, than just one print. But let's not forget, NVIDIA's got every eyeball on it today, and for good reason.
To that end as well, what do you think the narrative is going into this latter part of the year? If you think the consumer is still strong, if you see any signs of weakness, if you worry about growth, can that really sustain positive momentum and even the AI story at this juncture, knowing where valuations have gone over the past year and knowing that even AI is a sector that's sensitive to economic downturns?
I think it's exactly the right point, which is when you have a slowing economy, albeit not slow, and you have a lot of themes that have played out to great expectations over the last couple of years. what do you want to pay for those companies, and what are you willing to pay for those stocks? And I think we're also learning that great performance, great management, great execution gets overvalued in this market. Like we all said, NVIDIA was kind of a meaningless company for a very long time. I've said it before, when I started, Intel was everything. Intel Inside, Wintel Monopoly. Now we don't even talk about Intel. So I think it's a lesson that individual stocks can outperform even when an economy is slowing. And maybe that backdrop will continue through the fall. And investors have to take a wider lens, because just buying 7 companies and 7 stocks is probably not a great idea.
Well, to that end, also, you kind of mentioned here this idea that things are going to be getting interesting in the capital markets coming out of Labor Day. And I'm sure a lot of investors and a lot of bankers out there, Mark, sure hope so. We've been talking a lot on this program over the last week on how that IPO window is pretty short here, particularly when you think about the uncertainty around the November U.S. election. How many IPOs are in your pipeline right now, and what does the demand really look like for them?
We're tracking on several IPOs in a variety of sectors, whether it's technology or insurance or financial services. People want to talk about technology IPOs generally, because that seems to be the loudest noise when it comes to investors, and particularly institutional as well as retail investors. I think that my pipeline, albeit full, will be muted when it comes to IPOs for the rest of the year. I had expected, with the performance of some of the names that we've been on here at Citizens, whether it's Reddit or Oddity or some other companies that have done extremely well in the public markets, there would be more demand from investors that would push the sellers. The institutions would be buying them. Some of the issuers have to put some companies in the public markets. That has not happened. I have not seen a period in my 30 years on Wall Street where there's more demand and the supply, frankly, is just muted. So I believe that's going to be a 2025 event. That being said, if there's some people who test the markets in the 3rd and 4th quarter, I think the reception, if the numbers are where they need to be, will be extraordinary. And we've seen that, like I said, at Reddit, which is less than 6 months as a public company, but has executed as the public company, and people are paying them for that.
So looking forward to a big 2025, at least bigger relative to recent history when it comes to the IPO landscape. But Mark, do you think that something has fundamentally shifted when it comes to how companies consider going public? I mean, there's a conversation out there, a line of thought that with all of this access to private credit, private equity, et cetera, the companies don't need to go public in the same way that they did in past decades to get access to that funding. And maybe for that reason, you're going to see just lower IPO volumes in general going forward. What do you make of that argument?
I think a couple things have weighed on the markets. One is we had a big window in 2020 and 21. Secondly, we had a lot of SPACs that went public via companies that were frankly younger, less seasoned, that went public via SPACs, that in 2 or 3 years' time probably would have been more capable of being successful public companies. Thirdly, the private capital that you described has become somewhat infinite. And lastly, I think there's a perception that you have to be a certain size to get public, and that institutions will not pay attention unless you have a certain metric. That's been proffered by a lot of the larger investment banks. I think that's not all true. I think there is a supply-demand imbalance where some of the portfolio managers would like to see those companies. They're willing to make earlier bets on those companies if they have the metrics that they want. So all 4 factors. And I always say it's hard to disprove a negative, and the negative is unless you have $500 million in revenue, unless you've kind of pre-sold the IPO, you can't go public. I don't believe that's true, but that has been playing out. So I think the IPO window will be shut for a little while. I've heard about the death of the IPO for 30 years, and that's just not going to happen. I think those companies are going to go public. They're going to be successful. We need liquidity for the insiders and others who have invested in these companies for a very long time. And that will happen starting in 2025 and beyond.
Mark, we thank you so much. That is Mark Lehman of Citizens JMP. And we want to bring you some breaking news as well, because you have Berkshire Hathaway's stock not only reaching a record high, but also topping $1 trillion in value for the first time. This stock has been on a 5-day winning streak, and of course, it's very interesting to see Berkshire, both Class A and Class B, of course, rising to the tune of 0.7% today, but again, on that 5-day winning streak and gaining today as the broader market faces some weakness. Also, Berkshire, in other news, selling some more of its Bank of America stock, has been all summer, really, but investors flocking to some safety in Berkshire Hathaway. Stick with us. This is Bloomberg.
The names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interest, and whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Trade, weekdays only on Bloomberg TV. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. From the world of politics to the world of business, insight and analysis live 2 times a day every trading day. Balance of power at 1 Bloomberg. Top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the data as we move forward, but we've got to really focus on that with our economists and our coming from, and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Contact.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, HSBC says that Moderna is no longer a sell, upgrading the pharma giant to a hold, saying that the potential as a future revenue stream. Next up, Citi says Gannett is a sell. The media company announced it had agreed to a large refinancing earlier this week, and while Citi thinks that it was a, quote, smart transaction, the analyst says that Wall Street is overvaluing the deal. And finally, Raymond James says that downgrading the satellite company to a market perform. The downgrade comes as the company announced that it is not in compliance with the NYSE's listing standards and that it will have to restate its historical financials after an accounting review, Sonali.
And Supermicro saying it will delay the filing of its annual report for the fiscal year ending on June 30th. Remember yesterday, the short seller Hindenburg Research announced a short in the company because of, quote, glaring accounting red flags. Here with more on this story is Woo Jin Ho, a hardware analyst at Bloomberg Intelligence, who just this morning wrote that governance risks. At the end of the day, how do you pair kind of these moves by the company with what Hindenburg is suggesting? We do have Supermicro saying that they don't comment on rumors or speculation here. Company in your analysis.
I will tell you it's no longer a rumor or speculation if you're delaying your 10K filing. To be frank, Sonali, I will say that it seems that Hindenburg did flag some corporate governance risk. It turns out to be some truth to that. And the disappointing thing to me here is they delist Supermicro delisted from the NASDAQ for principally similar reasons. So one would have thought that they would have cleaned that up by now. And in the span of 5 years is quite disappointing.
And where do you think this story goes? Quite speculation anymore if they are delaying the filing or that they could. I mean, how do they recover enough? Are they going to have to reorganize the C-suite? What do you think happens here?
There are some related party issues that's been put out on the risk profile within the 10K filings and the 10Q filings. They do need to clean some of that up in terms of the related party issues. But if we're going to see a restatement or changes, it just might be operational in nature. If that's going to be the case, they probably have to add in some financial controls. And that's just more money on the G&A line.
Ho of Bloomberg Intelligence, really appreciate you stopping by, of course, to break down the latest on Supermicro Computer. You can share is absolutely in free fall right now, down about 19%. But let's check earnings specifically when it comes to your retailers. An interesting dynamic, of course, where you have some expectations, but it's just not enough for shareholders. That is absolutely clear when you take a look at Abercrombie, but up by more than 200% over the last year. You take a look at Foot Locker as well, down 15%. Thankfully, you take a look at Kohl's and Nordstrom managing to escape that crucible. Shares up between 4% and 5% for both of those names, Sonali.
And coming up, Katie, we're going to talk about one of the hottest stories of today. Down after many months of infighting, new CEOs named. More on that next.
So according to a statement from Libya, as they stress the dangers of shutting down the country's oil fields and calls for punishment for those responsible.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Earnings season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs.
Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Time now for the Wall Street Beat. The billionaire founders of Two Sigma, John Overdeck and David Siegel, they're stepping down now after feuding for years. We're going to get the scoop with Bloomberg hedge fund reporter Hema Parmar, who is all over this story this morning and all over it through the course of the feud. How much certainty does this bring investors now that the page is turned at really what's been a historic quantitative investment fund on Wall Street?
Yes, this is a giant fund, $60 billion firm, quant pioneer, and this is the biggest management change in its 23-year history. So it does bring a pretty significant move, especially given the history of these two founders that have been feuding for many years. So new two co-CEOs, providing perhaps more stability, more assurance to investors that the people at the very top can collaborate and work together.
It was interesting to see this, of course, on the week where the Oasis news came out, that they're reuniting, but now you have these two founders splitting apart. Before we move on to who the actual new CEOs are, what were they disagreeing over so passionately that it had to be disclosed in regulatory filings?
Precisely. A very strange move for any hedge fund, let alone Two Sigma, which is known for being quite secretive, to disclose in a regulatory filing that the disagreements between their two co-founders was a material risk. So they were disagreeing over things like the organizational structure, succession planning, the roles of senior executives at the firm. It got to such a point that employees struggled to implement initiatives. It impacted or could impact the ability to retain talent.
You know, one thing that's interesting was the choice of the new CEOs. We were talking about that transition. One is somebody who's been there for more than a decade, Carter Lyons. I remember interviewing him a couple years ago at Milken. He was someone they put in front of an audience, certainly. Scott Hoffman, the general counsel of Lazard for decades, a lawyer being named a co-CEO. What does this say about their direction moving forward?
Yes, it's interesting. One person internal as a veteran, one person external to the firm, also a veteran, 30 years at Lazard. So, you know, it suggests perhaps they're looking for a little bit of new blood with a new voice externally. They want to keep some internal tenure and talents, and that they have two people sharing the role similar to the two CEOs that were previously there.
And it's interesting, you take a look at Two Sigma's absolute return enhanced fund gaining 10.6% in the first half of the year. The flagship fund returned 6.1%. So not too bad, maybe not exactly beating the S&P 500, but how much of a distraction had this feud become? How much was it actually impacting the day-to-day over at Two Sigma?
So that's what's really interesting, is that the performance is not bad. So investors may not be thrilled with the fact that the two CEOs impacted them such to the point where they would ask for their cash back. And that may be because a firm like this versus a single strategy fundamental equities shop, this type of firm with a quant pioneer on its own, it's very quantitative. It doesn't rely so much necessarily on like.
That's pretty funny. So just let the computers do the work while the founders fight. Hema, great reporting. Fund reporter Hema Parmar. Meanwhile, let's get to the trading diary. What you need to be watching this week and surprise after the bell. We'll also hear from Atlanta Fed earnings day. Crombie CEO Fran Horowitz. All that and more coming up. This is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo Pet Products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Up-to-the-minute political news, whenever and wherever it happens. I'm Joe Matthew at the Democratic National Convention in Chicago, and this is Bloomberg.
Into the U.S. trading day. Welcome to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm Shonali Bassick. Matt Miller is off today. And coming up, the countdown to NVIDIA underway. The world's most valuable chip maker reports earnings after the bell, with investors betting on another blowout quarter. And later tonight, NVIDIA CEO Jensen Huang joins Ed Ludlow for a special edition of Bloomberg Technology. Don't miss that exclusive at 6:30 p.m. Eastern. Plus, a mixed bag for retailers. Abercrombie's sales beat, but it wasn't enough to impress investors. We're going to speak with CEO Fran Horowitz later this hour on how she may raise the bar. Katie.
Meanwhile, we take a look at markets. Of course, 30 minutes into the cash trade, you can see not too pretty. The S&P 500 down 0.2%. Big tech extending losses ahead of the big dance after the bell today. The NASDAQ 100 down about 0.6%. The bond market pretty quiet right now. Yields up just 1 basis point on the 10-year. Meanwhile, NVIDIA earnings obviously center stage today. Here's what Wedbush's Dan Ives had to say. He said basically Jerome Powell did his part last week, but now the market needs a big piece of the puzzle today for tech stocks to go higher into year end. We believe this is the most important earnings report for the stock market this year and potentially in years for the street, as NVIDIA will be the earnings report heard around the world. So Dan Ives with the pomp and circumstance as usual. Joining us now at the desk, I am thrilled to say we have Sarah Hunt. She is partner and chief market strategist over at Alpine Saxon Woods. Great to see you in person.
Good morning. Good to see you too.
So Dan Ives set the stage for us. It's interesting to me that for all the talk of the rotation, the broadening out in earnings, that was really the buzzy topic about a month ago, we're still so singularly focused on this single stock.
Well, we're so singularly focused on the idea that we have a big new technology wave that's going to lift productivity and all sorts of things for a longer period of time, right? Because this is not just a story about NVIDIA, but right now it is a story about NVIDIA because it's the CapEx that's coming that is supposed to be the wave that is going to end up being, again, productivity enhancing for not just the technology space, but for everybody else. So it's really key to make sure that that spending still continues. And that's always, I mean, NVIDIA's been the most important earnings every quarter for how many quarters now?
And what are you expecting? Because we think about what we heard from the big tech giants about a month ago, mid-July, Microsoft in particular, really spending just billions of dollars, still funneling all that money into that AI spend. And NVIDIA obviously is one of the big beneficiaries of that. Is that what we should expect to see after the bell today?
I think we should expect to see that. You still see the spending coming out of not just Microsoft, but all the hyperscalers. And Meta as well. And you're also looking at, there was questions about, was Blackwell delayed, what's going on? You want to hear what the commentary is going forward, because it's going to be important what the numbers are, and they better be better than the numbers that are consensus, but it's also going to be important what he says about what's coming into the next 6 months and the next year, because what needs to keep happening is you need that spend to keep continuing and the reason to spend, because you've got a better chip and a faster chip, and then you need to start seeing some infilling where it's not just the hyperscalers that are buying, but you're starting to see other companies as well on that big CapEx push.
Sarah, is NVIDIA a trade or an investment? And the reason I ask this is because of how far valuations have run. Why would you buy NVIDIA at these valuations? Why wouldn't you just wait until you can get it at a better spot, perhaps?
So I think it is an investment, because I think, the fact that earnings revisions have continued to go higher, the fact that the company is also continuing to innovate and shortening that innovation cycle, and the fact that we are now trying to find other use cases besides just the CapEx side, I think it is an investment. The question's really going to be when you have a lag in between the CapEx spending that's coming and what people are going to be doing with it. And I think that Walmart was it was very good to see that Walmart had things to say about how AI is driving business and is making margins better and is doing good things for their business. You need to hear more of that commentary. So there may be a point at which that CapEx spends. It's probably going to happen at some point. I don't know if that's the right time to wait for NVIDIA, because every time you wanted to wait, it hasn't been the right choice.
Well, it's fascinating. If you think it's an investment, then what are some of the longer-term structural challenges? I think about this AI boom and the need for data centers, for power and energy to really power those data centers, perhaps regulation coming in and creating roadblocks along the way, geopolitical conflict. It just seems like there's a lot ahead of this story that perhaps is not baked into the valuation today.
So I'll take the other side of that and say that what technology has been very good at is saying, okay, if I need X amount of power to run this chip, I can do that with half X, right? So there's an innovation cycle that's going on the other side. So when people extrapolate the current needs for electricity and for demand, you have to look at the fact that over time we've also been able to make things more efficient. So the question, there's going to be a lot of tensions in there, and yes, there may be opportunities within some of those tensions, but I think at the moment that story is still very strong.
And I want to talk about AI hardware versus AI software, because in addition to NVIDIA after the bell, of course, we have Salesforce reporting as well. A lot of pressure on that stock, that company, to step up and show some sort of return on investment. What are you thinking when it comes to that investing timeline? Are we at the point where investors should also be looking at potential users of AI, or is this still a hardware story?
Well, I think that's the gap that I was sort of talking about, which is the use case between, okay, we've got this incredible engine and it can do X number of things. How do we practically put that into use? And I think that one of the reasons that Salesforce had some issues with a couple of prior earnings reports is because they weren't necessarily able to demonstrate that that was helpful to their business. And I think that we need to see companies demonstrating that the AI is helpful to continue that the whole infrastructure can continue to move the ecosystem. So I think that it's very important to see those use cases and how they come out. And I think that for the companies that were sort of left in the middle of, there's this great technology, I'm not sure how to use it yet, we need to see something happen there.
Fascinating. After market today, there's NVIDIA, but there really are a host of other companies, CrowdStrike being among them. Katie, interesting. Sarah, at the end of the day, what else are you looking at here? We've had a lot of information this earnings season, and we're almost done. We're almost there. But then you are complicating life a little further when you see the jobs report at the end of next week. And so when you take all this data and information together, how are you recalibrating? Where are the new bets?
Well, if you take a look at how just the narrative has shifted over the last couple of months, the beginning of this month and the end of July was a total downdraft, and all of a sudden we were going into a recession, and the Fed had to emergency cut 50 basis points, not an intermeeting cut. And now all of a sudden we're back to, no, never mind, it's all okay. I think that you have a lot of things that we cannot control, and that makes investors uneasy, right? You've got an election coming up, you've got potentially things heating up in the Middle East, you've got all sorts of issues at Libya and oil. Nobody was expecting that to be part of the conversation. So I think that there are a lot of things that are
So we're seeing that the BLS had to put new safeguards in place to ensure equal data access following a technical glitch that delayed the release on August 21st.
So I think that it's difficult to see what's coming down. If you see anything nervous, I think that you can see
the Labour Department acknowledges the mishap in the release of the most recent jobs data.
And I think that that's, we're all hoping that that's the case.
If you were calling for an emergency rate cut about a month ago, is it fair to say you lost a little bit of credibility? That really felt like a pearl clutching moment. But you mentioned all of those big risks out there, geopolitical risks, for example. How do you hedge that? It feels like that of course, is always the question, and those hedges never quite pay off like you would expect them to.
Well, it gets back to Shonali's point of what else are you doing now, right? You have to make sure that while you're participating in things like big tech, where the valuations are high, you also have other bets on the table, and you're looking at other things. There's a big concern about oil prices right now, but there are a lot of potential exogenous shocks that could drive oil prices higher. We think that the energy patch has some good places to be. You've got some good dividend yields there. You look for places where you've got some really strong cash flow and places where you don't have any kind of balance sheet issues, because right now that's still where rates go is still an issue. Making sure that companies can cash flow is really important, and making sure that your valuations aren't so high that you're worried about every little tick in the market.
It's interesting, to your point on energy for the year has been lagging. Most of the sector is still up at more than 7% on the year, but only in the last month is when you really saw that catch-up trade. Same with consumer discretionary, real estate. So how deep do you dive at this juncture into those sectors that have been unloved, but more recently loved?
They're going to have different drivers, right? If you're worried about the economy, then consumer discretionary is probably a little bit more vulnerable. If you're worried about the economy, that's also true for energy, but the truth of the matter is we have a lot of investment that still needs to be done, and all of a sudden it seems like this year people have come around to, well, yes, we need alternatives to energy, but we also need hydrocarbons, that, you know, the older version of energy. And I think that there was this idea somehow that we could completely supplant it, and therefore you didn't have to do a lot of investment and it didn't matter. And I think that that's coming full circle, and there are some places there that even with lower commodity prices, you still have some very good room to run.
Sarah, please stick with us. That is Sarah Hunt of Alpine Woods. And we're going to get a look now at stocks moving at this hour with Abigail Doolittle. Abby.
Oh, well, Shonali, let's start off on two big earnings winners. On the technology side, we have the shares of Ambarella up about 12%. The chip company put up a good quarter. Their guide is much better than expected. Analysts excited about the AI and automotive potential. Box, the internet application software company, up about 9%. They beat. Billings were strong, and investors encouraged by those results. Turning to retail, this is interesting because earlier Foot Locker was initially soaring on what appeared to be a good quarter because they put up comps of up 2.6% versus the comp expectation of up about 1%, the first time that they put up an up comp in about 5 quarters, or after 5 quarters of declines. But now you can see not so much. Investors not really so wowed, down 15%. This could have something to do with the fact that into today, the stock had been up about 46% year to date. So a case of expectations. Kohl's, a really solid gain here, up 5.7%. They've lifted their full year view. There was a profit beat. Inventories are declining. It seems as though maybe some of the shorts are getting out of this stock. There is a 36% short interest on that stock. And then finally, just taking a quick look at the big one, and of course that is NVIDIA after the bell. This chart is the chart of the week. Right now down about 1.7%. Another case here of expectations. Will they be able to put up another big blowout quarter and guide? Will it be enough? As you and Shonali, Katie, have been talking about, options suggesting a big 9 to 10% move up or down after these results, which would be very fitting to the types of reactions that we've had in the past, typically to the upside.
All right, yeah, it'll certainly be fun either way. Abigail Doolittle, thank you so much. Now coming up, Kamala Harris and Tim Walz scheduled to give their first joint interview on CNN this week. We'll take a look at what else is making headlines around the world next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Morning from our world headquarters in New York. I'm Manus Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
And now to high interest, a look at what's making headlines around the world. Vice President Kamala Harris and her running mate, Minnesota Governor Tim Walz, will both take part in their first joint interview tomorrow night on CNN. It will mark the first lengthy interview of Harris since she replaced President Biden on the top of the Democratic ticket late last month. Both Harris and Trump have also agreed to an ABC News debate on September 10th. And SpaceX is again delaying the launch of a rocket carrying 4 private astronauts to space. It's part of a groundbreaking mission aimed at performing the world's first commercial spacewalk. Tuesday's initial launch was scrubbed because of a helium leak, and this morning SpaceX said it was standing down from liftoff opportunities today and tomorrow because of bad weather. The company didn't specify when the launch might take place. And U.S. mortgage rates, highly watched. They fell again last week to the lowest level since April of last year. The rate on a 30-year fixed mortgage eased to 6.44%. That's the longest stretch of declines this year, according to data released by the Mortgage Bankers Association. That proved a small boost to home purchase applications last week, but those applications remain depressed overall thanks to affordability challenges, Katie.
All right, we are back now with Sarah Hunt. She is partner and chief market strategist over at Alpine Saxton Woods. And let's talk a little bit more about the Fed. Of course, you take a look at Fed expectations, about 4 rate cuts priced into the remainder of this year. That was 6 rate cuts at the beginning of this year when the Fed was saying not going to happen. Now it feels like the markets and the Fed are a little bit more aligned. That gap has shrunk. But do you think that there's still a dislocation here? I mean, is the market baking in too much at this point?
I think that if you go back and look at from, not just the last 6 months, but go back to last year, the market has been, the expectations and reality have been very, very far apart. Yes, they are coming closer together because the Fed has finally signaled that, yes, we're actually ready to start cutting rates. Are they going to cut them as much? I think the labor data is going to matter. I think that, whether or not we get as many cuts that are baked into this year, it's about changing the direction. And the direction is going to change. And they've telegraphed that pretty clearly. So unless you see some massive change in the data on the inflation side, or on the other, or on something else that makes the Fed worried that they can't cut rates, I think we're going into a rate cutting cycle. And then what the market expectations are and what the Fed does are going to eventually, you're going to get eventually something, but to me it doesn't matter so much that it doesn't align, just because it hasn't for so long that I don't know how much of a signal that really is.
But does that logic extend to the small cap universe as well? Because you think about some of these companies and what's become a pretty junky index, the Russell 2000, for example, just to speak bluntly, those are the types of companies that are suffering under that higher interest rate burden. And I feel like it's there where the trajectory and the path kind of matters.
It's there where the trajectory matters. It matters. You were just talking about mortgage rates, right? And it matters for the housing market too, because you have this sclerosis in the housing market, because if you have a mortgage that's low, you don't want to move. And if you don't have a house yet, mortgage rates have been very high. Affordability has not come down. Prices haven't come down commensurately with interest rates going up. So yes, for small cap stocks and for mortgages, it absolutely matters what the level ends up being for rates. But the question of exactly the timing of that is not so much the issue. And if you were waiting for rates to come down and you were needing to refinance your debt, you are already in a problematic situation. So whether it's 25 basis points and how fast that happens matters to you much more than it matters to the rest of the market.
I do feel like it's worth doing this exercise now, even though we're a week and a half away, because we got a lot of information on how investors reacted on the heels of that last jobs report. The 2 words that were pervasive were growth scare. Then a day or 2 later, people looked at the numbers and said, well, wait a minute, labor force participation is growing. There are a lot of reasons you're seeing a number that looks like this that's not so bad. So at the end of the day, when you look at next week's numbers, how do you guide investors on how to bake in bad news?
Well, I think, I would not want to see bad news, right? You don't want to see something that looks too bad, because that's one of the other problems, is that once the labor market starts to go in the other direction, it very often can't just be stopped by a 25 or 50 basis point rate cut. You have a change in people's psychology. So for a long time, people were hiring because they couldn't get people after the pandemic. And then the question is, where does the psychology go from here? And can the labor market just sort of slowly cool down, as opposed to people start getting really worried? And that's going to end up being a margin question. That's going to end up being a revenue question, right? All these things are tied together. So you wouldn't want to see really bad news on the labor front, because you don't want the Fed cutting because they're feeling badly about things. You want them cutting because they can ease a little bit.
So the other end of the spectrum here, we talked a lot about energy, we talked a lot about consumers, we talked a lot about technology.
So looking out to the Fear and Greed Index, 55 out of 100 indicating neutral, while the Crypto Fear and Greed Index is 30 out of 100 indicating fear. Keeping an eye on the VIX as well, which is up just 1.1% at around 15.6 points.
To move into a new house. So would you invest, knowing that, in the real estate sector with a specific bid or with a specific conviction, thinking that there will be some easing some places, but maybe less in other areas as well?
I think it's one of the reasons that the home builders have done so well, right? Because there's a better market for a brand new house than a resale house, because there's ways for them to offer incentives, there's ways for them to deal with things, and that's why you've seen a much bigger move in that group than you would have under a normal housing market, where you'd have a lot more resale. So the question really becomes, what happens as rates go to that trade that's been on the new home building as opposed to on existing home sales? And I'm not sure how that plays out yet. I don't think, to your point, that 644 to 625 is enough to make that difference. I think you need to see, where are we ultimately going with rates, and where does that shake out in the mortgage rate, and does that kickstart the resale market, which really has not been a factor in the last year or so.
And we tend to focus on equities on this show, but I do want to broaden out to other asset classes, because, I mean, in thinking about some of those rate-sensitive sectors, and thinking too about small caps and the fact that this is, you know, a less quality index, the Russell 2000, than it has been in the past, you take a look at credit spreads, it feels like nothing gets them to budge.
The fear just isn't there.
I know. And so where you've seen that fear enter in fits and starts into the stock market, not necessarily in the bond market. What can we extrapolate out from that?
Well,
so in 10 minutes time now at the bottom of the hour, you see the release of the weekly EIA crude oil inventories. Forecast is a draw of 2.775 million on the prior draw of 4.649 million, with a range seeing a draw of 2.55 million to a draw of 3.377 million expected. Gasoline inventories, forecast is a draw of 2.15 million on the prior draw of 1.606 million. Distillates inventories, forecast a draw of 0.815 million on the prior draw of 3.312 million. And crude Cushing inventories, the price or a draw of 0.56 million.
That's much different on small cap companies than large cap companies.
It's interesting, because when we talk about some of these more sensitive sectors, let's take banks, for example.
So just keep in mind, last night the US API crude oil stock change came in at a draw deeper than expected at 3.4 million on expectations of a draw of 3 million.
In the financial sector to a significant degree. Do you start to pick up on some of these names that investors are still leaving behind?
I think that especially in the financial sector, that's a bit tricky, because you've seen so many banks come out, or so many, but you've seen enough smaller banks or mid-sized banks come out with things that were surprising to the market and not in a good way. So I think you have to be careful there. People are definitely looking for a continuation of the consolidation trade. So there's money to be made in some of that consolidation. But I think that in terms of where the, quote unquote safer money has been, it obviously has been in those bigger banks who've just gotten bigger and bigger. And the question is, does that just continue? And it's hard to see why the answer to that would be no.
And Sarah, you've been so generous with your time this morning. Before we let you go, in 30 seconds or so, what is the most underappreciated risk out there at this moment?
That's a tough one. Because I have a bit of an energy background, I'm going to say something going wrong in the Strait of Hormuz would be a very, very big deal for the markets. And I don't think people appreciate how difficult it would be to fix. So whether or not that's the biggest risk out there, I don't know. It's not like it hasn't been flagged, but it sort of comes in and out of question in the oil market. I don't think that there's a lot of premium in oil right now for any risks that could happen within that Middle East conflagration that continues to not be stopped.
Sarah, we thank you so very much for all of your time this morning. That is Alpine Saxon Woods partner and chief market strategist Sarah Hunt. And still ahead, Berkshire Hathaway becomes the first U.S. company outside of the tech sector to surpass that $1 trillion in market value mark. We're going to tell you what's driving the gains in social climbers next. This is Bloomberg.
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get
Libya oil output said to drop further to 450,000 barrels per day. Libya wants the Waha oil output said to drop to 175,000 barrels per day from 320,000 barrels per day.
Basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's time now for Social Climbers. The company's making waves this morning. And first up, Warren Buffett is still selling Bank of America stock. Buffett sold an additional $982 million worth of shares, according to a regulatory filing yesterday. And Berkshire, of course, has trimmed its stake by a total of almost 13% in a series of sales since mid-July. He's been silent about the reasoning why, as he whittles down.
It's been 5 minutes time now at the bottom of the hour. See the release of the weekly EIA crude oil inventories. Forecast is a draw of 2.775 million on the prior draw of 4.649 million, with the range seeing draws of 2.55 to 3.377 million expected. Gasoline inventories forecast is a draw of 2.15 million on the prior draw of 1.606 million. Distillates inventories forecast a draw of 0.815 million on the prior draw of 3.312 million, and crude Cushing inventories forecast, the prior seeing a draw of 0.56 million. So keep in mind for crude oil, the API crude oil stock change last night came in at a draw of 3.4 million, deeper than the expected draw of 3 million.
Now let's get a check here on the markets because, of course, we have a market eagerly awaiting those NVIDIA results after the market today. And you have the S&P 500 now down only about less than 0.1%. The NASDAQ 100 still down about 0.3%. Pretty much calm in the bond market as well here, Katie. Fascinating day, but of course, let's see if NVIDIA really shakes things up tonight.
Yeah, calm before what Dan Ives says is the most important earnings report in all of space and time. Really looking forward to that one. But before we get there, coming up, Abercrombie & Fitch boosting its full-year outlook as sales remain strong. Not necessarily seeing it in the stock today. We'll speak to Fran Horowitz. She is the CEO of Abercrombie & Fitch next. This is Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. and someone who said, hey, nobody's ever scaled things up like this, the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those
1 minute remaining. I'll be leading with the EIA crude oil inventories.
How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
10 seconds.
You have retailer Abercrombie & Fitch beating sales expectations for the 6th consecutive quarter. But it wasn't enough to impress investors. Of course, in a sector
Draw 0.846 million, draw 0.846 million, higher than the expected draw of 2.775 million. Gasoline inventories a draw of 2.203 million, draw of 2.203 million, which is higher than the expected draw of 2.15 million. Distillates inventories a build of 0.275 million, a build of 0.275 million, higher than the expected draw of 0.815 million. Crude Cushing inventories a draw of 0.668 million, a draw of 0.668 million.
In the 6% range. Again, this is ex food and energy. Now down well below 4%, closer to 3%. You would think that this decline would really give consumers a bit of a boost in terms of spending power. That's not entirely the case, though. If we take a look at retail sales this year, yes, for the most part good, but a little bit lumpy. We have had a couple of months of declines, most recently in July, up just 0.3%. So a gain, but one of the smaller gains, in fact, the smallest gain that's actually a gain of this year. When we put it together with stocks, well, there's such a mixed picture for all these different consumer stocks. Abercrombie & Fitch, while maybe down today, despite the good quarter and boost, this is a piece of why it probably is down, because take a look at on the year, even with today's 15% decline, still up 59%. And when we put that into the perspective of American Eagle, Urban Outfitters, and Gap, you can see, Katie, that folks are out there shopping for clothing. Abercrombie & Fitch, though, clearly outperforming.
Yeah, the big leader, of course, in the sector, even with today's downdraft, of course, maybe a case of high expectations there. Abigail Doolittle, thank you so much. And for more, let's continue this conversation now with Fran Horowitz. She is the CEO of Abercrombie & Fitch, joining us again on Open Interest. It's great to have you, and I want to go straight to the outlook, because you mentioned that increasingly uncertain environment for retailers in the statement earlier today, but at the same time, raising the full-year sales outlook. So square that circle for me. How do you plan to navigate through that period of uncertainty?
Hey, Katie, we're going to continue to do what we've been doing. We just put up an incredible first half of the year, record Q1, record Q2.
US and Brent crude futures extend losses slightly after the EIA data showed the lower than expected weekly inventory draw.
Start to August. What I tell the teams all the time is we got to stay focused on the customer.
And we have posted out the weekly EIA inventories report on the feed for anybody interested.
Always has a choice on where to shop, and they are choosing us.
Well, let's talk about what you can control, of course. You can't bring down the rate of inflation, but you can bring down your pricing. You can boost promotions. We've heard a lot of retailers also warn about the second half of the year and that stretched consumer. How would you characterize the level of promotions that you're planning relative to maybe past quarters and past year ends?
Yeah, our promotions are under control. They're less than they were last year. We've had double-digit increase of our AUR since 2019. Our product acceptance and our inventory control is really what's driving our ability to make sure that we continue to drive the AUR growth that we have seen. We do go into every quarter with the expectation of keeping it flat, and then the customer votes. It helps us understand, what they're willing to pay. And again, as I mentioned, you get that product voice and experience lined up like we are, and the consumer is ready to buy.
It's fascinating. I'm really curious about your conversations with investors, Fran, because if you look, yes, it's been a little bit less of a gain over NVIDIA over this year, but still over a 12-month basis. Your stock has been expanding at a faster rate than even the most beloved tech giant out there. So you have a traditional retailer expanding at the rate of a technology company. What is it that investors really expect of you at the end of the day? And how do you really define to them what you grow as a retailer?
Yeah, I think what they're expecting from us is what we continue to do, which is deliver. We've spent a lot of years transforming this company and really rebuilding our operating model. And we've spent time and time and time again with the investors really explaining and helping them understand what all of that means. And they truly understand what that means. Obviously, evidence in the stock prices you guys just illustrated over the past year. So what that means is staying close to your customer, making sure that we're reading and reacting to the business, having financial discipline and how we control our inventories. It's a new way of thinking about retail, and our operating model continues to drive results.
How are you also thinking about partnerships? During the call, you were talking about, for example, your NFL partnership. What does this really bring to you at the end of the day? Is it new customers? Is it more customers? And what kind of cost does it come at?
You know what? It's a little bit of both. It's been very exciting. I like to say we are no longer a jeans and t-shirt company. We're certainly a lifestyle brand, and we hear from our customers what is important to them. So a great example is the NFL partnership. We started this partnership about 3 years ago. We tend to do things small and then build on them as they work for our consumer. It's a real test and learn culture that we have here. The NFL is a fantastic example of that. We now have all 32 teams. We've got expanded product categories. Last year, mostly focused on fleece and t-shirts. Now we have outerwear and hats and sweaters. The collection is off to a great start. And if you look at our Hollister brand, same thing. How do we expand that consumer's product categories? And we just launched a terrific collegiate assortment, over 30 universities across the United States. And again, off to a great start with that. It's really helping drive our strong back-to-school performance.
And I also want to talk about geographic footprint as well. I'm taking a look at the notes you sent over to our producers. You plan to be a net opener of stores next year. What areas of the country are you thinking about there when you take a look at your map right now?
Yes, so we are actually going to have almost 120 new experiences this year, twice as many as we had last year. And to your point, it's our third year of being a net store opener. Those reference stores actually around the world. So it's our global footprint that we're looking to expand, both through the Abercrombie and the Hollister brands.
And I want to talk internationally as well. There's some news on the terminal out today that Abercrombie & Fitch has plans to return to Hong Kong 8 years after you shut down your flagship store. According to people familiar, the plans are to rent 2 large stores in prime locations in Hong Kong. Are you able to confirm those reports?
So we have stores in Hong Kong. So we saw that earlier this morning. We sent in a correction. So we're not returning to Hong Kong. We are currently in Hong Kong with several stores. We are in the APAC region. As I mentioned earlier this morning, we saw a 3% net growth and a 21% comp growth throughout that region this year.
You mentioned something earlier, Fran, as well, that I want to go back to for a second here. This back-to-school moment that many people are having. You were talking about the NFL partnerships, not just back to school. It's back to watching football. I think this weekend is a lot of the first big games, or next weekend. I'm still learning my football lingo. But what can you tell us about the demand that you are seeing headed into this fall season? A lot of people out there worried about the consumer, but this is a critical time to sell.
Yeah, listen, we were thrilled with the beginning of August, which I mentioned this morning. We have momentum coming out of the second quarter, and it's remained into the third quarter. To your point, the NFL is certainly driving a piece of that. It's one part of our business, but it's just only one part. We're also seeing tops and bottoms selling. Our dress business remains strong. The wedding shop that we talked about last time we were together has gained momentum, and those weddings, honestly, go all year round now. And then as far as collegiate goes, same thing. Exciting to see that consumer. They start freshman year in high school, start thinking about aspirational places that they want to go to college. So another good opportunity for us to connect with the consumer.
Fran, the other question I have here about Abercrombie & Fitch, of course, Abercrombie & Fitch, Hollister have been two iconic brands for a very long time. You've certainly reinvigorated it in a pretty massive way. But do you see A&F having more brands? Do you see yourself expanding into even more categories, perhaps even through the means of mergers and acquisitions, given how far your stock has come as currency?
You know, our focus today is on investing in the business, and that's our number one plan for our capital allocation as we continue to do. We're currently making some very big investments in the business, from digital and technology, the stores piece that you asked about earlier, investing in opening and transforming our stores as well. We will continue to stay close to that customer to understand what they're looking for. You know, YPB is a great example of a brand extension. That's our performance brand under Abercrombie & Fitch, called Your Personal Best, which I'm seeing on the screen right now. You're showing lots of pictures of. So again, it's staying close to the customer and listening to what their insights are telling us.
I want to talk a little bit more about technology investments in particular, because we're all awaiting NVIDIA earnings after the bell. You can't get through a conversation without talking about AI. And when you think about your own investments, has Abercrombie started using AI in any capacity, especially when it comes to generative AI, for example?
Yeah, I mean, AI has been a part of our business. I know everybody talks about it like it's, it was just founded last year, but it's actually been something that we've been working with for some time now. There's lots of applications, certainly within our business, that you can use AI for. So we're continuing to explore like everybody else is. We have our own, AI task force to make sure we're staying up to date on what the opportunities are.
To that end, also, I have to say, Fran, I am very, very guilty when it comes to shopping on social media. My Instagram gives me something and I am going to click on it. And so has AI helped you with kind of figuring out what users want more of? Has it somehow made you more efficient? Could you put more numbers around it? And how has that kind of online channel become more important to you?
Yeah, I mean, listen, we have our marketing today is, the majority of it is digital, and I would say that we are certainly a leader in social commerce for sure, and in social media, and the digital platforms. The data and analytics team helps us understand what the customers are looking for. They relay that to both our marketing and our digital teams to make sure that we're staying up on what's working for them and what's not working for them.
All right, Fran, really appreciate you taking some time with us this morning, and also appreciate the clarification on Abercrombie's Hong Kong presence. Hope to speak to you again soon. That is Fran Horowitz, the CEO of Abercrombie & Fitch. Meanwhile, let's get a check on these markets. Of course, wait and see in full effect. The S&P 500 down just 0.1%. The NASDAQ 100 off by about 0.5% or so. In the bond market, dead quiet. Coming up, the countdown is on until NVIDIA reports after the bell today. We'll speak to New Street Research's global team head of technology infrastructure next. This is Bloomberg.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon, in Sudan, and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
The world's most valuable chip maker is set to report after the bell. Investors are waiting to see if NVIDIA will once again shatter sales expectations powered by its AI computing processors. Analysts are predicting revenue growth of more than 70% for this quarter. For more, we're joined by Pierre Ferragu, Global Team Head of Technology Infrastructure at New Street Research, and he has a buy rating on NVIDIA with a $148 price target. At the end of the day, yes, there are high expectations for this quarter, but there are also high expectations for going into 2025. If anything looks softer than expected, if they were to project a hint of uncertainty around that forward look, what would happen to the stock?
Yeah, that's really the risk with NVIDIA. You have to be very careful about where expectations are and how much room the company has to beat. And so what happened in the last few weeks is that a lot of negative news flow came from Asia talking about difficulties for NVIDIA in the ramp of their new product generation, the Blackwell generation. So that created a bit of a nervous sentiment. People got worried about whether NVIDIA would be able to ramp the new product. And I think it's setting expectation in a place that is rather satisfactory, because the reality of what's happening today is that people want way more GPUs than NVIDIA can have manufactured anyway. And so if you have like a next generation chip that cannot ramp as fast as initially anticipated, that means you'll continue to produce the previous generation chip, the Hopper generation, longer and in larger volumes. And so what I would expect is the company to be very reassuring on the call tonight. I think it's easy for them to make the numbers that are expected for this quarter. They're probably going to guide where expectations are, which is going to be interpreted as a positive. And most importantly, on the conference call, we think they're going to reassure the street on the ability for NVIDIA to ramp the new products. We're probably a few weeks behind our original schedule. And that in the meantime, the previous generation product line is going to continue to do extremely well.
How big of a deal, Pierre, is that Blackwell delay at the end of the day? And what does it mean for the future of NVIDIA?
It is actually, to be honest, Sonali, a non-event. I mean, you have to realize that NVIDIA is at the leading edge of on many dimensions. They're producing the largest chip in the world at a very advanced nodes, and they've accelerated a lot the cadence.
S&P 500 and NASDAQ extend losses. S&P down spot 2%, NASDAQ spot 7%.
So all that is a lot of pressure for them, and you have things that work well when you produce 1,000 chips or 10,000 chips, and once you've produced 100,000 or 500,000 chips, then you realize you have a problem and you have to slightly rework your design on one of the elements making the chip. It's called an interposer between two silicon dies. And that's what they are doing at the moment. They have an interposer that doesn't work as well as they would want it to work. So they take 6 to 8 weeks, maybe 10 weeks to redesign it and get back into production. And the ramp is going to be slightly slowed down based on that. And so when they do that, it's not a big deal, but they have to let their suppliers know. And, things have changed. We're going to be a bit delayed. We'll have to redo this and redo that. And that creates a lot of noise, a lot of negative vibes, and we end up making a lot of noise, but it's much ado about nothing at the end of the day.
All right, so a non-event there when it comes to the Blackwell story. Appreciate that insight, since it feels like one of the few elephants in the room when it comes to NVIDIA's report later after the bell today. The other elephant in the room, of course, is how long the momentum can stay behind NVIDIA, how long they can hang on to that sort of first mover advantage, that incumbent advantage, whatever you want to call it. You see some of their competitors, AMD, et cetera, making acquisitions to try to catch up to NVIDIA. How long do you think that the chip maker's lead can sustainably last here?
You're absolutely right, Katie. That's really like probably the number one question on NVIDIA, along with how long are NVIDIA's clients going to continue to increase their spending on AI infrastructure? And so on your question, I would tell you, AMD is on fire. They're doing extremely well. They're coming up in the market with a very decent alternative to NVIDIA. But, when you sell for $1 billion
Freeport LNG shuts the facility after a fire safety system tripped.
Very recently, like you've really started ramping volume 9 months ago, you have a very small community around you, a very small number of people using your chips, deploying them. So you're not anywhere near the market power of NVIDIA that has like a gigantic ecosystem with like 100 times maybe more people working on their chips and who have been working on these chips for like 25 years or even before AI really existed. And so AMD is catching a fantastic opportunity. As I told you, people want way more GPUs than can be produced. So AMD is being very successful, is becoming an alternative to NVIDIA. But there is no line of sight on NVIDIA losing its leadership. It's like a dominant leading role.
UBS cuts China's 2024 GDP growth forecast to 4.6% from 4.9%.
It's a TPU, a chip designed by Google and used only internally by Google. Today, the TPU is shipping in millions, but it took more than 10 years. Google started working on the TPU in 2012. More than 10 years to get there. It's a long road, to compete against NVIDIA. So I think they're going to keep their market leadership as long as they continue to execute very well.
And Pierre, we have several opportunities to hear from, of course, Jensen Huang tonight. We have the earnings call, and then we have Bloomberg Television's exclusive interview hosted by our own Ed Ludlow. What do you want to hear at this juncture? What questions are you and markets asking right now when it comes to NVIDIA?
Yeah, I think what I would love to hear Jensen comment about is how he sees, the industry getting into like a normal, sustainable run rate. As you said in your initial comments, we're expecting NVIDIA to grow revenue 75% this quarter, and we're already expecting them to grow revenue like almost 60% next year. And you can't grow 60% a year forever, right? And so at some point, we'll have to see things like landing, getting more sustainable. And I'm truly wondering whether Jensen has visibility on that already, if he gets a sense, or whether we'll continue to have like extreme growth in 2026, or whether 2026 will be a year of normalization. Now, all the questions are about 2026. To me, 2025, we have relatively good visibility on what's happening because we know people have already ordered and are waiting already for the new chips to come through. So the real question is, what happens in 2026?
Pierre, we thank you so very much, of course, for working late in Paris. That is Pierre Ferragu of New Street Research, all over the biggest event of the week, NVIDIA earnings aftermarket. And tonight at 6:30 p.m. Eastern, do not miss a special edition of Bloomberg Technology featuring that exclusive interview with NVIDIA CEO Jensen Huang. All eyes will be all over it. Stick with us. This is Bloomberg.
up-to-the-minute political news, whenever and wherever it happens. I'm Joe Matthew at the Democratic National Convention in Chicago, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
All right, let's get now to the trading diary, what you need to be watching this week. And of course, at the top of the list is NVIDIA earnings. We get those after the bell today. This market really on tenterhooks in this last trading week of August. We also hear from Atlanta Fed President Raphael Bostic tonight. And then tomorrow, more earnings, this time from Best Buy and Dollar General. That's before the bell. We also get initial jobless claims really in focus as we pay attention to this labor market and we still digest those payroll revisions that we got last week. And then Friday, another big piece of macro news when we get July's PCE inflation data, obviously a big focus for the Fed as well.
Let's get a check on these markets before we let you go because we have the S&P 500 near session lows, about 0.25% lower. NASDAQ 100 near session lows as well, 0.8% lower. Of course, a lot of calm in this market still, thin volumes before that big NVIDIA event that a lot of people are watching as closely as a jobs report, as you've been talking about. That is very true. But the bond market yet stable ahead of PCE on Friday, and then of course the other big moment is not until next week, that jobs report.
It's fun to think of all the different things you can compare this NVIDIA report to. The jobs report, a Fed meeting, I don't know what else, a presidential election, who knows. Dan Ives saying it could be the most important earnings report in years. But again, Dan Ives, he has a flair for the dramatics.
I do think a bigger moment after that report is even that Ed Ludlow interview with Jensen Huang, exclusive, an hour-long special. And of course, people will be parsing very closely what Jensen Huang has to say about that forward look.
Yeah, big time. A lot of focus there. Don't miss that, of course. That's coming up at 6:30 p.m. Eastern tonight. And coming up tomorrow on Open Interest, pleased to say we'll be speaking to Laura Ray Dickey. She is Dickey's Barbecue Restaurant CEO, joining us in the C-suite. Much more coverage ahead on Bloomberg TV on these markets throughout the day. But that does it for us. This was Bloomberg Open Interest, and this is Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Today, all eyes are on NVIDIA. Markets are on hold as investors are anxiously awaiting the crucial earnings report.
Plus, the AI earnings parade continues with Salesforce and CrowdStrike results also after the closing bell.
And a critical 24 hours for Telegram, as CEO Pavel Durov's 4-day detention ends as a French judge is pondering pressing charges. But first, let's just check in on these markets. We are under pressure. We are down by 0.3% on the S&P 500. We're off by 0.9, let's call it a percentage point on the NASDAQ 100. Why is that? Ed, it is because the market weightings of one particular company, which is about 6% for the S&P 500 and about 8% for the NASDAQ 100. I think you're going to dig into which one it is.
Yeah, we will hit NVIDIA hard. There's actually a big piece of news out about Supermicro Computer as well. This is a 3-day chart. The session, the stock's down 24%, on track for its biggest drop since 2020. At one point at session low, biggest drop since 2018. They are delaying the filing of 10K, annual financial disclosures, 24 hours after short seller Hindenburg issued a critical report and made numerous allegations, which we will get to later in the program with Bloomberg's Brody Ford. NVIDIA is everything in the moment. The stock is down 2% near session lows right now. We are worried about what happens with earnings because it impacts markets at the index level. It tells us the state of play for the investment cycle in AI. It's a big hour of Bloomberg Technology ahead and a big 24 hours for this name in the market, Cara.
Big half an hour if you're going to be tuning in a little bit later as well. Just phenomenal what we need to be watching in on. Fiona Sincoulter, I'm pleased to say, is with us, Senior Analyst of Citi Index Financial Markets. Fiona, this is an important macro event from your perspective?
Yes, completely. I mean, we only need to look at the charts really of NVIDIA and overlay the S&P or the NASDAQ to really see that correlation and how strong it is and how much sort of movements in NVIDIA actually also move those indices and sentiment more broadly. You know, this is something that we can see having an impact across not just the financial markets, but also move into currencies and other risk assets as well. So, you know, it's definitely one to watch. And I think there's so much riding on that because of this impact that it can have, because this is really, it feels like the litmus test for the AI trade. You know, it's really something that's able to test the enthusiasm of that AI trade, how it's doing, whether there's more upside from it. And considering the rally that we've seen both in this stock and in the S&P and the NASDAQ, it does sort of raise concerns and a few questions of, you know, are we there? Are we at the sort of top of this rally? Yeah. Or are there more legs to go?
To that end, Fiona, should you be hedged to the downside? And if so, do you do that from an index level, from an S&P level, or more micro-focused?
Yeah, you know, I think there is reason to be a little bit cautious here because obviously, as I said, we've had a phenomenal rally. You know, this stock is up 160% so far this year, 788% since the end of 2022. So, you know, these numbers are phenomenal. It is producing growth, but because of these lofty valuations, it does just raise that question of a little bit of disappointment can have quite a big impact. So I think you can even hedge this on an index level with the S&P, as you highlighted. It does have a weighting that's quite heavy, and particularly with the NASDAQ as well, you can see a hedging potential with that one as well, just because of those correlations that we see within the moves. And I think if you do have a hedge within the NASDAQ, obviously that's not going to be a perfect hedge, but it does just, I think, open you up to a little bit of risk protection. But then, you know, there are other factors that are also driving the market right now. As we know, we've got, you know, US core PCE, the Federal Reserve also in focus.
They say this is the most important corporate earnings since the banks amidst the financial crisis. They say whatever Jensen Huang discloses about Blackwell will be dissected and analyzed like it's a Fed meeting or Fed presser. Just reflect on what it's like for you in the markets right now, you and your colleagues at Citi Index, what people talk about, how significantly they assign the importance of this moment in their careers.
Yeah, do you know what? I think that's a really good comparison there. You know, we're really feeling this as that sort of moment where we had back in 2008 when the banks were very much in focus, and now we've got this really feels like a sort of section in the road where we're focusing on to see where this AI trade is going to take us. So really, really important for us. Obviously, it has been the talk of the desk and the talk of our clients for quite some time. This has been in focus, particularly since we've seen that recovery from the August 5th low and the sort of prices drive higher. So yes, this is very important for us and our clients.
How interested are your clients in the energy sector and the energy side of the data center story?
You know, it's a really interesting one, isn't it? I think that side of the play is just really much more coming into focus now than it has been previously. You know, that idea of where we're going to get the energy from, nuclear energy play, I think that could be very much the second side of this story, which hasn't, I don't think, really been fully explored and fully played out to its potential.
Fiona, how frustrated are your clients that they have to be so exposed to a few mega cap names, to an NVIDIA, whether they like it or not?
I think there hasn't been too many complaints just because there has been so much sort of hype surrounding it. So because of that and because of it's been hype on the plus side, we've seen some strong rallies. This has been a good trade to be on the right side of. So on that side of things, there hasn't really been too many, I would say, distressed complaints. But I do think that there is also a keenness among our clients for the rally to start broadening out much more than what it has done. And I think that's something that we'll be looking forward to happening potentially as the Federal Reserve moves forward with those rate cuts. And starts to see sort of the economic picture changing. But I think, you know, having that broadening out of the rally, we haven't quite got there yet, but that will be something that I think that traders will be looking forward to going forward as well.
So does that automatically going out of tech and into small caps, or is there a broadening out of names within technology that people can analyze from a global perspective too? Because you're sat in London and there's some key European names.
Yeah, completely. You know, and I think it was interesting because I think at the start of this week when we saw the Dow Jones reach record highs and we saw the NASDAQ and the S&P sort of coming lower, there was that sense of potentially, are we going to start to see a rotation out of tech and into stocks that are potentially more economically sensitive, you know, on those expectations that potentially the Feds will start cutting rates next month. So, you know, I think there is a sense that we could be getting to that stage soon. As you said, geographically speaking, there are other alternatives to be looking at, but I just do wonder whether I think that might be a little bit premature given the economic picture and the economic outlook potentially in the Eurozone and in the UK compared to what we're looking at in the US at the moment. So I do think that there will come a time when there will be sort of more opportunity for geographical diversification, but I'm not sure we're quite there yet. But that's something to be keeping an eye on.
Fiona, let's end here. What's the biggest headwind or risk to the technology investor through the end of 2024?
Wow, good question. So, do you know what? I think there is a big risk surrounding a slowdown in demand for AI. What we know right now is that a lot of companies, even outside of tech here, I'm talking companies more broadly, are very interested in AI and what it can do, and they see it very much as a key part of their future. But what we need to be able to understand is how much of that can be transferred to higher earnings in the near term. And I think that's where this question sort of really comes down to. Are we a little bit overbought in the AI play near term? I don't think we are long term, but I wonder if we are near term. And I think if that does start to come to the surface, then maybe that could be a big risk for the rest of this year.
Yeah, that taps into the question being asked, the anxiety being felt by a lot of people everywhere. Thank you, Fiona Sinkota, Senior Analyst of Citi Index Financial Markets. Programming note, tonight, an earnings exclusive with the NVIDIA CEO in a special edition of Bloomberg Technology. You don't want to miss it. That's 6:30 p.m. Eastern, 3:30 p.m. Pacific time. Now, coming up, French authorities weigh the future of Telegram CEO Pavel Durov. We take a look at the possible outcomes next on Bloomberg Technology. See you in a minute.
Introducing Paisano, the authentic.
Do you think it'll be the case where someday you would be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Telegram CEO Pavel Durov's detention in Paris ends after 4 days after allegations he allowed criminals to use the messaging app unfettered. So what's next? Bloomberg's Paris bureau chief Alan Katz joins us to discuss, and basically there is now a specific judge pondering the issue of charges, Alan.
That's correct. So the way it works is that he was interrogated for I would say roughly 90 hours about. And then he was taken just about an hour ago, a bit more, to see a judge, an investigative magistrate, really. And what that person will do is decide whether or not to actually charge Durov for any of the 12 things that he's alleged to have done, which is mostly aiding and abetting criminality on the app, or at least certainly turning the other eye against it. And that could take a relatively short period of time, or it could take hours. It's really, we really don't know how long this particular portion of the process will take.
And what's so interesting is the background of Pavel with France. I mean, I think it was a few years ago, Macron was hoping that he moved the business there. Ultimately, he's a French resident, citizen at least. But why has France taken this action? Why this country? Why this government?
So that's a good question. So he is a French citizen, and he has been since 2021, and he became a French citizen under a process for people who have done exemplary things for the country. It's unclear what exactly. Le Monde, the French newspaper, did a big investigation into this last year and didn't really come up with a good reason for why he was given French citizenship, but he does have it. And the question of, so you have to separate, though, a bit the political from the criminal. So in this case, there is a criminal case for alleged lack of content moderation for particularly things about child sexual abuse materials on the platform that Durov didn't do anything about, allegedly. And that's very different from sort of the political process about giving him or anyone else citizenship. So France, like the United States or like the UK, those things are often quite separate. So one doesn't necessarily really play into the other.
We'll have to see how this continues to unfold and indeed what the judge does indeed decree. We keep up to speed with it with Alan Katz. We appreciate it. Now, look, the Telegram CEO's arrest has actually sparked concern among some of the other key names when it comes to social media and the industry, high-profile decision makers who are worried that the French authorities have created a threat to free speech globally. Kurt Wagner has been writing about this exact thing in the Tech Daily newsletter. And look, there's Elon, Linda Yaccarino, Jack Dorsey, all are weighing in here, Kurt.
That's right. I mean, this has caused a lot of concern from folks who are running similar platforms, or at least other social networks that probably have to deal with this type of content moderation. You know, on the one hand, they're saying, hey, look, this is a real threat to free speech, right? The government comes in, they don't like what's showing up, and suddenly the CEO is arrested. What kind of precedent does that set? And I think that's why you're seeing folks like Elon, like Linda Yaccarino, even Jack Dorsey over on Nostr, which is a sort of different social network that he now uses quite regularly. You're seeing them start to push back on this idea that any one individual should be held accountable for what shows up on a platform with, you know, in this case, hundreds of millions of users.
It is a fascinating week for social media executives everywhere and the broader issue of oversight. I'm thinking, of course, about Mark Zuckerberg's letter to the Judiciary Committee. You also reflect on that. It's impossible to almost, but tie the two stories together in its government oversight of specific issues.
Yeah, I found it interesting that, you know, Mark Zuckerberg sends this letter to D.C. saying the Biden administration pressured us to remove COVID content. You know, they sort of warned us about this Hunter Biden laptop story, which ended up being a legitimate story, but we acted on their behalf. And, you know, the timing of this, right, that him sort of acknowledging, hey, governments have pressured us to do things. We should have pushed back more. The fact that he's having this, you know, letter, he sent this letter right in the midst of all of this all of these issues that are going on with Telegram and Durov, I don't think is a coincidence, right? I think he's trying to simply raise his hand and say, look, it's not just Telegram where, you know, there's a feud with the government. It also happens at the big players like Meta here, and we're going to take a different stance than perhaps we have over the last couple of years. You know, perhaps I'm connecting dots here, but I do think the timing is quite interesting that he would suddenly bring this forward after years after it happened, right at the same time as this Telegram incident.
Well dotted, Kurt. There's a great line in your piece that really resonates with me. You say, it's reasonable, I think, to be a supporter of free speech while simultaneously fighting against content that could get people killed or ruin a child's life. These things don't need to be mutually exclusive, Kurt.
I don't think so. And I think this was the point of my newsletter this morning, was that, you know, you see the supporters of Durov coming out and saying, hey, what's going to happen to free speech? Is this government overstep? And the point I wanted to make was simply, we're not talking about a political free speech in this case. We're not talking about someone who said something that the government just didn't like. We're talking about someone who, is alleged to have turned a blind eye to real crimes, to real terrible crimes that could, ruin lives, right? And I think that you can be a free speech supporter while still saying, well, what can we do to prevent child pornography from flourishing on these networks, right? And so I hope that those two things don't feel too black and white. And right now, I think a lot of the discussion is making them that way. I think there's a nuance in between that a lot of people would probably agree with if they can set aside this, one or the other mentality.
Kurt Wagner is a Bloomberg correspondent who literally wrote the book on the history of Twitter and Elon Musk's takeover. And you have deep experience of these platforms from the early days to present day. What I'm trying to get the sense of is right now, what is the type of content, or where does the line get drawn by the companies themselves? Because I remember Meta, or then Facebook, saying, we shouldn't be responsible for this. Someone else needs to take over.
Yeah, I mean, historically, I think that line in the sand was always around what, they would call offline harm, right? Or real world harm. So is something that's being done or said on, Telegram or Meta or X, is that leading to violence offline? Is that leading to, human trafficking offline? If so, that's where the line gets drawn. I think what we're sort of seeing is people push back on that, right? We're seeing certainly Elon and Durov and others simply saying, like, we kind of want everything to be out there, whether it's, perhaps criminal or not. And so I just think this is constantly going to be a tug of war between where stuff gets taken down and where stuff is allowed. I think we need to, it's continuing to just shift, and we're seeing that shift happen right now.
Bloomberg's Kurt Wagner, thank you very much. Now, coming up, Supermicro taking a hit after Hindenburg Research said it short the maker of server equipment and made serious allegations in its report. That's next. This is Bloomberg Technology.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. I need a basic technology adoption.
Nobody covers business like Bloomberg.
Time for Talking Tech, and first up, Apple took the rare step of cutting about 100 jobs in its digital services group, according to sources. The layoffs included some engineering roles, and the biggest cuts were made to the team responsible for the Apple Books app an Apple bookstore. Layoffs are relatively rare at Apple, though the company's made at least 4 rounds of reductions in 2024. Apple declined to comment on the cutbacks. Plus, BYD said the timing of its lithium project in Chile remains up in the air as the Chinese electric vehicle juggernaut continues to negotiate with authorities in the South American nation. In April last year, BYD was granted access to preferential prices for lithium carbonate produced by Chile's SQM, but terms are yet to be settled. And Supermicro shares plummeted Wednesday after the company delayed filing its annual financial disclosures. The move comes a day after short seller Hindenburg released a critical report alleging glaring accounting red flags, evidence of undisclosed related party transactions, and other issues at the server maker. Supermicro said in a statement it's not updated its financial results for the prior quarter or fiscal year. Karen.
Let's stick on that story because it is a big share reaction for Supermicro. Brody Ford is across it, and there seems to be genuine concern there from an investor perspective.
It's not a good look, right? I mean, you have this report came out, the reaction was fairly muted yesterday, but then you announce that, hey, we're delaying our financial filings. And for a company of this scale that is very rare, we've had only 2 other S&P 500 companies do that this year. One of them was Autodesk, and that's led to many problems over there. And so I think for investors, delaying the reporting, it validates some of the anxieties brought up by Hindenburg yesterday.
Brody, as you know, I have some experience covering companies the subject of Hindenburg short reports. What is it that Hindenburg alleges basically against Supermicro?
Yeah, I think what's relevant here with the accounting issues is that general idea of maybe recognizing revenue too early. It's worth noting that today Supermicro didn't say exactly what's delaying the 10K. They said they need to look into their processes around their reporting, which, I mean, right, it's a lot of jargon. But what's crucial and maybe a little anxiety inducing for investors is they said, we have not updated our financials. They didn't say, we will not. Right? Because in other cases, we see companies say, we do not plan to update our financials. And so they left that a little bit open here, which is driving some of the palpitations, right?
I mean, palpitations, which, I mean, back in 2020, they resolved an investigation from the SEC about accounting and disclosures for 2014 to 2017. Too much deja vu. Push us forward, though, because you don't just cover this stock, you cover a multitude, Autodesk, but also what's happening with Salesforce. Yeah. On a day that NVIDIA gets its results, poor old Salesforce is also trying to announce some stuff.
Yeah, well, while NVIDIA is clearly making money from AI, poor old Salesforce and poor old rest of the software sector is saying, guys, don't forget about us. We can make money from AI, too. And that's what we're watching for tonight. Is there new AI features and products actually raking in revenue? Or are customers really not ready to pay
NVIDIA shares currently down 3.8% as losses get extended here.
They gave us a clue very quickly. Does the forecast hold up for Salesforce?
Yeah, a lot of folks are worried about that revenue, right? I mean, it used to be really easy to get companies to buy software, and now they're saying, whoa, how did I end up spending all this money? And so it is tough. I mean, we saw this with Workday as well. It is tough to eke out the extra percentage points of growth the way it used to be able to.
Salesforce on deck after the market closed. Bloomberg's Brody Ford, thank you very much. Now, coming up, again, a preview of what to expect when NVIDIA reports its quarterly results after the close of trading today. That's next. This is Bloomberg Technology.
thoughts on fast fashion? It's been transformative. It gives the masses access
And
to
North Sea Hohan's Vedrup loadings at a full 732,000 barrels per day in October.
I think it's also how I grow up, you know, making your own clothes and making something that's well special and well unique. It's like timeless. And now you see that everybody is looking the same, like wear sweatshirts and wear t-shirts. And for me, it's just like when they wear something was special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough, you know, to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, you know, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
And we've got to do just one name that is affecting all these benchmarks. We are awaiting NVIDIA earnings. Why does it matter? Because it is some 8% of the NASDAQ 100 in terms of weightings. It is some 14% of the stocks of that key chip index, which is down by 2.3%, and every single name is falling today. NVIDIA is off by 3.3%. We've got some anxiety brewing ahead of these numbers. Let's get right to it and the broader market implications of Bloomberg's Carmen Reinecke. And Carmen, it feels as though this could move significantly, the benchmarks, and the stock of NVIDIA in and of itself could move a lot. What are options pointing towards?
Yeah, so you're totally right. Options traders are basically looking for a move of nearly 10% in either direction for NVIDIA. And this is huge because the company's market cap is north of $3 trillion. So that big of a move could be $300 billion either added or subtracted to the market. And obviously that has huge implications not only for shares of NVIDIA, but for the S&P 500, the NASDAQ, the SOX, all of those indexes that you were just mentioning. It has a huge weight in them. So what this company reports is really important for everyone going forward.
We're showing this brilliant chart, which is the big earnings swings that NVIDIA has gone through. I know it's something you included in your report this morning. What do you make of that, Carmen?
I mean, I think the thing is NVIDIA is looked at as the most pure play for artificial intelligence. It's one of the biggest beneficiaries of this big market theme this year. And so people are watching it. It's by and far the leader. Its chips are the most sought after. And that gives it, the utmost importance. It's basically being looked at almost as like an economic bellwether at this point. I think the other thing that's important here is that the timing for NVIDIA kind of makes it, even more paramount. It comes right at the end of earnings season. So it basically is looked at as the grand finale. There aren't a whole lot of other catalysts moving markets right now. So because of the size of this stock and its importance to this huge market theme, all eyes are really watching NVIDIA.
Well said. I mean, look at volumes across most of the benchmarks. They're lower. This is meant to be a holiday week for many on vacation, and yet they're having to stay to watch for this all-important set of numbers. What are the people you're speaking to saying about this so-called macro event? Do they think it should be?
Oh, that's a really good question. I mean, I think because it should be. We know that AI is really important. NVIDIA's results are going to reflect if the demand that people are hoping for is continuing, and if its leadership is, still out there, if that is in question or not. I think when people are one thing that people are looking for this quarter is any commentary on the Blackwell chip, if there's a delay there, how that's going. And so that's just really
rolling this all forward and showing what the future could hold for this technology and for this company that's really been at the forefront of it.
Bloomberg's Carmen Reinecke, thank you very much. Let's dial closer to the NVIDIA story, what to expect. Our next guest has covered semiconductors out of Seoul, South Korea, and out of San Francisco for Bloomberg for more than 25 years. We are joined, of course, by Bloomberg's Ian King. And I'm so glad that you're here because you know the sector and the company better than most journalists on the planet. But there is a lot of hype. Let's just go over the basics of what we expect NVIDIA to tell us when the earnings statement hits.
Yeah, I mean, the only number that people are really focused on will be the overall revenue guide. It's going to be massively up from where it was a year ago, more than 70%. But some estimates are as high as 37 billion, right, with a consensus at about 32. So there's obviously a huge room there for just how good can this be. I mean, it's not, inline is not good enough for this company and because of what it's been doing recently.
The fact that the market thinks that revenue can keep on doubling quarter on quarter, ultimately, Ian, we heard from Carmen just saying one issue is going to be Blackwell, is going to be some of those reports that maybe there was a delay in getting subsets of those chips out. What do you make of it?
Well, all I can pass along is what NVIDIA said themselves, which is nothing to see here. We still have a huge amount of demand for our existing products. And what the analysts have said in sort of reaction to the reports that we've seen is, yes, we think there is an issue. Yes, there are some glitches here. But guess what? Doesn't matter, doesn't affect the overall story. That doesn't mean that there won't be a lot of questions on the call for Jensen Huang and his leadership team today.
There are some things that are just like core to companies' coverage. Are they supply constrained and able to get their amazing product to the people that want it? What about some of their specific markets? China, historically really important. They face trade barriers in that instance. Those kind of things, what do you expect to be discussed?
Yeah, I mean, China has been largely discounted from a lot of their, the earnings estimates for this company. It's really been locked out. Can't sell its best stuff there, and it's only likely going to be able to sell less there. So that's no longer sort of front of mind for a lot of people. But, really the focus is we've put all of this gear into these data centers. Are they being used? What's the economic benefit? Can this keep going? That is the fundamental underlying concern and question for this company, and that's the kind of questions they'll be facing today.
Ian, you've been tuning into these earnings calls, presentations. Well, as Ed so eloquently put it, and aged you a bit, more than 25 years. What do you think, if we're tuning in right now and we're getting to a party, there seems to be all these watch parties going on today, what do we expect? How does it generally pan out over the course from 4:20 p.m. onwards in New York time?
I mean, the answer is in the name of the person who's going to be on the call, Jensen Huang. He has a story, a very clear story in his mind that he wants to tell, and he will tell that story regardless of the questions he gets. He's a gifted speaker, he's a gifted presenter, and he knows exactly what he wants to say. So don't expect precise answers, don't expect, details. Expect him to try to drive forward a narrative of how he sees things going. So maybe some frustration there for some folks, but he's very good at what he does.
He's the founder, Ian King. We so appreciate it. Thank you very much indeed. For more on what to expect from NVIDIA's earnings report, someone's going to be dissecting it. Daniel Pilling is with us, Senior Research Analyst over at Sands Capital. Daniel, well, what would you want to hear from Jensen, regardless of whether he actually tackles it? What is the number one piece of information you want him to give you today?
So I think the number one piece of information is confirmation for ongoing scaling law improvements. And so the idea is to say that you're throwing tens of billions of dollars at AI, and AI continues to improve. I mean, we heard Mark Zuckerberg on his earnings call saying that training their next model is going to be 10 times more compute intensive. Those types of comments are very important for the long-term story of NVIDIA. And I think actually the core focus of the call is probably going to be on some sort of theme like that, because that drives the growth of the next 1, 2, 3, 4, 5 years. So sort of are scaling laws still holding true, and what's the evolution of AI within that?
So it's quite a long-term picture you want, Daniel. And what's interesting is everyone's suddenly using this horrible turn of phrase of sort of return on AI. Does it matter what the return on that investment is if companies just have to stay in the game no matter what?
So I think some companies are already benefiting massively, right? Like Meta, for example. I mean, they've added $1 billion in market cap and started growing 20% because of AI. But I think actually for now, the question of ROI is too early. And I'll tell you why. First of all, we're going from this world where we have clusters, AI clusters of less than 100,000 going to 1 million. That means we're going to train way bigger models, way better models in the next 1 or 2 years. So we'll have to see what these models can do to really assess ROI. So that's a big question. The second question is actually, if you go back in time and look, for example, at the introduction of Microsoft Excel, every company in the world had to use it to stay competitive. I'm not sure every company in the world generated more revenue because of it. AI is probably going to be similar. So some companies will generate massive revenue growth, like Meta. Some companies, the ROI is going to be you stay competitive and within your industry, and you have to pass on the benefits to your customers. But you got to do it no matter what. And maybe it comes back to sort of your point. This is a little bit like the space race 2.0. You got to be in it to survive.
Daniel, the story so far has been about the hyperscalers plus Meta spending. That's been all of it. And I wonder to what standard you hold Jensen Huang to demonstrate that there's more than that outside of basically just 5 companies as customers.
Yes, so I think there's actually way more than that. So there's some smaller players, so-called GPU clouds, companies like CoreWeave, Lambda Labs, they're significant customers. And actually the second thing, for some of those hyperscalers, the use case is not internal, but it's actually external. So they're buying these GPUs and they're renting them out to companies that want to train some sort of new application, usually sort of venture-backed type of startups, right? And I think the key thing to look here is when do the Fortune 2000, when do the big companies start going to these clouds and start training their own models? Now, NVIDIA has a solution for that called Enterprise AI. They're trying to make it easy for them, but we have to start seeing that.
Well, Daniel, let me jump in. I mean, I'm trying to actually define what NVIDIA is. Is it a chip company? Is it a systems vendor? And then they have NVIDIA GPU Cloud. And I look at that and go, does Jensen Huang just want to be a cloud provider in his own right?
Yes. So I think NVIDIA is the world's leading system optimization company, and it starts with a chip. It continues with the software, and now they're going rack scale and cluster scale. And some of those systems have 600,000 parts. I mean, that's a big, big problem to solve. Now, I think what the company is doing, I think the idea is more to be the cloud within the cloud rather than a cloud yourself. So it's actually much more lucrative to sell to many, many parties and get a big fee out of that rather than creating your own cloud. So I do not think that NVIDIA will create their own cloud. It's actually just fine to sell through third parties like the hyperscalers and the GPU clouds, et cetera, et cetera.
Daniel, Sands Capital has $46 billion in assets under management. There has been so much zeitgeist, euphoria around this one single name that many have launched ETFs that are double leveraged the particular moves of NVIDIA. And you just see the demand, near record shares outstanding for Granite Shares 2x long NVIDIA daily ETF, for example.
What a chart.
These are, exactly, what a chart. Hat tip to Dan Curtis, we thank him. This is all about ultimately wanting to get long in whatever way you can. What are you seeing, Daniel, in terms of your exposure? How long do you get NVIDIA?
Yeah, so I mean, and we'll go over time. Maybe we'll get a bit bigger, smaller over time. But ultimately, I cannot imagine not being invested in NVIDIA over the next 5 to 10 years. And I'll tell you super simple why. It's pretty obvious that we're going to need more computing in the future, right? More computing within healthcare, drug discovery, self-driving vehicles, factory automation, enterprise AI, you name it. It's going to go up a lot. And the second thing that's fairly obvious, too, is that NVIDIA is a leading company in the world that provides compute, right? And there's a bunch of other companies doing it, too, but NVIDIA is a leader. So if you add those two together, it's very likely that NVIDIA is going to be a much bigger company over the next 5 to 10 years. Now, that doesn't mean that we don't have a down cycle at some point. It doesn't mean that we have maybe a bit of an overbuild at some point, and then we go back to, acceleration. But that's sort of how I think about it longer term. It's the beneficiary of the growth and compute needs in the world.
You acknowledge there are other AI accelerators out there, MI300X, AMD, Gaudi, Intel. To your mind, how is it that NVIDIA maintains its position as market leader?
Yes, so I think it's a little bit like that Wayne Gretzky saying of go where the puck is. So Jensen tends to be there already, and the others are following a little bit. And it's just beautiful, right? Jensen has seen this 15 years ago, so he started off with the chip. He built the software.
Don't give me that. It's beautiful. We're talking about computer hardware. Come on, Daniel.
You think the same, Ed.
I think exactly the same. Pot calling kettle black. Keep going, Daniel. Sorry.
So it's sort of this idea of like you went from one chip to a big system and you optimize that over time. But in order to do that, you need many parts, right? You need the software, you need the hardware, you need the GPU. Now they have a CPU, a networking chip, et cetera, et cetera, et cetera. And Jensen has seen this earlier than anybody else, and that continues to be the way, right? The others are catching up. They're doing M&A to do that, and it's fine, right? They're great companies. But ultimately, if you want the cheapest compute, the cheapest dollar per compute, NVIDIA is the best company to go to, and it's unlikely to change in the future. And I'll give you one example here. Imagine today we got a chip out that's double as good as NVIDIA, and they would ship it to all of us. The problem is we wouldn't know how to use it because the software isn't there to use it. Whereas with NVIDIA, they've created the entire software stack for each industry in the world, and it's actually easy to use because of that. And we would have to hire people if we wanted to do a third-party chip rather than NVIDIA, and that's sort of the secret sauce.
Daniel Pilling, a buy-side desk analyst who has just an impressive command, frankly, of the technicals at Sands Capital. Thank you very much. And a reminder, another one, an earnings exclusive with NVIDIA CEO Jensen Huang later tonight in a special edition of Bloomberg Technology. I'll be speaking to Jensen 6:30 p.m. Eastern Time, 3:30 p.m. Pacific Time. Okay, coming up, Meta is closing their augmented reality studio to prioritize the AI business. That story's next. This is Bloomberg Technology.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
The top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, where's the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
let's just take a look at Meta shares. The company will close an augmented reality studio to prioritize investments in other areas, including, of course, artificial intelligence, it would seem. For more, we're joined by Bloomberg's Asia Counts. So what was this particular studio up to, MetaSpark?
So the studio helped like third-party or independent developers create image and video filters. So for example, it's one of the things that Snapchat became really popular for. You could open up the app and maybe you're looking at a picture of yourself and you have like dog ears and a dog nose, or maybe you have on jewelry, and it's all digital. It's almost like a filter overlaid. And so Meta offered the same thing. It was almost a way to compete with Snapchat. And so that's what's going away now with this latest announcement.
It is the latest example of the refocus or deeper focus on artificial intelligence, which is the company's strategy right now.
Exactly, right? If you think about even just a couple years ago, it was all about the metaverse, right? Obviously, Facebook changed its entire name to Meta for Metaverse. So that's augmented reality. It's also virtual reality. But that was such a big focus of the company. And as we've reported and talked about before, now it's all about AI. People from those departments moved over onto AI teams. The spending has shifted. They have new AI groups that they created. Obviously, we've seen a lot of new AI products. They're spending billions of dollars. So it's really been, it feels like a huge shift. They'll tell you they're still working on the metaverse, and that's true to an extent. But right now, it's all about AI.
I mean, they lost about, what, $50 billion on AR and VR products through January this year, your story shows. So are they still going to be innovating, iterating in the hardware areas of that, Asia?
They're still spending on hardware, and they've said that. They expect to continue losing money. But again, I mean, it's just when you go on an earnings call, you hear about the metaverse, you hear about VR, but you hear a whole lot about AI. And they know that AI is really going to get investors going, right? When they started to invest heavily in the metaverse, their stock went down like 65%. I mean, it was one of their worst performances ever, I think ever, as a company. And so they know that focusing on AI, leaning into AI is what's going to get their stock going up. It's going to get investors excited. So yes, they're still spending on the metaverse, but if you think about where the priorities are and what they're doing internally, it does feel very much AI focused.
Bloomberg's Asia Counts back on Bloomberg Technology. Love it. Thank you very, very much. Now, coming up, we're going to get a look ahead to CrowdStrike's earnings report. Yeah, CrowdStrike after the bell following that global outage last month. That's next. This is Bloomberg Technology.
Names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interest, and whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Earnings season is here.
They're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs. Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
Let's talk about CrowdStrike. Following last month's global outage, the cybersecurity company is set to release their first earnings report since that incident, and it comes after the market close today. For what to expect, we're joined by Bloomberg Technology Senior Executive Editor Tom Giles, and it's weird because the quarter gone probably quite good. CrowdStrike's good at cybersecurity. Current period, they had a bit of a crisis.
You know, this should have been a great quarter for them. There are so many ransomware attacks. There's so much attention right now being focused globally on cyber threats. And CrowdStrike has a product that people want. Millions and millions of computers around the world are plugged into CrowdStrike, have CrowdStrike on it, constantly monitoring for threats. They have a very unique value proposition, and that's why so many people are into this software. But late July, they had this snafu. It was a routine upgrade, and it just went badly. And we saw the results. Businesses around the world, Delta Airlines. And so we've spoken to several analysts. I've read a lot of analyst reports. And in the aftermath of that report, of that bungled upgrade, a lot of people have put orders on hold, according to the analysts that we've talked to. They've gone out there, they've done their channel checks, and basically the view is there were fewer people placing big orders. There was a little bit of tentativeness around it. There was some concern. So Bloomberg intelligence analysts are looking at that, and they're concerned that we might see some changes in CrowdStrike's expectations for its sales forecast for the year.
I mean, Guggenheim in particular saying, look, this was a big issue and it might take longer than expected to restore reputational damage. How important, therefore, is it to hear from the executives on this? Because ultimately, it was a bit of a PR disaster as well, the way they handled it.
That's right. There were questions about how quickly, how attentively George Kurtz and the rest of the management at CrowdStrike were being in response to this. Some of the things that were said back and forth with Delta Airlines, for example, some of that aired publicly, some of the blame shifting. You know, when you go to a vendor for cybersecurity or any IT needs, you want to know that the company has your back. And so there were some people who, after this, were asking the question, does CrowdStrike have my back? Or are they going to throw me under the bus when things go wrong? And so reputationally, you want to know that somebody is not just monitoring your network, protecting you from threats. And the threats are very, very real. And CrowdStrike, again, has a very reliable product. But if it's a routine upgrade, is it going to crash my systems? And is it going to hurt my business? And that's what a lot of people are asking the question right now.
We really want to be wondering ultimately whether many people are going to be tuning in for this set of earnings. I'm sure they will be. There's going to be some micro-focused investors very attuned to what Tom Giles has just been lining out for us when it comes to CrowdStrike. But that does it for this edition of Bloomberg Technology, Ed, and actually it's all about NVIDIA for many.
Right, later tonight, a special edition of Bloomberg Technology featuring an exclusive interview with NVIDIA CEO Jensen Huang, 6:30 Eastern. This is Bloomberg Technology.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome to Bloomberg Markets. I'm Bonnie Quinn. Today on the program, all eyes on NVIDIA as the AI chip giant is set to report earnings this afternoon. But first, let's get a quick check on these markets because we did see the selling pick up a little bit of pace mid-morning. As you can see, the S&P 500 now down more than 0.5%. The NASDAQ 100, though, and there's a story behind that we'll get to in a moment, down 1.1%. So pretty big decline for the NASDAQ 100. But remember, the S&P is still up about 8% on the year. The two-year yield just changed by about 4 basis points. We do get a 5-year auction out at 1 o'clock. And then gold is about $30 off its record. So it's still up there, even though it's down about 0.7% today. It is late August, but there are still things happening. So let's get to some of those midday movers. Abigail Doolittle has details. Abigail.
Yeah, beneath the surface, Bonnie, we have quite a few decliners here for the tech space. You were mentioning that decline for the NASDAQ 100 down more than 1%. The S&P going solidly into negative territory. A big piece of it has to do with the chips. Now, yes, NVIDIA, lots of jitters ahead of earnings tonight, but take a look at Supermicro computers plunging 25% after having fallen significantly yesterday. And this plunge today, of course, comes on the delay of their 10K filing following Hindenburg's short report yesterday into all of this. This chip company had been up in a big way this year on the AI frenzy. Well, not so much. And it seems to be taking NVIDIA down with it, not in the same way at all, down 2.2%. But of course, again, earnings tonight after the bell. And the comps that they're going up against are, of course, difficult on both a year-over-year and a sequential basis. So that could factor into how the stock reacts. And then sliding right along with the chip space, we have some of the mega cap tech names too, including Microsoft and Amazon. So the sentiment overall shifting toward the risk off. However, let's take a look at what is working, because there are stocks that are working. Idiosyncratic stories on earnings. Ambarella, the chip company, defying the chip weakness, up about 11% on the day. This having to do with a really nice quarter. A guide analyst saying AI and automotive could help them. Box, the internet app software company, up 8%. They beat. Billings were strong. The guide was good, and investors liking that quarter overall. Kohl's, this is an interesting one because earlier it had been up significantly. Now it's up just 0.6%, but they put up a good quarter. Inventories are declining. There is a 36% bearish short interest on this one, so that's sort of an overall pressure, but I think folks are still hoping for that turnaround. We'll keep an eye on this one. The tape overall could be weighing on Kohl's, but one stock that is on the top of the pile is Berkshire Hathaway, so much so, in fact, that it has now reached a $1 trillion market cap for the first time ever. I really see Berkshire Hathaway in some some ways as a proxy, Vani, for the S&P 500. Something that's worth noting about Berkshire, though, currently their cash holding is 45% of the portfolio. They, of course, are not market timers, but over the last 6 to 8 months, they have been selling Apple. It's still their biggest stake, but they've been selling it. You have to wonder why they have so much cash. Yes, interest rates are high, but are there some sort of storm clouds that, again, not market timing, but are just sort of coming through in the portfolio? Either way, this stock doing very well, a $1 trillion market cap.
Yeah, they haven't been able to find opportunities for years now, right, Abigail? It's not just in the US, but Europe, Asia as well. That's Abigail Doolittle there. Thank you. We'll take a look at the overall market. John Hancock's Emily Rowland spoke earlier on Bloomberg about where we stand now as we close out August.
On one hand, the market's pricing in this soft landing scenario, which, by the way, has been helped a ton by a weaker dollar on the idea that the Fed's going to be cutting aggressively. That's actually helped cyclical assets outperform. This quarter, those risk-on asset classes have actually been the winner. But then at the same time, you have other market participants pricing in this, bad news scenario with areas like gold and long-dated treasuries outperforming. So we're in this very strange period right now where the music's still kind of playing, but everyone's not quite sure when the record might stop.
For more on these markets now, we're joined by Amanda Agati. She is Executive Vice President and Chief Investment Officer for PNC Financial Services Asset Management Group. Amanda, thank you so much for joining. Let me ask you, given that we picked up the selling mid-morning, is this market in trouble if NVIDIA doesn't impress investors later on?
Well, it's great to be with you. Thanks so much for having me. I don't want to put all my eggs in NVIDIA's basket here, but given the size of the exposure in the index and given the expectations going into tonight, it certainly is going to have a material impact one way or another on how results play out. We're not feeling particularly concerned about the results going into tonight. The SMC noise and news over the last day or so seems completely disconnected from NVIDIA, but of course, a lot of investors, I think, are kind of holding their breath to see how results turn out this evening.
Well, for those trying to make sense of this market, September generally isn't the best month for equities anyway, so if you had gone away in May, would it be prudent to maybe just stay away a little while longer?
You're right. September is not one of our favorite months from an investment perspective. We've been fully invested. We've been riding this wave for the last few years here, even in the face of potentially, a harder landing scenario that failed to materialize, now a soft landing scenario, and a couple of corrections since May here. So we're not feeling particularly defensive or bearish going into the end of the year. But I think investors really have to understand that the dynamics in the second half are going to be very different than the first. It's going to be a choppier environment. It's already been choppier since we hit the mid-year point. And so, of course, we have Fed rate cuts. We have Q3 earnings season. We have a big election coming. There's a lot of things for investors to wrestle with into the end of the year.
And so it's fascinating then that you're fully invested and have been fully invested. Can I ask where, Amanda, and where is the ballast for your portfolio?
So for us, we've been making tweaks at the margin, though staying fully invested. And it really is a theme of focusing on quality. We're really focused on quality exposures, both in equities and also in fixed income. We've also had to create a little bit of ballast, some minimum volatility exposure that was very beneficial in the swoon that we saw earlier in August. And so there are some opportunities at the margin to create some insurance and ballast in equities. Some of these names and some of these exposures haven't really participated to the same degree that, let's say, the Magnificent Seven have. And so there is a slight valuation opportunity, but nothing in equities is really table pounding cheap here. And on the fixed income side, we've been leaning away from below investment grade exposures in this environment. It's still late innings. And though we think we're going to engineer a soft landing here, we think investors aren't being paid to take on the risk in some of those areas of fixed income asset classes.
It sounds like you feel like the market is fairly well priced at this point. Why would you not be keeping a little bit of powder dry in case there is some kind of sell-off in parts of the market?
Well, we always have a little bit of cash on hand, but I think cash is the world's worst investment. It's not an investment. It just creates a little bit of optionality. So we do have some optionality sitting in portfolios, but it's not a big balance relative to history. And I think we're just kind of waiting to see how some of these key data points come in over the next couple of months, and certainly what happens with the next earnings season to take our next big move, particularly in the face of a big election that's coming. It's very hard to get on one side or the other of a binary outcome. And so that's not how we manage money. We try to stay pretty well diversified. And so going into some of these events in the second half here that are likely to create some volatility, we think the best way to play it is stay invested, but stay fairly well diversified.
Now, you say you're hewing to value for the most part. What is considered value these days?
It's a hard question to answer, actually, right? But I think from our perspective, we do see some more opportunities in the more traditional value-oriented or cyclical side of the equation. It's hard to back up the truck in aggressive growth, right? It's hard to back up the truck in technology and communication services here. We're happy to have those exposures, but I think if we're going to put capital to work, it's really looking in the more value-oriented, cyclical side of the equation. And dare I say, maybe even some of the smaller and mid-cap parts of the marketplace. It feels a little early, but if we're going to get some tailwinds from Fed rate cuts into 2025, I think there's some really interesting opportunities in those areas of equities.
Aren't we very dependent on the consumer for those kinds of areas, Amanda, or at least more dependent than we are in some of the other areas? And if that's the case, should we be concerned about a consumer that's concerned about the labor market, even if the Fed isn't all that concerned about the labor market?
Oh, absolutely. We're always concerned about the health of the consumer in good times and in bad. The consumer has been the bellwether, the tailwind for the economy for years and years, and certainly in this post-pandemic environment that we've been in. I think a key data point for us is certainly what the back-to-school season looks like. What are consumers doing in terms of their spending habits? We've seen a few missteps in the last few retail sales data points, but it's still holding up okay. It's late innings, and so we're expecting consumers to trade down. We're seeing that trade down. They're still very focused on services, but I think we'll get some more interesting, data points in terms of a gauge on the health of the consumer just in the next few weeks and months. But we think the consumer is going to hang in there. Okay, it's been a tough slog, and they're certainly getting tired, but we think the consumer is still hanging in.
Well, they certainly have some confidence. Whether they'll act on it or not is another question. Amanda, thank you so much. That is PNC's Amanda Agati. Coming up, Super Micro shares tumbling today after the company said it will not file its annual fiscal year report on time. This, of course, just after the Hindenburg research report as well. We'll bring you details next. This is Bloomberg.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon, in Sudan, and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Bloomberg Markets. I'm Vonnie Quinn. Now to a Bloomberg News exclusive. The billionaire founders of Two Sigma, John Overdeck and David Siegel, are stepping down after feuding for years. They're handing control to two new co-CEOs. Let's get the details with Bloomberg hedge fund reporter Hema Parmer, who wrote the story. So they've been feuding for years. Did something extra happen that they finally had to be told, guys, enough?
I think things had built for so long, and it got so bad that the firm actually, in a regulatory filing, disclosed that this was a material risk, that the two billionaire founders were disagreeing on so many things that it could pose a risk to investors. That sort of shows how bad it got, that a very secretive hedge fund would take such an unusual move. So then, clearly they needed to resolve this matter in some way, and they even disagreed over succession planning. So somehow the two agreed to step down and hand the reins essentially over to two new CEOs.
Yeah, we'll get to them in a moment. I could see how you would disagree on succession planning. That's a tough one, right? But did it extend to actual strategy disagreements, or was it more the day-to-day operational and maybe personal disagreements?
Yes, it was operational issues. They disagreed over how the firm should be run, the roles of some senior executives, structure of the firm, succession. But keep in mind, this is a quant fund, so essentially they set up models and they have teams of people that work under them. So the actual investment choices are not necessarily left up to the people running the firm per se, but a lot of the firm is managed, at the top in some ways. So it is a significant move. You don't want your two founding leaders of the firm feuding, and it actually did impact some employees' ability to have initiatives go underway. For talent retention, it can be a problem as well.
For sure. Now, in terms of strategy, they will still be having a say in strategy. So if you're the management committee, how do you prevent that from spilling back over into sort of day-to-day business?
Yeah, so day-to-day management is going to be handed over to the new two CEOs, but the founders do still have a sizable equity stake. They are still co-chairman of the firm, and they are the two biggest investors in the fund. So they will still have some say and influence. They will be able to oversee or guide the firm, but they may not have as much day-to-day management of the firm responsibilities because that was impacting the ability of staffers to implement the things they needed to implement. So hopefully this should streamline that better.
What is Wall Street saying about this? I mean, there are so many lessons in here for other hedge funds, right? Especially hedge funds that tried to diversify the top of the ticket, right? Maybe not just have one person. Did anyone try and advise them get over it?
So, succession planning in hedge funds has always been a struggle. You look at a lot of the very big hedge funds, a lot of the titans at the top, they struggle to figure out who should take the reins, if they even want to step down, how to restructure a firm, and how to keep the firm still as successful as it was, even with the person at the top no longer there. So you see that across the board. And in this situation, too, you see clearly there was some struggle. The two new CEOs are not typically quanty in the way you would think of someone running the top of a quant shop like these two gentlemen were. So it's definitely an interesting move, but also not an uncommon struggle in this space.
Now, the two new co-CEOs, it's interesting. One was the Chief Business Officer, Carter Lyons, and the other is going to be the former Lazard General Counsel, Scott Hoffman.
Yes.
So definitely a legal mind and maybe somebody who will get in new clients, potentially, right? The business officer, is that the reasoning behind the two co-CEOs?
It looks like there's some new blood with the new voice, some tenured staff there, a bit of a, not traditional, what we might think of as like somebody who has done PhDs in quantitative studies, which is typically to the types of people who run quant firms or start quant firms like these. But, it does shift towards a team that at least should work together, like each other, not be feuding.
What do we know about people who have left, not in management ranks, but maybe below that, or people who have joined recently?
So they've seen some departures in recent months and over the past year or so. The firm's performance has generally been okay. What's interesting is even though with all of the public feuding, with all of the news around this firm that's been going through a pretty difficult time, their redemptions have stayed essentially the same. They haven't seen a mass exodus of clients given the wake of this news, and over the past year or so, assets have stayed roughly the same, and their performance has stayed roughly on target and the same too. So you haven't seen a material impact necessarily on assets or performance.
Just out of curiosity, roughly what percentage of the assets belong to these two?
It's unclear the exact numbers, but sizable stakes.
Yeah.
They both founded the firm, basically control the firm. So in equity, they have almost, I think Overdeck has a little bit more than David Siegel, but it's sizable and it's pretty much close to split. And any big decision that the firm makes, they both need to agree on it. So you can imagine then if a firm is looking to make decisions and they don't agree, how that could impede progress.
I cannot wait to read the book when this comes out eventually. Hema, thank you so much. Great reporting. That is Bloomberg's Hema Palmer there with an exclusive. Coming up, a touchdown for private equity firms looking for a stake in NFL franchises. We'll break down the fallout from the historic owners' vote. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Up-to-the-minute political news, whenever and wherever it happens. I'm Joe Matthew at the Democratic National Convention in Chicago, and this is Bloomberg.
Much of the sports world buzzing today as industry leaders digest the results of this week's NFL vote. Team owners voting to allow private equity firms to buy stakes in their franchises. It's a move expected to attract billions in fresh capital. Boston Celtics co-owner Steve Pagliuca weighed in on the decision earlier on Bloomberg.
People are confused a little bit in that the private equity model applied to the NFL or applied to the NBA is very different. It is more, I would call it an investment fund policy rather than private equity policy. Classic private equity firms go in and buy companies and then try to grow them and grow the revenues and earnings and globalize them. That's not the case with sports investments. Sports investments will be done by specialized funds like Arctos, Dial, already in existence today. And they take limited partnership stakes, and they're limited to 10% in this NFL deal, I think 30% in aggregate in the NBA deal. And those will be passive stakes, really made to open up the market for folks that want to invest in sports properties. And they've created an asset class. So it's a little bit of a misnomer to say it's private equity buying in. It's a passive limited partnership position so that more people can have access and have capital into the booming sports business.
Joining us now for more is Randall Williams, Bloomberg News U.S. sports business reporter. He was in Minneapolis covering the vote yesterday. So, Randall, give us the skinny. Who was there that we mightn't have anticipated would be there in terms of potential owners?
Well, Clark Hunt was there. He's the leader of the Finance Committee. Jerry Jones, Josh Harris. There were a lot of NFL owners who were there present. This was a pressing issue, and the league wanted to get it done before the season starts next week.
Does this mean there are going to be a lot of new stadiums around the country over the next 5 years? Is that essentially what it is, money for stadiums?
Well, stadiums are definitely going to be a part of it. Clark Hunt said that outright, that there are going to be some owners who need this money to build a stadium. And it isn't just building them, it's renovating them as well. And then there are some owners who have secession issues, who want to shave off some of these things where their children may deal with estate taxes. There's other issues where maybe a lawsuit is happening amongst siblings.
Now, private equity, there have been, several funds sort of already, greenlit, if you like, to be bidders. But will they want their pick of the teams, and how is that going to work? Will they all be vying for the same one or two teams?
Well, the interesting thing, the way it was described to me was that this is like the pre-tampering period in the NBA. And what that is when NBA teams and the players are allowed to negotiate with each other. So that's what's going to be happening between the NFL's teams and these firms over the next couple of months. Is the firms are going to reach out to the teams are going to try to find the right fit with the firms. I think they all have a different expertise in a way that they want to go about this. So we'll find out over the next couple of months.
Well, that's just the thing, too. Is it just about money and who gives the best bid, or do these private equity funds have a say in day-to-day operations or in who gets picked, for example, or anything like that? And if not, surely it is just about money.
No, this is a capital thing. These private equity firms will have no decision-making. I saw yesterday on Twitter there were some fans who were going rabid about how this is going to ruin the NFL. But the reality is that these firms are coming in with the purpose to buy and help these teams pay for things and find solutions where they may not have them without some of this money.
And correct me if I'm wrong, but for the NBA, it can be up to 30%. Here we're talking about just 10% maximum.
Correct.
So then what happens next, given that we're in a pretty mature business here?
Sure.
I mean, the NFL has seen a lot of growth. Valuations are sky high. Can they get higher? Is there more to grow?
That's what the NFL commissioner thinks. That's what many NFL owners think. The valuations are going to continue to rise, and that this is going to help push them. The private equity part of this is going to be interesting. There are multiple league executives that I've spoken with, as well as team executives that expect a lot of deals to happen very quickly. People are ready to get some of this money and put it to use.
All right, give me the top 3 teams that you think will be going first. We need a hard knocks on this. That's what we need.
The top 3 teams. Well, the Buffalo Bills already have a stake up for sale. The Los Angeles Chargers have a stake up for sale. And our very own Jillian Tan reported that the Philadelphia Eagles, Jeffrey Lurie, is exploring a stake sale. So those are the 3. The surprises, I think, hopefully we'll be breaking those.
Exactly. Can't wait to follow this story as it progresses. Randall Williams, thank you so much. And of course, all the team that contributes to all of these stories. Let's take a quick look at where we are now as we come up towards lunchtime markets-wise. We had been selling off just a little bit in the early going, and we had chip stocks in particular dragging on the S&P and the NASDAQ 100 in particular, as you can see, continuing that trend now, down 1.4%. We have the S&P 500 down 0.75%. And as you might imagine, just a little buying in bonds. That auction coming up in about 35 minutes. That's a 5-year auction. We'll see how that's received by the market. And then, of course, we have gold still very close to records. We're about $30 off the record for gold. So correlation still in this market for risk on and risk off assets, interestingly enough. I'm seeing natural gas has changed its direction. It's up about 2% now, natural gas. And oil, we saw a little bit of a sell-off in oil earlier, even as geopolitical tensions and Libya continued to dominate the narrative there. But we're trading at $78.86 for a barrel of Brent now. Coming up, we're going to talk about Supermicrocomputer delaying a key filing. The stock falling a lot today. Stay tuned. This is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome to Bloomberg Markets. I'm Vonnie Quinn. Tech dragging U.S. stocks lower as investors await NVIDIA's earnings after the bell. Let's get a quick check on these markets now. The S&P 500 not down by as much as the NASDAQ 100, but still down about 0.7%. Lower volume, of course, at the end of August, but also jitters for sure. As you can see, the NASDAQ 100 being dragged down by the chip shares. We'll get to those in a moment. 5-year yield at 3.66 before that auction taking place in just about 30 minutes. Not many people around, but I suppose those that are interested in auctions will definitely be at their computers. And we've just broken the 2,500 mark now for gold. It is down about 1%. Don't let that fool you, though. This is not a calm market. Let's get to those midday movers now on the equity side with Abigail Doolittle.
Yeah, lots happening beneath the surface here, Vonnie. If we take a look at technology in particular, that's really dragging on that NASDAQ 100 that you were mentioning, down more than 1%, but also dragging on the S&P 500. NVIDIA in particular, the worst point drag for those indexes. Jitters ahead of earnings. Lots of volatility on the year, but the bottom line still up more than 150%. So price to perfection, it's really a case of expectations. Options suggesting there's going to be a 9 to 10% move up or down. One thing I would point out here is even though they will put up tremendous growth on an objective standpoint, when it's looked on either a sequential basis, when it's looked at it on a sequential basis, frankly, it's not going to look nearly as good. So it'll be interesting to see whether or not that weighs in. But we can see Broadcom down, Microsoft, Amazon. So a little bit of a risk off, or quite a bit of a risk off sentiment next to or around technology. If we take a look at our next earnings movers here and move to the retail space, Kohl's back in the green and solidly so, up more than 2%. They put up a nice quarter. They raised the view. Inventories are better. There is a 36% bearish short interest there. So some of their bears deciding to get out, but it's been all over the map. Chewy really up sharply higher, up about 16%. There's a 13% bearish short interest there. So it seems that while they did beat in a big way on earnings, the actual number not so big. I think it was 24 cents versus, actually, I'm going to bring that back, but they did beat on an absolute basis in a big way. The number itself not huge, but it seems as though the results in some of the categories that were strong enough to scare some of those shorts out, maybe attract buyers as well. Foot Locker, not so much. They put up the first positive comp in 5 quarters, or after 5 quarters of declines, but it wasn't enough because out of the spring bottom, this stock up more than 65%. So price to perfection, and they didn't quite deliver it. Now, if we turn to Abercrombie & Fitch, this stock having its worst day since, I believe it is 2022, down 17.8%, even with this decline, because this is another example of expectations being very high, priced to perfection, too far, too fast. Even with this decline, still up more than 55% year to date. They put up a great quarter, but investors wanted more given that move. And then, speaking of moves, Bonnie, let's take a look at the shares of Supermicro Computer, because they are in a league of their own, the worst since 2018. Over the last 2 days, down 29%. In fact, on Monday, down 8%. So over the last 3 days, down close to 40%, the better half of better portion of 40%, and having to do, of course, yesterday, a Hindenburg short report. Today, they're delaying the filing of their 10K. Investors that had scrambled to be in this stock on the AI craze now scrambling to get out as they figure out what is actually going on there.
This is so fascinating, Abigail. Thank you so much for that. Bloomberg's Abigail Doolittle. Well, I want to dig into both of those last names, but let's start with Supermicro Computer. A really, really fascinating story. It was trading above $1,200 just a few weeks ago, and as Abigail was saying, it's going to delay the filing of its annual report for the fiscal year ending the end of June. Before we start, I do want to point out that the sole communication from SMCI on this is a spokesperson telling us the company, quote, does not comment on rumors and speculation. And this was, of course, after Nate Anderson's Hindenburg put out that report because of, quote, glaring accounting red flags, among other things. Here with more on all of this now is Bloomberg's Brody Ford. So it seems like yesterday investors were, perhaps at least by the end of the day, willing to give SMCI the benefit of the doubt, or thought maybe we already knew about some of these implications of Nate Anderson's report. Today it's a different story. Very strange timing that they're suddenly today delaying this report. Is it a coincidence?
Yeah, as you said, it's interesting because they've had some well-documented and settled accounting problems in the past. So I think some investors saw the Hindenburg report and said, we knew this, so it was already priced in. And today they say they're delaying their 10K. I mean, that is not a step companies take lightly. A company of that scale delaying its financial reporting, I mean, I think we've only seen 2 other companies do that this year in the S&P 500. And so why are they doing it? They said they are doing it because they are looking into their reporting processes. And crucially, they seem to leave open the door the possibility of some financial restatements. They say we are not changing our financials. They're not saying we do not plan to, which you see that language in some other reports like this.
For sure. There are also the questions surrounding doing business with sanctioned entities.
Yeah.
What more do we know about that?
Yeah, in that case, we don't know a ton outside of the Hindenburg report. That was not a huge focus of the delayed financials today. The Hindenburg report alleges more issues around recognizing revenue a little earlier than you're supposed to. The phrase you hear sometimes is channel stuffing, where you send things out to partners that aren't really able to sell it yet. The delay today, they didn't acknowledge any of those allegations, but they said, we're looking into our internal processes, which can let the investor mind wander, as we're seeing with the numbers today.
Absolutely. Now, is it possible that in the next few days they'll say, okay, we changed a little bit of the language, we ran it by legal, and we're good to go?
It's possible. Again, if it was a very minor thing, companies really hate delaying their annual forecasts. They hate delaying their annual filings. I was covering a company earlier this year that delayed their 10K, and what happened was they fired their CFO and activist investors got involved. Often, when you see some smoke like this, you're going to end up finding some fire.
They also have really just announced in the last quarter a stock split coming up, right?
Yep.
And they're getting back into the NASDAQ. So it's really bad time for this to be happening for them. Not that there is a good time.
There might be that phrase, suffering from success, right? I mean, they have quintupled in value over the last 2 years.
Not
and
anymore.
So I think they're still like
They're
4x
still up about 45%,
right?
yeah.
I mean, over the last, since beginning of 23, beginning of ChatGPT mania, I mean, it's still on the long scale success story, and that's why investors are so ready to kind of poke little holes if they see any errors here.
Well, and that's the other thing. I mean, it's a server company, right? I mean, it's pretty simple. I mean, not that I would be able to run it, but it sounds like a pretty simple, pretty easy to run. And if they have a lot of market share already, which they have from some of the big guns, or they had at least from several of the big guns, I mean, shouldn't this be a pretty easy company to keep rolling?
Well, you got competition now. You got Dell, you got HPE. As you said, building a server isn't the most complicated thing in the whole world. As long as you're getting chips from NVIDIA and you got a good labor pool to build them, it's something that, you know, your competitive moat might not be incredibly strong, right? We've seen squabbles for, who is going to sell servers to Elon Musk's companies, for example? Who's going to sell servers to Meta? These kind of giant companies that require crazy number of GPU-based servers.
Well, the stock has tanked more than 25% so far today. Could Jensen Huang say something about this, or will he stay well away?
Interestingly, he has more spoken about Dell. It's generally thought that Dell and Supermicro are the kind of biggest server partners of NVIDIA. They've traditionally spoken more about, he said, Michael Dell is the greatest, maybe that was a bit of forward thinking on his part. Maybe he saw some of these issues. It's hard to say. I would be surprised if we saw more from him tonight about Supermicro.
It's another win for Hindenburg, right? I mean, so far, yesterday investors were not willing
I'm sure they're doing cartwheels right now.
Bet they are. All right, Brody, thank you so much. That is Bloomberg's Brody Ford.
Thank you.
Turning now to Abercrombie & Fitch, which boosted its full-year forecast and beat on earnings per share pretty substantially, but the stock down as investors raise the bar for the retailer's outlook. For more, let's bring in Bloomberg's Mary Ross Gilbert. So, Mary, I looked at the results and I thought, wow, and then I looked at the stock reaction and I thought, what do investors want?
Well, actually, sometimes that can happen, and then, days later, you could see the stock reverse, or maybe months later. In this case, as you pointed out, they've had a nice run up this year, still up, over 50%. But if you look back over the last couple of years, you're talking about many multiples up. And that reflects the strength of the brand. But if you also look at consensus expectations going forward, they're looking at more tepid increase in sales, because how can you keep posting double-digit increases on double-digit increases? Which, of course, in the second quarter, we saw comp sales up 18%, which was pretty strong. And that was led by Abercrombie up 21%, Hollister up 15%. But this company is very in touch with their core millennial customer on the Abercrombie side, Gen Z on the Hollister side. And so they're constantly expanding categories and assortments with very attractive and compelling product. Every week they have drops, whether it's a Western aesthetic, the new NFL lineup that just came out now. And then also they'll have, across their wearing occasions, we hear a lot about the wedding shop, best dressed guest, and also even, for the office, they even have some silhouettes for that, and even cute Chanel-ish type looking, short knit dresses. So they really are catering to their consumer. They have a strong activewear business that's growing as well. And they really, I think Fran talked about how they test and learn and expand, and that's what you're seeing from them. And we think they can continue to do this. So we think they're showing strength.
Have they, Mary, put to bed all of the problematic issues of the past? And we've seen a real fallout across retailers, everybody from Brandy Melville to Reformation. So many of the retailers just couldn't stop walking into glass, right? Of their own making, these were problems. Has Abercrombie overcome all of that?
For the most part, they have. I mean, it's a completely different retailer than the retailer we knew of years past. So this transformation is very real, and they're really catering to a different consumer, and it's that millennial. And the other key point to note is that their consumer base for both brands, they're from household incomes that make $100,000 to $150,000. So they're in a much stronger position than some of the retailers that are catering to a lower income. And that was sort of confirmed yesterday when Nordstrom came out with their numbers, and their full-line stores showed a modest increase, almost a 1% increase in comp sales, but very strong sell-through of regular price assortments there. And they're constantly bringing in new brands within that. Within Nordstrom, and of course they have the fast-growing Rack, which is in the off-price segment, and that spans the income demographics there, including the high end. So I think we're seeing strength in the high end, and we're seeing weakness in that sort of lower to middle and middle-income consumer. And that's where we're seeing, the tough results, for example, out of Kohl's today. Even though Kohl's beat on the bottom line and raised their EPS guidance for the full year, their sales came in short. Actually, worse than expected. They were down 5% on a comp basis, and analysts were expecting down 2.5%. They need to redo their apparel assortments because their core apparel and shoes underperformed, but they had strong performance with Sephora, bringing in new customers, and those comp sales up low teens there. So they are showing things that are working, but more work to do.
The retail quarter has been fascinating. It always is. You never know who's going to outperform and underperform, and it's not over. We still have Gap and the likes of Best Buy as well to come. Mary Ross Gilbert, thank you so much.
Thank you.
Coming up, we're going to concentrate more on NVIDIA earnings, which could shape up to trigger a market event. We'll discuss next exactly what the street is watching for. This is Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
The Fed bids for 5-year notes totaling $5.6 billion.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Definitely see some sharp deceleration in terms of the data center capex spend. I mean, we're looking at about 35 to 40% growth here in calendar 2024 from kind of the big five spenders out there. We know who they are in terms of the hyperscalers, the big four plus Oracle are the names we kind of look at.
That was CFRA's Angela Zeno speaking about NVIDIA's capex spending. Time now for Stock of the Hour. NVIDIA expected to report earnings today with investors anticipating strong results. Either way, though, the results and guidance might constitute a market event. Joining us with more is KeyBank Capital Markets Managing Director John Vinn. He has an overweight rating on the shares, as do so many analysts, John. It's really quite phenomenal. Analysts are still very, very bullish this name. We need an update on the Blackwell chip delay. What will Jensen Huang be able to say to reassure markets? Will words be enough?
I think they're obviously going to be questioned quite a bit on your earnings call. I do not expect that NVIDIA is going to explicitly talk about the timing of Blackwell. We think there's roughly about a modest delay, about 3 months. But where I think they'll get pushed if they don't respond to specific questions on Blackwells is what they're going to say about kind of the Q4 outlook. Obviously, they're going to report July quarter. They're going to guide to the October quarter. Blackwell isn't really supposed to ship until the end of the October quarter, so it should not have any sort of impact on near-term results. But if NVIDIA can come out and say that they're still expecting strong growth in Q4, that should alleviate some concerns about the impact of this Blackwell delay.
Another concern has been about margins. So we saw not a great reaction to earnings last time around, because even though it beat and it was doing really, really well, margins were not, as much as Wall Street would have liked to have seen. What can NVIDIA do to compress margins more?
We actually think that margins are going to be biased to the upside in the near term. So what happens with NVIDIA is when they launch a new GPU family, let's say Blackwell, in the early part of the ramp, the margins are just not optimized because they're going through the maturity yield curve and they're optimizing on manufacturing processes. But here, they're going to be shipping Hopper GPUs, which are kind of late cycle. So the margin should actually be very well optimized here. So I actually think margins are going to come through in flying colors.
The forward multiple has compressed, right? We were at 60 at one point. We're now at 38. What is fair value? Are we still sort of involved in price discovery here?
We've got NVIDIA doing $5.16 in EPS next year, which, means the stock's trading at kind of a 25 multiple historically. NVIDIA's traded at 35 to 40 times. The broader group trades in kind of the low to mid 20s. I think using kind of a 35 to 40 multiple is the right multiple for one of the best positioned stocks to be leveraged to generative AI, which gets us to our $180 price target here.
Yeah, and that's also stunning. 66 buys, just 8 holds, and no sells among the analyst community. And more than a third of the buys are targeting a stock price above $150. Obviously, you're among them. What would cause analysts to have to recalibrate?
I mean, I think there's a number of potential risks out on the horizon, right? One is right now they've got dominant share. It's 90% plus. Hyperscalers.
So in 10 minutes time now at the top of the hour, the US is due to sell $70 billion in 5-year notes. So the prior bid to cover was 2.4 and the prior high yield was 4.121%. So Treasury's early price action mostly following wider moves across the Bunds, which continue to outperform over the US morning session. Yields on US notes are marginally cheaper across the curve, although remain within touching distance of yesterday's closing levels ahead of this 5-year note sale. So, given the recent decline in yields and fair valuations, JP Morgan strategists see the auction as needing a modest concession from yesterday's closing levels in order to be digested smoothly. We'll also make note of the latest CFTC positioning data, which shows that speculators were net short 1.7 million 5-year note futures, biggest on record and a possible source of covering demand at the auction.
For sure, election risk out there. John, thank you so much. NVIDIA has beaten 5 quarters in a row now. Let's see how long it can continue the trend. John Vinn there over at KeyBank Capital Markets. And make sure you stay tuned for Bloomberg's extensive reporting on NVIDIA's results today, including an exclusive live interview with CEO Jensen Huang. That's set to air 6:30 p.m. New York time. It's a Bloomberg Technology special, and you won't want to miss it. Coming up here on September 1st, Texas will open its new business courts. That's a move the state hopes will draw companies from Delaware. Will it work, though? We'll discuss next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
This is Bloomberg Markets. I'm Vonnie Quinn. Can Texas unseat Delaware as a hub for business-friendly courts? Well, after Elon Musk's Tesla compensation package was turned down by the Delaware Chancery Court, a massive effort has been underway to build a similar system in Texas, and it's due to open September 1st. For more, we're joined by Bloomberg's Julie Fine. So, Julie, it seems like it's all because Elon Musk wants his pay package reinstated, right? But this has been a little bit of an impetus for a while now in Texas. Tell us more.
This has been in the works for a while. Obviously, Elon Musk coming here brings much more attention to it. But listen, Texas considers itself to be a very business-friendly state. Having these courts, is almost like a marketing tool, saying you can incorporate here. We will now have our own business court system, and you can develop it in certain ways. For instance, it's the governor right now who is appointing the judges to these business courts. So it certainly gives businesses an option to incorporate here and take care of major business disputes in this state.
You just gave away one of the challenges, though. Administrative people, clerks, judges, they're all only getting appointed right now, even as Texas has 5 business districts, just sort of announced these 5 business districts. If you were a company or a chief legal officer, why would you give the advice to go to Texas when Delaware is right there with all of the experience, the speed?
Well, I think there may be businesses that feel that it will be more business friendly in Texas. You do see private equity firms here coming to use the federal courts because the appeals are in the 5th district, and that is known as one of the most conservative in the country. So I think in that respect, you may see some come here. However, there are some major differences that will have to be ironed out. For instance, in Delaware, when you look at the court officers, they are coming from some major
Just less than
legal
5 minutes away now from the top of the hour. The US is due to sell $70 billion in 5-year notes. Prior bid cover of 2.4, prior high yield of 4.121%.
About these courts, and they will have to show some success early on. Now, currently, right now, they don't have some staff. They are working out of state courtrooms. There are no specific buildings right now, so there's certainly a long way to go.
Yes.
But I think when it comes to Texas, which is very business friendly, this is another way for the state to point out that.
Well, Greg Abbott, the governor there, is going to do his level best. Our thanks to you, Bloomberg's Julie Fine. A great story, and we will continue to watch it. Let's take a quick look at these markets now as we head towards that 1 o'clock hour. We are off our lows, so the NASDAQ 100 is down about 1%. A lower volume day, though, of course. Do stay tuned. That does it for Bloomberg Markets. This is Bloomberg.
top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. I need a basic technology adoption.
Nobody covers business like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg
Shortly
TV.
expecting the results of the US 5-year note auction. The pre-sale when issued yield comes at the top of the hour. Auction results follow a couple of minutes after this.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lines covering the presidential campaign this hour as Kamala Harris and Tim Walz kick off their bus tour of the swing state of Georgia. We'll get the latest from the trail with Bloomberg's Riley Griffin, as well as our political panel, Jeannie Shanzano and Maura Gillespie. Plus, we have an important conversation coming up this hour with the co-chair
When
of
issued
the
5-year
RNC,
yield
Laura Trump.
3.642% ahead of the auction. So again, the Treasury when issued 5-year yield 3.642 ahead of the $70 billion
We also
auction.
have to talk about how her entrance to the race has changed the strategy for Trump and the Republican Party more broadly. It's a lot to cover this hour, but we begin, as always, with a check on the markets on what is NVIDIA earnings day. It's coming up after the bell, so let's take a look at what's going on in the live trading. Amy Morris has a look for us. Hey, Amy.
Hey, Kaylee, the earnings report that Wall Street has been waiting for is now just a few hours away. NVIDIA reporting after the closing bell. Analysts expect a more than 70% boost in revenue growth, and that could mean some volatility. Options imply a 10% share price swing after earnings drop. Stay with Bloomberg Radio for an NVIDIA special featuring an exclusive interview with CEO Jensen Huang. He joins Ed Ludlow on a special edition of Bloomberg Technology that is this evening at 6:30 Wall Street time on Bloomberg Radio and television. Berkshire Hathaway, meanwhile, is now the first U.S. company outside of the tech sector to surpass $1 trillion in market value. Shares of Warren Buffett's conglomerate rose as much as 0.8% to push its market capitalization above the $1 trillion mark for the very first time. The stock has rallied this year on strong insurance results and economic optimism. Berkshire Hathaway joins the ranks of a small group cracking that $1 trillion milestone, dominated by technology giants like Alphabet, Meta, and NVIDIA. We're also seeing red across the screen as we await those NVIDIA earnings. We check markets for you all day here at Bloomberg. S&P 500 down 0.5%, NASDAQ is down 1%, and the Dow is down 0.3%. The 10-year Treasury yield at 3.83%, and the 2-year yield at 3.87%. That is a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris with a look at the markets. Thank you so much. Welcome back. I am Kaylee Lines here on Bloomberg TV and radio as we cover the beginning of the bus tour of Georgia for the Democratic ticket. Kamala Harris and Tim Walz targeting specifically southern rural areas.
2.41, 2.41, high yield, 3.645%, 3.645%.
Is doing better than Joe Biden was.
The US sells $70 billion in 5-year notes and awards 21.29% of bids at high.
But that is within the margin of
Primary
error.
dealers take 13.17%, direct 16.29%, and indirect 70.54%.
Studio. So, Riley, I know you've been with Donald Trump this week. I do want to just begin, though, with what the Democratic ticket is doing. The idea that they're devoting 2 full days and resources to Georgia, a state that seemed like it was Donald Trump's to lose just 5 weeks ago. What does that signal about the odds they think they have down south?
They certainly think Georgia is at play. This 2-day bus tour, which will weave through rural communities and land in Savannah, as you mentioned, is a sign that this is a state they think they have the potential to win. And ironically, Kamala Harris is campaigning there this week. As you mentioned, Trump is currently up in the polls in Georgia. Trump is in Michigan, where Kamala is perceived to have an edge. So they are flip-flopping. They're in each other's potential battleground state.
Well, and I know you were with Trump in Michigan earlier this week, where he was focusing specifically on foreign policy, the Afghanistan withdrawal, which of course we're marking 3 years since this week, blaming Harris effectively for how that went. Interesting to take a foreign policy message to Michigan.
Yeah, well, notably, he was speaking before a crowd of National Guard members. It was the National Guard Association's annual meeting. So he had a crowd of troops, and this speech resonated with them. We saw a lot of people in the crowd cheering, standing, laughing. And that message about Afghanistan that he projected onto Harris extended to other foreign policy matters. He talked about a perceived U.S. weakness in the rest of the world. He talked about foreign policy with China. He went so far as to associate the withdrawal from Afghanistan with October 7th in Israel, which is a big leap, but one that resonated with the crowd.
Yeah, it's something I've been asking a lot of Middle East experts about this week, whether there is some blame that should be cast on that withdrawal. It seems to get mixed reviews. A lot of people have indicated that these things are very separate, but it's still a good point. And of course, J.D. Vance himself is going to be in a number of other swing states today. The other parts of the blue wall, Pennsylvania, and then later on, Wisconsin. This is a pretty frenetic pace of campaigning we're starting to see from the Republican ticket after they were, well, of course, Vance hasn't always been on it, but Donald Trump himself wasn't out and about on this many weekdays during the campaign just a month ago.
You can see that they are responding to the momentum of the Harris-Walz campaign in the wake of the DNC, and certainly in anticipation of the closely watched debate that is forthcoming on September 10th. So a lot of momentum to build. There's a really short runway to Election Day, but not just Election Day. Early ballots will start to be cast in coming weeks. So the game has started today, and they are moving. You mentioned that Trump is in Michigan. He will also have a event in Potterville, Michigan, a very small town of 3,000 people this coming Thursday. And so the rural vote is at play, the suburban vote is at play, the youth vote is at play, and specifically in these 7 swing states,
5-year U.S. Treasury yields move higher after $70 billion auction, last up 0.8 basis points to 3.665%.
Generations. Swifties for Kamala has begun. Without Taylor Swift, though. This isn't Taylor leading the charge, but Swifties are backing Harris up.
Yes, last night we saw the first ever event for Swifties for Kamala. The campaign manager is actually someone who formerly ran John Fetterman's campaign in Pennsylvania. So these young digital strategists are seizing the Swift momentum, despite the fact that she didn't come out at the DNC like many of us hoped. And Trump himself is doing that too. He posted a AI-generated picture of Taylor Swift backing him. So both parties would no doubt love that support were she one day to formally make a commitment to one or the other. But Swifties right now are coming out on their own, and Elizabeth Warren was on that call. So you're seeing Democrats join in.
Is Elizabeth Warren a Swiftie?
She identified as a Swiftie. Everybody on the call had to name their favorite song. Ed Markey was on the call. So you saw a lot of Dems coming and letting the people know which Swift song was theirs.
Which one was Elizabeth Warren's?
Oh, I can't remember. You're testing me. Which one is yours?
All too well. 10-minute version, obviously. That is the only right answer for anyone considering. But it does speak to this point that she has been able to do something with social media with her campaign that we weren't necessarily seeing with Joe Biden. And he raised the debate that's going to happen in a couple weeks. It's on September 10th. And it does raise the question of how much of that is going to be the people who will watch it live versus the moments that could go viral, that will be recirculated on TikTok or wherever social platform people find themselves in the aftermath.
Ideally, either candidate wants to reach both the audience that is tuning into cable news and the audience that is finding these clippable moments on TikTok. And we saw at the DNC 200 influencers get credentials to come and snap those little moments. It's, in fact, something that the Harris-Walz campaign has come under a little bit of criticism from because they haven't done big-scale press interviews. But we actually get one of those this Thursday on CNN with Dana Bash. Both Vice President Harris and Governor Tim Walz will be joining CNN for that first kind of reveal. So another highly watched moment before the debate.
And of course, that interview being taped in Georgia, where the ticket is today. Bloomberg's Riley Griffin, thank you so much covering the campaign trail for us as we get closer and closer to that vote in November. Appreciate it. And of course, as we get closer to that vote, and talk more about these candidates, it is worth pointing out that one of the candidates is still facing some legal difficulty, and there was a development in that regard for Donald Trump yesterday. He was hit with a new superseding indictment from Special Counsel Jack Smith in the 2020 election interference case here in Washington. It still charges him with the same 4 crimes. He still is the sole defendant, and yet it removes some things that could have been classified as official acts in the aftermath of the Supreme Court's decision in July that found Donald Trump is at least partially immune from official acts taken as president. I spoke more about this new indictment last night with Nick Ackerman, former Watergate prosecutor, and this is how he explained what's really different here.
What the government has done here is, rather than take the initial indictment and mark it up before the judge, because Judge Chutkan has to decide which acts that are charged in here were official acts or which were unofficial acts. Official acts would presumably be immune. So what the government has done is they've basically redone the indictment, taken out that entire section on the Department of Justice, and that Jeffrey Clark would be made the Attorney General because he was going to send a phony letter to the various state legislatures saying that there was fraud in the election when there was no such fraud. But what they've done is they've alleged everything else in terms of acts that were not official.
That was Nick Ackerman last night. And we turn now to another legal expert. Dave Ehrenberg is with me. He is the state attorney in Palm Beach County. Welcome back to Bloomberg TV and Radio, Dave. It's been a while. We weren't necessarily thinking that there would be something new in Trump legal world necessarily yesterday, but this did drop in our laps. And I think the question all of us had immediately is, what really does this change about the likelihood that Donald Trump could actually be found guilty or innocent of these crimes, whether or not it goes to trial before the election? Does that all remain the same, even if it does try to bring this prosecution forward in some day? Does it not necessarily accelerate the way in which it does?
Kaylee, good to be back with you. This means that the cases are going forward, but they're not going to happen before the election. There will be no trial of Donald Trump before the election, except there could be a mini trial in Washington, D.C. in the election interference case. It is possible that Jack Smith pushes for this hearing where Mike Pence testifies and you find out more details about Trump's involvement before and after January 6th, whether they were official acts or unofficial acts. It would be up to Judge Chutkan. There have been reports recently that Jack Smith and the Department of Justice did not want to go forward with the mini trial, but we haven't heard anything from Jack Smith yet. So that's still a possibility. But even though these filings took place, they do not mean that these cases are going to be heard before the election. They will be happening after the election. It just means that if Trump loses the election, it will be game on for him in court.
Well, just because you raised the former Vice President Mike Pence, Dave, I do wonder what you think about the fact that he is still included in this indictment for being vice president, communications that the president was having with his vice president at the time. The vice president, of course, having that ceremonial role in the certification of the election. Is that actually something that could be damaging to Jack Smith's case, the fact that that was not removed from this new superseding indictment?
Well, Jack Smith decided to go right up to the line because that was a gray area. The Supreme Court said, yeah, we're going to give it a presumption of immunity because talking to your vice president is an official act. On the other hand, if Mike Pence is acting as the president of the Senate, then it doesn't mean that's an official act. It may not be an official act. Plus, Trump allegedly was acting as an office seeker, not an office holder, someone who was trying to overturn the election and trying to convince Mike Pence as the president of the Senate, not as the vice president, to throw out the ballot. So I see why Jack Smith did what he did. I think he's right to do it, but it shows you that Jack Smith decided to err on the side of moving forward with the prosecution, of prosecuting Trump, rather than deferring to the Supreme Court's broad immunity decision and saying, we're going to take steps back. No, he's going right up to that line. I think it's a good move.
Well, on the subject of the Supreme Court's immunity decision, we got a bit more on that from one of the justices who, of course, dissented, Ketanji Brown Jackson. It sat for an interview on CBS and was talking about this case. And she basically just kind of talked about her concerns regarding immunity. Take a listen to what she said, Dave, and I'll have more for you.
I was concerned about a system that appeared to provide immunity for one individual under one set of circumstances, when we have a criminal justice system that had ordinarily treated everyone the same. I think there are legal issues that arise out of the political process, and so the Supreme Court has to be prepared to respond if that should be necessary.
And I wonder, Dave, if you ultimately think this question is coming back to Justice Ketanji Brown Jackson and her other colleagues on the court. Is that ultimately where this goes? Could we see once again Trump appealing this new indictment and the court being put back in the position where it has to delineate what is an official and unofficial action in a way that it did not in its initial ruling in July?
This is definitely heading back to the Supreme Court, because the Supreme Court's decision was broad, but it was also vague. It was confusing. And you have these standards that need to be fleshed out. So what's going to happen is that Jack Smith refiled the indictment. He trimmed off the fat. You know, they're not going to go after the communications with the Department of Justice and Jeff Clark and the attempts to remove the acting attorney general, but everything else is a go. And then Trump is going to say, no, it should not be a go. You shouldn't be able to prosecute me for talking to Mike Pence, for example. It'll get appealed. It'll go all the way up to the Supreme Court, and they're going to have to give more meat on the bones of their decision. I thought the decision that Justice Roberts put out was way beyond the pale. It was being confusing. It was unprecedented. It gave the executive branch way more power than ever before in our country's history. So anything that provides a little more detail, a little more guidance, is a good thing. And yes, it is headed back up to the Supreme Court at some point.
Shortly expecting the results of the Fed reverse repo operation.
Well, on the subject of delays in the cases relating to former President Donald Trump, we of course saw the case that's in your neck of the woods, Dave, the documents case in Florida, delayed until ultimately it was outright dismissed earlier this summer by Judge Eileen Cannon, who of course was a Trump appointee. We did hear from Jack Smith also this week in essentially trying to get that case to be revived and to move forward, filing essentially an appeal that says, hey, I was constitutionally appointed. That's obviously not what Judge Cannon found in this case. Do you expect he will be successful? Will this be a case that is able to move forward?
Yes, the 11th Circuit Court of Appeal, a conservative circuit, will overturn Judge Cannon. I feel very confident in that because Judge Cannon's ruling flies in the face of all legal precedent. There have been other courts repeatedly that have allowed the special counsel to continue. That now, this is the first time a judge has ever said
74 counterparties take $388.89 billion at the Fed reverse repo operation.
On the campaign trail saying Jack Smith is just a tool for Merrick Garland and Joe Biden and the politicization of the DOJ. It's the opposite argument that his lawyers made in court. And in the end, Judge Cannon went along in a decision that I think certainly will be reversed by the 11th Circuit. I then think the Supreme Court may weigh in. Now, I can't say what the Supreme Court's going to do because they seem to find new ways to bring out extremist opinions. And so we'll see if they then create new rules. But I think for sure she will be overturned by the 11th Circuit. Then the question is, will she be removed from the case? Jack Smith did not ask for her to be removed from the case. I think it's unlikely, but the 11th Circuit could on its own say enough. You have been reversed on the special master in this case twice, and now you're reversed here. Let's find a new judge. It's possible, but probably unlikely.
And what's the timeline for all of this to play out? Dave, I'm guessing this also not likely to be something resolved prior to November.
Yeah, Jack Smith seems to have taken his foot off the gas, knowing that this is never going to be tried before the election. And I think the 11th Circuit also realizes that there's no urgency in having to do this. So this will be months, and then they'll come out with a ruling, and then it will be appealed to the Supreme Court. So the one thing that Trump is successful at is delay. Win or lose, the delays are going to happen. And if he is elected president again, then it will pay off for him because his new attorney general will certainly drop every federal case against him. He'll be left with the New York and the Georgia cases, but then it'll be a constitutional crisis as to what happens when you have a president facing a criminal trial in Georgia in a state case while he's sitting in the White House. We've never been down this road before.
Yeah, it's incredible to consider the possibility. Dave Ehrenberg, always great to have you here on Balance of Power. Appreciate your time. Dave Ehrenberg, of course, is Palm Beach County's state attorney. We'll have much more still ahead on the program. We'll assemble our political panel, Jeannie Shanzano and Morgan Gillespie, next on Bloomberg TV and radio.
The top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, where's the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Earnings season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
It's 1:21 on Wall Street. I'm Amy Morris. Wall Street is watching NVIDIA. The almost $3 trillion rally in NVIDIA shares over the past 2 years virtually rewired the stock market, giving the artificial intelligence chip-making giant an outsized influence on equity indexes. Now with NVIDIA's earnings scheduled to arrive after the market close, traders are glued to their monitors in preparation for any wild swings. Want you to stay with Bloomberg Radio for an NVIDIA special featuring an exclusive interview with CEO Jensen Huang. He joins Ed Ludlow on a special edition of Bloomberg Technology. That's this evening, 6:30 Wall Street time on Bloomberg Radio and television. We check markets for you all day long at Bloomberg. The S&P 500 is down 0.7%. NASDAQ down 1%, and the Dow down 0.5%. 10-year Treasury yield at 3.83% and the 2-year yield at 3.86%. That's your Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lyons.
All right, Amy Morris with a look at the markets here on Bloomberg TV and radio. Thank you so much. I'm Kaylee Lyons with a look at the campaign trail. As we've told you, Kamala Harris and Tim Walz begin today a 2-day bus tour of Georgia, targeting specifically rural areas of the states. The strategy here, or this state in particular, the strategy may be trying to drive out voters in these areas that they don't necessarily think they could win, but in where they could potentially reduce the margins, take their total vote count statewide a bit higher, and potentially get the 16 electoral college votes that come with it. So for more on this strategy, our political panel is with me, Jeannie Shanzano, Senior Democracy Fellow at the Center for the Study of the Presidency and Congress, and Maura Gillespie, Founder and Principal at Blue Stack Strategies, our Republican and Democratic panelists today, respectively. Jeannie, first to you, just on this notion that they aren't going, although they will be in Savannah for a rally tomorrow to wrap this thing up. They're not necessarily targeting the cities, the urban areas in which the highest concentration usually of Democratic voters is on this tour. They're going instead to areas that you wouldn't necessarily think they stand a chance of winning. Is this a winning strategy, though? Try to get the vote count at least higher in some of these other parts of the state?
It is. And you know, I think it's a strategy that Democrats have finally learned. Joe Biden was the first Democrat to win Georgia in 28 years. And Raphael Warnock, John Ossoff, when they won the state as Democrats, they showed how to do it, which was not act as if Atlanta is Georgia. There are Democrats in those rural areas. And to your point, while they may not win them, they win the entire county, they can cut down on the Republicans' lead in those areas and make up for votes in other parts of the state. So that's what they're hoping to do. It's the same thing they're trying to do in Pennsylvania as well. Philadelphia is not Pennsylvania. We've got to hit those rural areas. So it's a very, very smart strategy. They're also going to force Donald Trump to keep going back there because Georgia is something of a must-win for Republicans to reach 270.
Well, so Maura, that's the other side of this coin, right? The more places where Harris and Walz try to compete, the more places they force Trump and Vance to do the same, right?
Absolutely. And to that point, Georgia being so important for Republicans, it's also worth noting that the, kind of beef that's been happening largely because of Donald Trump lashing out against Governor Brian Kemp, who is pretty popular, that doesn't bode well for Donald Trump and J.D. Vance. But I think that the relationship that down-ballot Republicans have with Governor Brian Kemp and their favorable, respect for him, that they need to focus on that. Trump should be really trying to repair that relationship because he needs Governor Kemp to do well in Georgia. But I think what we are seeing with Harris and Walz and this tactic that Jeannie, referred to, it's meeting the voters where they are, understanding the long game, the big picture, and trying to meet them where they are and not necessarily just focusing on the cities. That's an important strategy and one that Republicans, shouldn't take for granted, a state like Georgia, that it needs to be sought after.
Well, so should Republicans also then be spending time in cities they don't necessarily think they can win outright, Maura? Does this not go both ways?
Absolutely. And you saw that already this year. You saw Donald Trump campaigning places where, especially like in New York and places out in California and places where, you wouldn't necessarily think that Republicans even stood a chance. But he did a similar tactic where he was meeting the voters where they were and seeing, if there was a group of voters to talk to that were receptive to his message or receptive to, in a case of Trump, receptive to, kind of the fear that he is reminding them that stands to be real if at the time Biden-Harris administration were to win again. But now with Harris at the top of the ticket, he's going to continue that messaging and reminding folks who maybe aren't doing so well in this current economy and are worried about their safety and security. He can reach voters in urban areas and talk about safety and security. I think that's a message that Republicans, again, as a party, will continue to echo.
Well, and I want to focus more on the state of Georgia specifically for a moment longer, Jeannie, specifically the election rules that will govern Georgia come November when the votes are actually being counted. Earlier this month, the Georgia State Election Board voted to make it easier for county officials to delay or refuse the certification of election results. This is, of course, 4 years after 2020, in which the 12,000 vote margin was something of an issue for Donald Trump. It raised the, of course, infamous phone call. That's where the beef with Georgia Republican leadership, including Brian Kemp, that Maura was referencing, did come from. How concerned should we be about these new rules in Georgia and what they could mean ultimately for us understanding who actually factually won the state in November?
Yeah, I'm so glad you raised this, because I think for as much as we talk about what Harris and Trump and Vance and Waltz are doing out on the campaign trail, the real action is going on at the state and local level in these boards, you know, with these election administrators. And we've already heard Donald Trump repeatedly laying the groundwork that if he doesn't win this election outright, something was amiss. And you see Democrats now taking this change that you mentioned with this board in Georgia to court to try to stop this change in the way that these votes are certified. This is very important, and we're seeing it in all of these swing states, or many of them, where these fights are ongoing. And of course, we also know that we're going to have a lot of election observers on the ground on election day, and all of this could mean that come election day and election night, when we wake up the next morning, or maybe don't go to sleep at all, we may not know who won, because so much of this may be fought out in a county and state by state basis, where these elections are obviously close and where we have rules changing, unclear, and really you have a lot of power given to local election administrators, in this case in Georgia.
Maura, does this risk being a strategy that backfires for Republicans, for Donald Trump, who already is questioning whether he'll accept the election results if he doesn't think it's fair? Is that something that could act as a deterrent for his supporters to go out and actually vote if they aren't necessarily sure that they can count on the results?
I mean, if you're a kid and you're playing a game with, playing a game with your friend, and they're constantly saying, you're cheating, I really won. That gets old after a while. And honestly, it's annoying. And I think at some point, voters are just going to be very turned off by the fact that he's constantly, before the election has even happened, he's already, as Jeannie pointed out, he's already saying that unless I win, if I don't win, somebody cheated. So what does that mean? That it's only if he wins that things are great and our system is perfect? That doesn't, I mean, if you're really thinking about this rationally, that's a terrible message to send out to the voters, that their vote doesn't matter unless he wins. That's ridiculous. And that's not how our system should ever work. I do agree that I think that this race is going to be very, very close, especially in neighboring states like North Carolina. It's going to be very, very close. The margin is very small there, and it has been for a number of years for the presidential. And so this is going to be one of those times where we have to rise above the fray of what Donald Trump is doing, and really hope that we are, a nation that can rise above juvenile, remarks as his. It's concerning to me that it'll backfire on down ballot races, because people will be so disenfranchised to even engage that they won't remember that the down ballot impact is really important to vote for your representatives and your senators and your local school boards. That's really important.
Well, Maura, I'm glad you brought up North Carolina, because Jeannie, after last week, while we were in Chicago, we saw the crystal ball, Sabato's crystal ball, move North Carolina into the toss-up column. We now have just seen Cook Political Report do the same, North Carolina to toss-up. What does that mean for how both campaigns need to consider that state in particular, knowing that the governor of North Carolina, Roy Cooper, a Democrat, was once on Harris's shortlist? He could potentially be mobilized in this state. What does Harris need to do, and how do you expect Trump to try to counter her?
Yeah, and at the DNC, we saw the final speaker before Kamala Harris came out was none other than Roy Cooper, and that was not by accident. He ended his speech by a shout out to the 7 swing states. So Democrats know, you mentioned that this had moved over in another forecasting model, and now it is moved over in Cook. And it means that Democrats have a chance there that they may not have had a month ago. And that means that once again, this is going to come down to money and time and organization. And Democrats have the benefit of having a very popular governor, Roy Cooper, at the top of that state. And of course, a rather controversial and unpopular Republican vying to be governor. So that may dampen turnout amongst Republicans or get more Democrats out. So, this was a very fascinating turn of events, because there was a time not that long ago, like Republicans thought they had North Carolina in the bag, so to speak. Not so much anymore, which means more money and more time for Republicans in a state they would like to have tied up and moved on to other more important states.
Well, it raises the question of whether Republicans, Donald Trump specifically, is going to have the kind of time and resources to dedicate to each one of these states. Maura, he is losing the fundraising game to Kamala Harris, at least at this point. It's Harris that has the cash advantage. How does that need to change how his campaign thinks about targeting these states if they aren't necessarily going to have the same kind of dollars to spend that the opponent will?
Right. And you mentioned earlier that Donald Trump is out there on the campaign trail, that he has moved, he's doing these rallies. But the problem is that during these rallies, he espouses the things about election and the big lie and things of that nature, and spewing off things that, it would take forever just to fact check everything he says. And that we have seen in North Carolina when the alt-right policies come through is when Democrats actually end up doing better. So you have this candidate, Robinson, who has said, basically anyone who advocated for birth control was a witch. He says outlandish things, but we saw Roy Cooper was elected because largely of a alt-right bill that got put in place before his election. So, yes, it's important that Trump is out there on the campaign trail, but it's not helpful to down ballot Republicans if he is espousing conspiracy theories and outlandish and, again, derogatory things towards other people. It just isn't helpful to their messaging on the economy and safety and security, because he can't stay on message. So, North Carolina being a flip toss-up state makes complete sense to me, given what they have in Robinson, but also the school superintendent, state superintendent, Morrison. So that's a problem as well. Or Morrow, I think her name is. Yeah. So.
All right. Maura Gillespie of Blue Stack Strategies and Bloomberg Politics contributor Jeannie Shan Zaino, our political panel today. Thank you so much for joining me. And we're going to continue this conversation on the fundraising game and the way in which resources are being deployed by Republicans across these crucial swing states. The co-chair of the RNC, Laura Trump, yes, Donald Trump's daughter-in-law, will be joining me next here on Balance of Power. So stay tuned for that conversation on Bloomberg TV and radio.
The names that move markets are on Bloomberg.
Our role in the world, our role in NATO in supporting the Ukrainians in this war, the unprovoked war that Russia has instigated in Ukraine, our support for the Indo-Pacific, for providing a counterbalance to China. All of that is in our interests, and whoever's president, I'm sure, is going to do what's in the best interest of the United States.
It is not a time for America to back off of its commitment around the globe. And I think there's a justification for us making certain that we do the right things in a way that we share the burdens with our allies. But I don't expect America to walk away from the world in any administration. It's about American security, and it's about making certain our adversaries, present and future, know that when America's committed to something, they're there for the long haul.
Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
It's 1:40 on Wall Street. I'm Amy Morris. All eyes on NVIDIA today. Earnings come out after the closing bell, a test of the S&P's $4 trillion recovery. Now with the company's earnings scheduled to arrive after the market close, traders are glued to their monitors in preparation for any wild swings. Going by the options market, NVIDIA's results are expected to send its shares careening nearly 10% in either direction. That is a move that would shuffle some $300 million in market cap. NVIDIA shares right now down 2.2%. Super Microcomputer said it would delay filing its annual financial disclosures. That set off the stock's largest intraday decline in more than 4 years. In a filing today, the server maker said it requires more time to, quote, complete its assessment of the design and operating effectiveness of its internal controls over financial reporting. Shares of Super Microcomputer now down 23%. We check the markets for you all day long at Bloomberg. The S&P 500 down 0.6%, NASDAQ down 1%, and the Dow down 0.5%. The 10-year Treasury yield at 3.84%, and the 2-year at 3.87%. And the billionaire founders of Two Sigma Investments, John Overdeck and David Siegel, are stepping down from their day-to-day management after feuding for years, handing control now to two new co-chief executive officers. They'll become co-chairman and advise the $60 billion firm on quant investing and technology, and their equity stakes will remain unchanged. This is all according to a letter to investors today that was seen by Bloomberg. That is a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. I am Kaylee Lines here on Balance of Power on Bloomberg TV and radio, where we brought you the news earlier this week from the Harris campaign. about a milestone crossed. $500 million fundraised since Joe Biden left the race 5 weeks ago, $540 million to be exact, of which $82 million the campaign says was raised at the Democratic National Convention in Chicago last week. Now, I will note here for full disclosure, Michael R. Bloomberg, the founder and majority owner of Bloomberg LP, has contributed $19 million to Future Forward, which is a flagship super PAC supporting Harris. I say that as we aim here to provide you with all of the facts. And the facts are right now there is a fundraising gap between Trump and the RNC and Harris and the DNC. Filings show that the Biden to Harris campaign has raised more than $1 billion this cycle, while Trump and the RNC has raised a little north of $635 million. And it is to the RNC and its co-chair we go now. Lara Trump, I'm pleased to say, is joining me here on Bloomberg TV and radio. She, of course, is the co-chair of the Republican National Committee. Great to have you, Lara. Welcome back to Bloomberg. As we consider this fundraising gap, how do you aim to close it? Who do you go to?
Yeah, well, listen, I don't think we ever keep pace with Democrats traditionally as Republicans. Look, you look back at the 2016 race between Donald Trump and Hillary Clinton, and she far outraised us. And we know the outcome of that election. Now, of course, money is important. It affords us the ability to buy TV ads, to do digital advertising, to have a great ground game. And we're really proud of the number that we've raised so far. I think our most proud number may be our small dollar digital online fundraising. We are approaching our 50th day of over $1 million raised in small dollar donations. These are donations under like $40 on average. And I think what that says is that you have the support of the American people behind Donald Trump right now. So we always aim to raise more money. We always try to encourage people to donate. And even in this bad economy that really is hurting so many people, we are still seeing very big fundraising numbers for Donald Trump.
Well, as you talk about the small dollar donors specifically, is that where you think more of the money you can raise will come from the grassroots, or are there other big ticket donors that you think you can pull in who may not have yet contributed to the campaign?
Well, we do have our eye on some donors who we're bringing back into the fold, or maybe some new donors. I won't give any names today, but some new donors as well. Look, you've seen Donald Trump really resonate with Silicon Valley over the past 6 months or so, and I think he's really shaken a lot of people awake, and a lot of people are now realizing how much better off their life, their businesses, and the trajectory of this country were when he was in office. And so you're seeing a lot of new donors and first-time donors as well come in a very big way. I do a lot of fundraising calls. I go to a lot of fundraising events, and oftentimes there are people coming up to me saying, I have never been to any political fundraiser in my life. I'm here maxing out to the RNC and the Trump campaign because they want Donald Trump back in office.
Well, ma'am, of course, it's one thing to raise money. It's another to consider how to spend it and what the strategy should be and how it should change now that it's Kamala Harris at the top of the Democratic ticket instead of Joe Biden. Polling is consistently showing us that it does seem the map may be wider for her than it was for Biden in terms of states she could win. She, of course, is spending time in Georgia today. There's indications she's polling better in North Carolina. Do you have to rethink your allocation to some of those states, like in the Sun Belt, now that it is the Harris campaign, not the Biden one?
Yeah, well, listen, of course, you have a different candidate. You do have to change your tactic to an extent. And we certainly are doing certain things in very specific states. And we're looking at all the same polling as well. And we're making sure that where we need to kind of firm things up, we're going to allocate a little bit more money there. We're going to put more boots on the ground in those areas. So, yeah, it's a different game. But look, I think that apparently, we're going to hear from Kamala Harris herself in her first television interview alongside her running mate tomorrow night. We'll see how that goes. And I think that after the September 10th debate, I think you're going to see another shift in numbers. I think people are going to very clearly see who Kamala Harris is. She's got a lot of questions to answer. She seems to have avoided the media very well to this point, and we really don't know where she stands on a lot of issues. And so I believe once the American people are not only reminded that she's been in office for 3.5 years, that life is harder because she has been vice president as well for 3.5 years, and she's got to sell the American people on 4 more years of this. I believe we're going to see polling shift again, and we feel very confident all across the country that we have our eye on exactly what we need to focus on, and that indeed Donald Trump will be reelected on November 5th.
Well, I guess we'll wait and see what further detail we get from Kamala Harris in that interview tomorrow. But if I could just get some more detail from you, Laura, you were talking about identifying potentially areas in which you will now need to shift strategy and invest more resources. Could you illustrate for us where some of those areas are? Is it North Carolina? Is it Georgia? Where exactly are you now targeting to a greater degree?
Yeah, well, listen, North Carolina is definitely a state where we've seen some movement. It looked very positive for Donald Trump in whenever he was going against Joe Biden. It still shows Donald Trump up on Kamala Harris, but we want to make sure that we increase that lead. So we certainly are prepared to put more money into that state. It is my home state, and it's one that I, of course, want to win. And I think Pennsylvania is a must-win state. I think that, you know, every election cycle we have seen consistently how important that state has become. I think the margins have tightened quite a bit there. You're going to see Donald Trump in Wisconsin coming up today. And so, you know, we're making sure that everywhere that we felt very good prior to Kamala Harris being the nominee for the Democrats, we want to feel just as good on the other side of things. So we're prepared to invest wherever we need.
Well, as you look at your home state, are you worried that the gubernatorial candidate there, Mark Robinson, could actually create a drag on Donald Trump's own chances? Is he a problematic candidate for the Republican Party?
No, listen, I don't think you've ever seen that sort of movement for Donald Trump. In fact, I would say it's the opposite. I think that Donald Trump typically helps out the candidates in these various races, down ballot races, whether it's within the state or for the House or the Senate. And so that's not a concern at all. And I actually think you're going to look to races like, you know, the race in Montana, the Senate race there. You're going to look at Ohio and Pennsylvania. And I think you're going to see that Donald Trump is going to be a huge boost for a lot of the down ballot candidates and the races within those various states. So that's not a concern for us at all.
Well, of course, you know Donald Trump better than most people ever will. You are not just the co-chair of the RNC, you are also his daughter-in-law. And what we have heard from Donald Trump pretty consistently in recent weeks on the campaign trail is that he is hearing from people close to him, his advisors, that they want him to focus on policy, less so on personal attacks. But it does seem, and he has said as much, that he'd like to keep going with the personal attacks. Do you have his ear on that, Laura, as his daughter-in-law and as RNC co-chair? Do you think he should be focusing more on policy?
Well, I certainly have his ear, and he certainly asked my opinion about a variety of different things. And listen, I think that people have been very quick to criticize Donald Trump for the way he operates. And he definitely does not operate, Kaylee, like a typical politician. He's still, even though he was president for 4 years, doesn't like to consider himself a politician. And I actually think you look back at the 2016 election, for example, Donald Trump was such a great brander of people that it really gave him an edge during the primary with 16 other candidates, all of whom could have been great presidents or great presidential nominees for the Republican ticket. And you look at the way that he branded Hillary Clinton. You look at the way that even in the early primaries in 2024, you saw him do the same thing with people like Ron DeSantis and Nikki Haley. It's Donald Trump who was left standing at the end. So sometimes people don't agree with the way he operates in the beginning, but I actually think that people down the line start to realize maybe he had the right idea to begin with.
Well, something else that many may disagree with Donald Trump about is whether or not he should be willing to say now, I will accept the results of the election, whatever they are. Instead, what we have heard from him is suggestions that as long as he thinks it was free and fair, that's when he will decide. Some have read that as if he wins, he'll accept those results, especially considering that at the RNC, Laura, you are not just charged with getting a Republican elected to the presidency. It's about the Republican Party as a whole and the balance of power in Washington. Are you concerned that that kind of rhetoric around election integrity may actually harm the Senate and congressional candidates who are trying to keep hold of the House and turn the Senate blue? What if they're able to do that and your father-in-law does not win? Is he still going to claim that this election was not valid?
Look, I think that what you've heard from Donald Trump is if this is a fair election, which is something that I'm working on day and night at the RNC. It's the number one focus of the RNC right now. We have a huge election integrity operation because let's be honest, half the country had a lot of questions, maybe more about 2020. Those questions were never answered. People were just supposed to forget about them. And it's paramount that in the United States of America, we trust our electoral process. This is integral to who we are as a country. And so we are trying to reestablish that trust every day. We are doing everything we possibly can, making sure that people are confident that no matter if you're voting for a Republican, a Democrat, or a third-party candidate, in this country, your vote matters and your vote counts. And unfortunately, we've gotten a lot of pushback from Democrat-run states, and it's been very challenging to get transparency in an issue where we really need transparency. But I believe that what we are doing right now at the RNC is going to further the notion that we do indeed have free, fair, and transparent elections. And so I think Donald Trump saying if this is a free election and a fair election and there's no funny business here is a perfectly legitimate thing to say, because again, you go ask half the country, they don't feel like everything was completely fair in 2020.
All right, Lara Trump, appreciate you joining us here on Bloomberg TV and radio, the co-chair of the RNC. Thank you so much. And of course, for those that do still have questions about the results of 2020, Joe Biden did win the election and no court found that there was anything actually wrong with the democratic process in the last election cycle. For a quick reaction now to our conversation with Lara, I turn back to Bloomberg Politics contributor Jeannie Shanzano, of course, also of Iona University. Jeannie, just in our final moments, I would love your reaction to what we just heard from co-chair Trump there, especially this notion that they're working toward free and fair elections. We have no indication at this point, correct, that they won't be free and fair?
We don't. And of course, you know, just a few hours ago on Dr. Phil, Donald Trump said, quote, "I won the election against Biden." And the reality is he lost by over 7 million votes. That has been well established. There has been no evidence found in a number of court cases that there was any stolen votes in that election. So, you know, it is this kind of thing. Yes, we do need a free and fair election. We had one in 2020 and he lost. So it's that kind of thing that we have to, you know, just consider. And I would also say very interesting to hear her talking about the small dollar donors. As you look at percentage of what they have fundraised, Donald Trump is around 31% and Harris is around 41%. So there is a gap there, but I agree with her. That is a critical number to be watching, are those small dollar donors that they are taking in.
Well, and the other thing to consider here is not just whether or not the Trump and the RNC have the ability to keep tapping that base, but whether Kamala Harris still can. We have a minute left, Jeannie. She obviously has seen a frenetic pace of fundraising, and she's enjoyed that since launching her candidacy. But is that really sustainable? Are these people who are likely to give to her more than once?
Yeah, you know, she has done very well. The wind has been at her back, certainly. They are going to try as hard as they can to keep it up. And I think it's noteworthy that Lara Trump was talking about Silicon Valley. They have been supportive of Trump, but unlike with Biden, they have also been supportive of Kamala Harris, of course, herself from California. So that is also an area to be watching. How much is the split from Silicon Valley between a Trump and a Harris? But she's going to try to keep up this pace. But it has been a stunning pace at over $500 million at this point.
Yeah, incredible to see how quickly the money race and the race overall has changed, as we just heard from the RNC co-chair herself, Lara Trump, talking about tightening margins in Pennsylvania, having to invest more in her home state of North Carolina as well. Jeannie, appreciate you sticking with us throughout this hour. Jeannie Shanzano, of course, Bloomberg Politics contributor and senior democracy fellow with the Center for the Study of the Presidency and Congress here on Balance of Power today. I'll, of course, have much more coverage of this presidential race and NVIDIA results after the bell as well on Balance of Power in the late edition at 5 p.m. Eastern Time. I'll see you back here then. In the meantime, Bloomberg Business Week is ahead on Bloomberg TV and radio.
minute-to-the-minute political news, whenever and wherever it happens. I'm Joe Matthew at the Democratic National Convention in Chicago, and this is Bloomberg.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think this is also how I grew up, making your own clothes and making something that's well special and well unique. It's like timeless. And now you see that everybody is looking the same, wear sweatshirts and wear t-shirts. And for me, it's just like when they wear something that's special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing. Everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough, to ensure that
U.S. stocks extend full, S&P 500 down 1.03%.
In wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. Basic technology adoption.
Nobody covers business like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week. I'm Carol Masser along with Tim Stenivek. It is Wednesday, August 28th, and to be fair, there's really kind of one thing we care about.
Yeah, that is NVIDIA earnings. That crossing after the bell. We will, of course, bring you the latest on Bloomberg Television and Bloomberg Radio when those numbers do cross. But Carol, ahead of those numbers, we got a lot to talk about.
Yeah, and I do want to point out, you and I just noticed coming in and kicking off our broadcast that you've got stocks taking a leg down. They are near their lows of the session. So all of a sudden, you see a drop off in the trade. Shares of NVIDIA, folks, they're down about 3.3% ahead of those results. So watching the trade, maybe some nervousness ahead of NVIDIA's earnings. Having said that, we're going to get into the expectations, the hype, the trade, what to watch out for when NVIDIA reports after the closing bell.
Plus, we're going to be joined in just a few minutes by Mark Gurman on everything you need to know about the latest when it comes to Apple.
Yeah, I feel like it's all big mega cap tech companies today. Also, this one isn't a big mega cap tech, but you know what it is? It's gotten a $1 trillion market cap. We're talking about Berkshire Hathaway.
I was going to say, do we tell them what it is now? Also, one more thing. Speaking of appreciation, 401k millionaires hitting an all-time high. Thank you, Gen X.
Yeah, exactly. All right, lots to come in the next 60 minutes, folks. Let's get going with a check on that trade and the sell-off that we're seeing near our lows. Here is Amy Morris.
All right, thank you, Carol. And you are absolutely right. We've got red across the screen as traders are waiting for those NVIDIA earnings. We check markets for you all day here at Bloomberg. S&P 500 down 1.1%, NASDAQ down 1.7%, and the Dow is down about 1%. The 10-year Treasury yield at 3.83%, the 2-year at 3.86%. That earnings report that Wall Street has been waiting for weeks is now just a couple hours away. NVIDIA reports after the closing bell. Analysts are expecting a more than 70% boost in revenue growth There could be some volatility as options imply a 10% share price swing after earnings drop. Stay with Bloomberg Radio for an NVIDIA special featuring an exclusive interview with CEO Jensen Huang. He joins Ed Ludlow on a special edition of Bloomberg Technology this evening at 6:30 Wall Street time on Bloomberg Radio and television. And other big story today, Berkshire Hathaway, now the first U.S. company outside of the tech sector to surpass $1 trillion in market value. Shares of Warren Buffett's conglomerate rose as much as 0.8%. That pushed its market capitalization above the $1 trillion mark for the very first time. The stock has rallied this year on strong insurance results and economic optimism. Berkshire Hathaway now joins the ranks of a small group cracking that $1 trillion milestone, dominated by technology giants Alphabet, Meta, and NVIDIA. And that is a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovec.
All right, so appreciate it, Amy Morris. Right, speaking of those trillion-dollar market cap companies, I mean, right, NVIDIA, it's over $3 trillion. Stock's up 151% so far this year. I feel like, you know, we're really through earnings season, but this is the big one at the tail end that we've been waiting for because it says so much, yes, about the semiconductor space, but yes, also about what's going on in the build-out of artificial intelligence.
Also, just given its size, Carol, look at the outsized influence that it has on the S&P 500 or on the NASDAQ 100. Maybe I shouldn't say outsized, but it certainly is given the market-weighted indexes or market cap-weighted indexes.
You talk about outsized. I mean, analysts on average see NVIDIA projecting revenue growth of over 70% for the current quarter. And then, of course, we want to see what Jensen Huang has to say about demand developing into 2025. It's not just about what's going on last quarter, current quarter, but the outlook, the build-out. Are we seeing companies, and this is where we look into the supply chain function on the Bloomberg, some of the biggest customers, their household names, and what are they doing when it comes to buying stuff from NVIDIA?
Well, the stock did drop 27% between its all-time high on June 18th to a recent low on August 7th. The stock down today a little over 3%, up though, as you mentioned, by more than 150% so far this year.
All right, so with what investors are expecting when NVIDIA reports today, back with us is Bloomberg News U.S. semiconductor and networking reporter. He's Ian King. He's out there in our San Francisco bureau getting ready to go on the live blog, but you did put a great preview out for all of us. NVIDIA has really rallied big time, almost 30%, Ian, from that low on August 7th. So basically gaining that big drop it had done just a few months prior. Expectations, how high are they going into this release?
Yeah, I mean, that's absolutely the word. Investors have got used to them just knocking it out of the park. I think I just did some quick math on this, and I think over the last 5 quarters, they've averaged a 12% beat on consensus estimate revenue. It's been as high as 22% in terms of blowout. So good is, or meeting estimates for them is just not even remotely good enough. They are expected to come in and do much, much better.
They can't be expected to do that in perpetuity, Ian.
No.
You've seen this before, not on NVIDIA's scale, but when it comes to the expectations game, how do they thread that needle now?
Yeah, you're asking absolutely the right question. When you're already sort of 40% of the capex at companies like Facebook, how much higher can you go? And the answer is probably not much. So Jensen Huang's strategy here, and he's been pushing this really hard, and I think we've spoken about it before, is to basically run literally around the world, trying to get every government, every corporation that he's allowed to sell to build their own systems to say, hey, it's great that you buy from the cloud and you buy, but you should buy from us as well. And that's really what he's trying to do. So I think those who are taking a longer view on NVIDIA would be looking for signs of that manifesting itself and the company becoming less dependent on the very small group of customers that supply most of the revenue now.
You said something that caught my attention just now, Ian. Countries and companies that he's allowed to sell to. It makes me think of China, U.S. export controls that have been put in place in recent months and in recent years. Help us understand the China story when it comes to NVIDIA.
Yeah, I mean, this is very much the countercurrent, and remarkably, NVIDIA has been able to shrug this off. The largest market for semiconductors in the world is China. China is undergrowing, and an emphasis is on growing restrictions in terms of what it is allowed to buy from U.S. providers of technology, particularly the high-end like NVIDIA. So that's clearly a headwind, clearly something that is very difficult for NVIDIA and is likely only going to become more difficult. They've been able to make up for that elsewhere. How long can that continue? It's a question that definitely hangs over them.
Hey, I also do wonder, like, as you said, it struck me what you said, when you are already something like 40% of the CapEx over at Meta, Facebook, you know, like, how much more can you do? Having said that, what's the replacement cycle or the upgrade cycle when it comes to NVIDIA?
And that's been the sort of question of late. We have this new product range, product design called Broadwell coming in, but there have been reports that say, you know what, some of these things aren't going to come out as quickly. Maybe some of them have got technical problems. So we had this big wave of concern that perhaps this replacement cycle, this upgrade cycle, would be delayed or wouldn't be as good. Maybe that's going to affect ASPs. Maybe that's going to affect supply. Analysts kind of looked at this and said, no. The fundamental demand here is way too big. So they'll just sell a load more of the existing stuff. Again, we'll see an answer to that, or we'll see a lot of questions about that later today.
So talk to us about that. Our own Ed Ludlow is going to be talking with Jensen Huang, and I wonder, what is it that you think we'll get from him, especially if there is any disappointment? Is it more about, wait, don't look at what we did today, but more about the narrative, the bigger story? Is that what he's going to be good about?
I mean, what we need to understand here is Jensen Huang is absolutely brilliant at telling a story, right? He'll sort of answer the questions, but not really, right? I mean, he has a narrative, he has a vision of the world, which frankly is coming true, that he wants to push forward, and he will use that earnings call, and he'll use pretty much any interview or any opportunity he can get, whether it's a conference or somebody else, to forward that narrative, to explain why everybody needs his gear and why this is such a growth opportunity. So yes, there'll be a lot of questions, and some of them might be quite spiky, but he's an absolute master at kind of glossing over these things. So I would temper expectations for any real kind of soul-bearing insight that might come from the way that this company tends to present itself.
I think it's fair to say, Ian, one of the main reasons the stock has been on a tear over the last few years has been NVIDIA does something that pretty much nobody else can do out there right now. And I ask you this question every few months because I want to know if there's been any progress here. But where do competitors stack up right now when it comes to doing their own version of what NVIDIA is providing customers?
Yeah, I think, you know, that's a great question again, and it's one he continues to get and one he sort of shrugs off. But look at it this way. Their nearest, probably best competitor is AMD. AMD has just upped its forecast for how well it's going to do in this market. It's going to have like probably about $5 billion of sales from accelerators this year. And that's, you know, really good. It's way better than they were last year and you know, showing real growth. But guess what? That's less than 5% of what NVIDIA is going to do from the same business this year. So yes, there is one company probably snapping at its heels, but so far behind that they're not really a consideration in as a real legitimate competitor yet. And as for the rest, Intel's nowhere, unfortunately.
What are you hearing in terms of whisper? And I think about also, you know, the CEO and his ability to control the narrative. I mean, I guess I'm just trying to get an idea of, could we, you know, would we not necessarily get a negative disappointment because he understands the importance of kind of managing the story?
I mean, what he tends to do in, you know, if for example, we have a quarter where they do well, which is likely the case this time, but don't quite meet the highest levels of expectations, he just shrugs that off. He doesn't really care too much about the minutiae of expectations from quarter to quarter. He'll very much focus on, look, we see this continuing to grow. We see this continuing to expand into, you know, over multiple years. And he'll talk about $1 trillion market for data center equipment, and all of that needs to get rolled. So you won't get a very direct focus on the minutiae that some of our audience will definitely want to hear about.
Hey, Ian, what should our audience hear about in terms of understanding where those next customers come from? You mentioned that if you already take up such a large portion of Meta's CapEx spend or Microsoft's CapEx spend, where are those other customers going to come from?
Yeah, you want to see, for example, pharmaceutical companies shifting their research to R&D based on computers, to be basically designing drugs on a computer rather than through an experimental basis. You want to see it taking over factories. You want to see AI systems being deployed in shipbuilding. Those are the kind of applications that NVIDIA's been pushing, and you want to see real sales associated with that.
Is that a realistic expectation, Ian, given that perhaps some of these, like a pharmaceutical company, for example, could use compute power from someone else and not have to buy their own chips?
Well, again, the argument here is data sovereignty. Do you, as a big drug discovery company with all of the secrets and all of the data that is essentially your crown jewels, want to put that in the public cloud, or do you want to keep the most important part of it in-house and work on it there? The argument is perhaps you're going to pursue a mixture of the two, and therefore they're going to start to deploy their own system as well. We need to see that happen. We need to see that manifest itself at scale, though.
Yeah, hence all the hardware guys talking about on-premise, right, and bringing it back home. Hey, one last question. So, Ian, 2 metrics that you say our audience, when those numbers cross, that we've got to make sure we're focused on, or if there's more, but what's kind of top of mind for you? Is it the revenue, or what is it?
It's absolutely the revenue forecast, and the consensus there is about 32 billion, as we know. But you've got to bear in mind that the high forecast is almost 38 billion, right? Wow. So if they come in at 33 or 34, maybe that's not good enough. It'll really depend on how much credence investors are putting on those high-level expectations.
Okay, well, we know they're really high. All right, Ian, thank you. As always, we know you're going to be busy. We know you're already busy, but thank you for checking in with us or finding some time. Ian King, U.S. Semiconductor and Networking Reporter at Bloomberg News, right here in the San Francisco Bureau. Yeah, we're staying on NVIDIA because, well, there are NVIDIA's quarterly results coming a little later today. 4:20 is when we do expect them, Wall Street time. And then there's also how NVIDIA's earnings will test the S&P 500's $4 trillion recovery. With that side of the story, we turn to a most read story on the Bloomberg terminal by Bloomberg News equities reporter Carmen Reinecke, who's here in our studio in New York City. So we talk about the stock's impact on the overall equity trade. There were some estimates late last week that upside or downside surprise could move NVIDIA stock 9 to 10% in either direction. What about its effect on the overall market, though?
Yeah, I mean, this would have a huge impact on the overall market. I mean, a 10% move in NVIDIA, the market cap is north of $3 trillion. So that's $300 billion that you could see swing in either direction. So this is substantial not only for NVIDIA, but for the rest of the market. So NVIDIA is one of the biggest stocks on the S&P index. I believe it has the second highest weighting right now. And similarly is important on the NASDAQ 100. I think it's also second or third highest weighting on that index. So whatever NVIDIA does, it can and often does move the entire market. In the rally that we've seen over these last few weeks, NVIDIA has been, at the forefront of that coming back up. And it really was also at the forefront of the decline that we saw into the beginning of August.
It was really striking, Carmen, like Tim and I were noticing when we were getting ready to talk with Ian specifically and just looking at what the stock did, because it dropped 27% between that all-time high back in June to that recent low on August 7th. And then it rallied again by that much coming off the low. So it's really tremendous. And you realize, okay, how much of the market sentiment or the actual market demise and then rally is connected. The correlation is really pretty high. Having said that, is there anything we're seeing in the options market ahead of these earnings that's kind of interesting?
I mean, really, it's this expectation of a swing in either direction.
Either direction.
Either direction, yep. So 10% up, nearly 10% up or 10% down. That's important, I think, to remember.
Is that typical when they are reporting? Is that the same kind of options trade that we've seen in the past?
We have seen big swings from NVIDIA reports in the past, especially since that one, the big report, that really put it on the map about almost 2 years ago, I think. It adds a lot. I mean, the last 2 reports, it's added hundreds of billions of dollars, in market share following the earnings report. So it is kind of typical. I mean, we know this is a very buzzy stock. People are watching it. It's like the grand finale of earnings season, and they're ready to trade. So I think people are very sensitive to that, and it's been so volatile. I mean, there were moments in this last month where it was more volatile than Bitcoin. So seeing these kinds of swings, it's I mean, we've seen it happen. It's totally possible that it could move that much.
Is there a way that some analysts or observers, at least the folks you talk to, are looking at this as sort of a barometer for the tech industry right now and can get some macro signals from the results?
Yeah, definitely. I think NVIDIA is by and far seen as the pure play for AI. It is the barometer really for demand, how people are viewing the future of that sector, and what's been a really major theme in the market. So yeah, I think what NVIDIA reports and what Jensen Huang says on the earnings call is very important for the overall AI trade. It will definitely move other stocks that are like in the SOX, the semiconductor index, as well as the broader market. So yeah, it really is all eyes on NVIDIA.
Yeah, it is really kind of interesting to see. One last thing, we were just talking with Ian King and, looking at the supply chain function on the Bloomberg and looking at some of the top customers of NVIDIA, whether it's Microsoft, Meta, Supermicro, Alphabet. And it's so cool because it tells you how much that they are spending in terms of CapEx, their own CapEx, NVIDIA's CapEx. Just got about 20 seconds. Is it anything important to watch in terms of how they are spending?
Definitely. I mean, I think where they're putting their own focus is paramount. I mean, we want to know what the next leg of the AI story is going to be. I think development is always important, and investors, when they're thinking about the replacement cycle or how NVIDIA is going to continue to put up these huge revenue numbers, that's something that they're going to be looking at. So it's definitely a number that people will be watching.
They're scaling back. You wonder if then they're like kind of slowing their roll on all things AI. Carmen, thank you so much. Carmen Reinecke, she's Bloomberg News equities reporter. Coming up next, another big tech mega cap on our radar, making some job cuts as its priority shift. I think we'll know their name, right?
Yeah, it's a fruit company.
Nice tease.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment. The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, where's the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything. Season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs, taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's 2:21 on Wall Street. I'm Amy Morris, and it's an NVIDIA nail-biter. The almost $3 trillion rally in NVIDIA shares over about 2 years has virtually rewired the stock market, giving the artificial intelligence chip-making giant an outsized influence on equity indexes. Now with NVIDIA's earnings scheduled to arrive after the market close, traders are glued to their monitors, preparing for any possible wild swings. Stay with Bloomberg Radio for an NVIDIA special featuring an exclusive interview with CEO Jensen Huang. He joins Ed Ludlow on a special edition of Bloomberg Technology this evening, 6:30 Wall Street time on Bloomberg Radio and television. Stocks are lower as traders wait for those earnings, and we check the markets all day long at Bloomberg. S&P 500 down 1% or 54 points. NASDAQ down 1.5% or 268 points. And the Dow was down 0.8%. That's about 345 points. The 10-year Treasury yield at 3.84% and the 2-year at 3.87%. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenivek.
All right, so appreciate it. Amy Morris there in D.C. Hey, Apple shares a little bit lower in today's trade. This, as one of the world's largest market cap companies, as you know, took the rare step of cutting about 100 jobs. It happened in its digital services group. It's part of a shift in priorities for the critical division. At least that's according to people with knowledge of the matter.
Well, reporting this out, as he does all things Apple, back with us is Bloomberg News Chief Technology Correspondent Mark Gurman. He joins us from Los Angeles. Mark, when we talk about Apple, we talk about a company that, as of its latest filing, has about 100,000 employees around the world. A cut of 100 people, it's not huge, but as you write, it's pretty rare for Apple to do layoffs. What's going on?
Job cut is too much. We're talking about people here, so let's just start with that. But 100 in context of how big Apple is, and in context of the size of the layoffs that some of Apple's peer group have done, is very minimal. But layoffs at Apple, no matter how many people are involved, have an outsized influence, right? It's an outsized understanding of what's going on here. Apple simply does not do this. They've done it 4 times this year. 4 times, right? They've probably done 4 rounds of layoffs in the 20 years prior to this year.
Wow.
So this is notable. At the beginning of this year, you had 121 people at an AI Siri-related operations group in San Diego, California. At the end of February, you had several hundred people across 2 projects that were shut down. One, the self-driving car initiative, the other, a micro LED project, right? And if you really look at it, both of those have to do with cost cutting. Even the San Diego one has some cost cutting involved there. The cut to the services division, which, by the way, is Apple's fastest growing and one of its most important organizations in the entire company, one that most people would probably believe would never face any layoffs, that is where the cuts happen. So about 100 jobs, mainly across Apple Books and Apple News. We're talking about engineers, we're talking about design, we're talking about software quality assurance and testing. These people worked across many different platforms within Apple services. Some of them probably touched the App Store. Some of them probably touched Apple Music and Apple TV to some extent. So that's 100 resources there. And if it wasn't purely a cost-cutting move, Apple probably could have relocated those people to other teams from the get-go. To be fair, they're getting 60 days notice here. They have 60 days to find another job within Apple. I would venture to guess that far fewer than half of the 100 people will find a new job within Apple in the next 2 months. So most of those people probably will be leaving the company in 60 days from yesterday when this was announced internally. So this is quite a big deal, although it is 100 people comparatively.
Yeah, and if you're one of those 100, it certainly doesn't feel like a small job cut. Having said that, Mark, why is it then happening? As you said, 4 times this year, this does not happen at this company. So why is it? It's a company that's got a very rich balance sheet. It's got lots of cash. What's going on?
So let me start with yesterday's cut. So Apple Books is not a big part of the overall pie of revenue for the Apple Services organization, right? It's probably one of their weaker services. They don't invest a ton in it. It's not a true moneymaker. Apple News doesn't make a ton of money either, even though there's advertising, even though there's that subscription, which I believe is now $13 a month. So it's simply less of a priority. So there's a bit of a priority shift in Apple services towards streaming video, streaming music, gaming, the App Store and such. Remember, there was that App Store reorganization a couple of weeks ago, which meant that they probably had to reallocate some resources related to that as well. Now, in terms of the layoffs in totality, I think it shows that, Apple is bracing for some sort of recession or trying to get ahead of the possibility of a recession.
Wow.
Obviously, we've seen stats out there, and Apple wants to be a leaner company, right? They're not able to spend extra few billion a year at this point, or they don't want to spend an extra few billion a year at this point on bets like the self-driving car, like the micro LED project that they believe there's a strong chance will never come to fruition. Right? Apple can continue to spend $1 billion a year on each of those projects, rack up a bill of an extra $10 billion over the next 5 years, and get absolutely nowhere. But they decided to save that $10 billion and probably reinvest it into bigger priorities like generative AI. They're working on the tabletop robotics project that I've reported on. They're working on a new iPad that's going to require a lot of R&D. This is a 19-inch iPad that can fold in half. They need to do some R&D to redesign the iPhone. They need to put money into shrinking down their components and making them more efficient so they can roll out new form factors. There are some health technologies that they want to roll out. But, the big picture here is AI and probably reinvesting that money into artificial intelligence development.
Mark, Apple as a lean company, I didn't think I'd hear you say that. Yeah. How would you describe Apple? How would you characterize Apple in terms of it being a quote-unquote lean company?
I watched this great interview with Luca Maestri, the outgoing CFO, earlier this week, and he said that he runs the company with about 10% in his finance office of the amount of people he had while he was a CFO at other public companies prior.
Wow.
Even though Apple's market cap is 10 times the size, if not more, than those companies. Right? He worked at Xerox, he worked at General Motors, a few other companies before Apple. And those are big companies internationally, right? They're global titans as well. He gave this example. So he said his investor relations group has 2 people. He says that Apple's hedge fund, that's Brayburn Capital out of Nevada. They manage Apple's cash, right? Several $100 billion. He says that's 7 people, right? Wow. And so I think those are some good examples of how lean they run. In terms of their R&D budget, over the past few years, I've seen the overall company-wide R&D budget either stay stagnant or grow less than 5% on an annual basis. And if you compare that to the R&D budget growth of companies like Meta and Google and Microsoft, it's slim, right? Apple knows that the iPhone and some of their other products and services are going to continue to print a lot of cash and a lot of money, right? They don't want to upset the status quo and risk doing something that is going to put the company in a bad position. Now, what I will tell you is Apple has an issue here where they're not really reinventing themselves. They're not really moving the needle. They are very far behind in artificial intelligence, robotics, and some other areas. And there is a lot of catch up to do. They have become too reliant on this annual September formula of new iPhones, Apple Watches, and AirPods. It does great for the stock. It makes shareholders happy. There's not a lot of needle moving there. And so I believe the company needs to take more risk. And so I guess the hope as a consumer and someone who watches the company, and maybe the hope for employee morale, the people who are still there, is that this amount of money could be reinvested in other areas that will allow Apple to pursue new growth opportunities and create some really cool products. When was the last time you waited in line for an Apple product, and when you got your hands on that device for the first time, you were amazed? I have never seen anything like this before. I can give you a few examples. There was the iPad Air in 2013. There was the first Retina iPad the year before that. The iPhone 4 with that first Retina display and that glass back and front design with the aluminum band around the edges. That was pretty incredible. But it's been a while, maybe the 2018 iPad Pro, maybe the original Apple Watch, maybe the AirPods, but it has been a serious number of years since the last time I feel like they came out with something that was really earth-shattering. And I think COVID played a part in it, right? across the pandemic or the height of the pandemic,
NYMEX diesel September futures settle at $2.22 a gallon. NYMEX gasoline September futures settle at $2.21 a gallon. NYMEX natural gas September futures settle at $1.93.
But what people don't realize is how many years of R&D, how many years of Apple working on these new types of form factors and products and software and services that they normally be doing during COVID, how much of that was just pushed to the wayside in order to prioritize the products they had to get out, right? And everything else going on with the pandemic, people working from home versus the office. So there's a bit of a delay there, and I think it's going to take a few more years for them to catch up.
All right, and for me, I think it was when I got my Apple Watch, which was the second version, and I don't even have it on right now. I mean, I haven't done an upgrade.
NYMEX WTI crude October futures settle at $74.52 a barrel. That's down $1.01 or 1.34%.
About being lean and how he ran his office and his team. He is stepping down from the job at the end of the year. It sounds like he's not leaving the company, but are they getting ready in terms of a younger C-suite thinking about the company moving forward?
I've been writing a lot about this, and my latest point of view, and you can read my Power On column this weekend on Sunday at Bloomberg.com to get more insight on this, but they've come up with a new formula to succession here, right? Do everything you can to make sure the old guard, Tim Cook's most trusted lieutenants, don't really leave the building. The last, 4 major executive departures, they didn't let them leave. Well, I mean, they didn't, handcuff them to their office or anything like that, right? But they gave them enough money and enough of a business card and responsibility to stay. Phil Schiller is not marketing chief anymore. He runs the App Store. Dan Riccio is not hardware engineering chief. He runs the Vision Pro. Now you have Luca Maestri, who's no longer CFO, and he's going to run IS&T, which, by the way, is probably the most controversial and boring division in the entire company. So, you can see what they're doing here. They're trying to keep the band together as long as possible because I don't think I think they're a little afraid of evolving and reinvention and risk-taking, given that you don't want to upset something that is working so well, but you also have to, at the same time, balance, long-term management of the company. And so that's really the succession story there. Kevin Parrick, he basically came to Apple alongside Luca Maestri in 2013 or so. Parrick joined the company. He's been the heir apparent. Apple has been signaling this CFO transition for months now. I wrote about it earlier this year. They have been showing off Parrick, so to speak, to financial institutions, investors, financial analysts, and the like. They've been talking him up externally and internally. He has been really shadowing Luca. Has been involved in every CFO-related meeting over the last year or so. They've been preparing for this. It was down to 2 candidates at the end of last year, so Kevin Parrick and Ciara Casey. When Casey apparently found out that she wasn't going to be the replacement, she left. I think that was at least a component of her leaving Apple. At the beginning of this year, she became the CFO of Sonos. So it seems clear that she wanted a public company CFO role, and Sonos is a great brand despite the issues they've been facing lately.
Yeah, we could do a whole segment on those app issues, Mark. We have 20
Maybe
seconds. Yeah, we have 20 seconds left. Very briefly, what about filling Tim Cook's shoes? 20 seconds.
I wrote earlier this year, my belief is that John Turnus, the senior VP of hardware engineering, he's still not 50. Tim Cook stays around another 3 to 5 years. Turnus is the only one that would have a long runway as CEO. And Apple's board can make a strong argument about getting a hardware person back in those shoes.
All right, around the world in Apple in about 7, 8 minutes, 9 minutes? You did it, as you always do. Mark Gurman, thank you. He is Bloomberg News Chief Technology Correspondent, Mark Gurman.
Apple's hedge fund, Rayburn. It's a type of apple.
Lean apple. That's like sticking with me. Hey, coming up next, we're going to stay with Talking Tech, YouTube specifically. This is Bloomberg.
our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon, in Sudan, and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out.
And Brent crude futures settle at $78.65 a barrel. That's down 90 cents or 1.13%.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It's 2:40 on Wall Street. I'm Amy Morris. All eyes on NVIDIA today. Earnings come out after the closing bell, a test of the S&P's $4 trillion recovery. Now with the company's earnings scheduled to arrive after the market closed today, traders are glued to their monitors, just watching for any wild swings. Going by the options market, NVIDIA's results are expected to send its shares careening nearly 10% in either direction. That is a move that would shuffle some $300 million in market cap. Shares of NVIDIA right now 2.7% lower. lower. Supermicro says it will delay filing its annual financial disclosures. That set off the stock's largest intraday decline in more than 4 years. In a filing today, the server maker said it requires additional time to complete its assessment of the design and operating effectiveness of its internal controls over financial reporting. Shares of Supermicro right now down 20%. Stocks are getting hit in the run-up to NVIDIA's earnings. The S&P 500 is down 1%, NASDAQ down 1.5%, and the Dow down 0.8%. The 10-year Treasury yield at 3.84% and the 2-year yield at 3.87%. And the billionaire founders of Two Sigma Investments, John Overdeck and Dave Siegel, are stepping down from day-to-day management after feuding for years. They're handing control to two new co-chief executive officers. That's your Bloomberg Business Flash. Now back to Bloomberg Business Week with Carol Masser and Tim Stenefit.
All right, Amy Morris, thank you so much. This is Bloomberg Business Week live on radio, TV, YouTube, and Bloomberg Originals. We're going to stay with our tech-focused hour. We turn now our attention to Alphabet's YouTube, which has changed course numerous times in its approach to gun-related videos. And according to one report, Tim, that includes when it comes to showing gun videos to minors.
Julia Love writes all about it. She's Bloomberg News technology reporter, and she joins us from our San Francisco bureau. Full disclosure, her story does mention Everytown for Gun Safety. It is funded by Michael Bloomberg. Bloomberg, the founder and a majority owner of Bloomberg LP, the parent company of Bloomberg News.
All right, so Julia, what is YouTube's policy on gun videos, and what's the problem or predicament that it's kind of finding itself in right now?
Yes, so YouTube has to walk a really tricky balance when it comes to content related to guns. Of course, there's many gun enthusiasts in America, and even gun safety advocates feel that YouTube can be a good tool for education about best practices for storing firearms. But there's a lot of concern about the gun content that minors are available to use, and this notion that minors are being influenced by what they see. And so earlier this year, YouTube announced that it would age restrict some content on the site so that minors wouldn't be able to view it. This is content related to the 3D printing of guns or homemade guns, and a switch that can be added to a semi-automatic pistol to make it fire like a machine gun. But the Tech Transparency Project found that weeks after the policy's announcement, those videos are still readily available to minors.
You write in the piece, Julia, about the idea of searching in YouTube search for certain things and suggested search coming up. The idea that, you know, you're being served videos that you might not necessarily be searching for. Talk a little bit about what the Tech Transparency Project found.
Yeah, absolutely. So that was another area of concern for them. They typed in some rather, generic searches like how to 3D or how to put and it was suggesting gun-related searches. I myself experienced that when I did a quick informal test. And so that too is an area of concern, the notion that they might be planting a seed for minors to begin viewing gun-related content.
Tell us about the gun tubers, which I have to be quite honest with you. When we were prepping for this story, and I said, I don't even know who the gun tubers are, but they are.
I had never heard of gun tuber before reading this piece, Julia.
Yeah, who are they?
Yeah, so there are, many, many niche content communities on YouTube, and one very vibrant one is this world of creators known as gun tubers who post gun-related content, and it really runs the gamut. Oftentimes it's just demonstrations, say an influencer shooting a watermelon for an eye-catching visual, but especially with 3D printing, there's concern about the content's role in boosting that technique, which creates untraceable guns that really create obstacles for law enforcement. And then, interestingly, earlier this summer, when the young man Thomas Crooks, who attempted to assassinate President Donald Trump, or former President Donald Trump, he was found wearing a shirt with the logo of Demolition Ranch, a popular gun tuber channel, and so that suggested to many that perhaps that had been an influence for him.
Hey, there's also this part, Julia, of YouTube where you get suggested videos based on what you've watched and what you've searched for in the past. In the past, that has come under fire for its algorithm and what it's recommended to kids in the past. Is that playing into this story too?
Yes, that wasn't the focus of this particular report, which was more focused on just squarely, is this age dating feature working the way YouTube said it would? But in the past, there has been research that has raised concerns about whether young people who are watching video game related content are then being served, steered toward gun related videos. And I even spoke with a researcher who told me that his own son had been served the content in that way.
So, Julia, to be fair, what has the company said? As we said in the introduction, that YouTube has kind of changed course numerous times when it comes to gun-related videos. So what is the company saying about this and its ability or desire in terms of content moderation, especially when it comes to things like guns and minors?
Yes, so YouTube is stressing that it developed this policy in consultation with experts. They say that it was in the works for several months, and they emphasize that it takes time for their enforcement to ramp up and that their enforcement will get better as its systems get better at identifying which content violates the policy and which doesn't.
Julia, Alvin Bragg of New York City takes a prominent role in the piece and in what's going on when it comes to the way that YouTube has been criticized for this. What's his role here?
Yeah, so I think he is one of a growing number of lawmakers who are really keeping tabs on this issue. I think we saw an uptick in that after a 2022 mass shooting in Buffalo, New York, in which the shooter was found to have used YouTube as he planned his attack. And so Alvin Bragg spoke out about his concerns about YouTube in April. The policy change came a few months after, and he is saying that he's glad YouTube is taking some steps, but he thinks that this report underscores that much more needs to be done.
I feel like this, we are increasingly, Tim and I know you and really all of the team here at Bloomberg, I feel like especially on the tech side, reporting out on stories like this, concerns, once again about content on various social media sites or media sites, and how do you balance content moderation with freedom of speech? And I feel like this maybe perhaps falls a little bit into this, because I think there's some concerns for those who guns don't bother them maybe as much, but feel like, well, wait a minute, some of the content moderation is maybe keeping out safety videos and things that are important. So is it all part of that same conversation? And it's a difficult one when we get to content moderation, especially in a country where freedom of speech means so much.
Yes, I spoke with a gun industry lobbying group that said that they are very concerned about this policy. They feel that it has the potential to infringe on free speech. And of course, as I said before, even gun safety advocates would like videos about the proper storage of firearms to be available on the site. So it's a really tricky balance for YouTube to strike. And in general, in Silicon Valley, content moderation teams have been hit by layoffs, so there may be fewer people doing this important work.
All right, going to leave it on that note. Hey, listen, thank you so much. Really appreciate getting some time to talk about this story. Julia Love is technology reporter at Bloomberg News, joining us from our San Francisco bureau.
Hey, coming up next on Bloomberg Business Week, Carol, it's one more thing. It's kind of a fun story that we like to talk about at the end of this hour each and every day, and it's about the growing number of 401k millionaires. There's some new data out there. We're going to give you all the details.
Well, I think it's kind of interesting on a day when we're talking so much about some of the big mega cap tech names, whether it's NVIDIA or some of the other players. They've definitely beefed up the portfolios for many investors.
We'll see what happens after earnings today.
I know. We heard, right?
We'll
10% swing could
Who knows?
potentially either way.
Who knows?
All right, everybody. You are listening and watching Bloomberg Business Week. Carol Massar, Tim Stanovic, and we are Bloomberg.
2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Now, your company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. The world's watching NVIDIA. The almost $3 trillion rally in NVIDIA shares over about 2 years has virtually rewired the stock market, giving the artificial intelligence chip-making giant an outsized influence on equity indexes. Now, with NVIDIA's earnings scheduled to arrive after the market close, traders are glued to their monitors, waiting for any wild swings, just in case. Stay with Bloomberg Radio for an NVIDIA special featuring an exclusive interview with CEO Jensen Huang. He joins Ed Ludlow on a special edition of Bloomberg Technology this evening at 6:30 Wall Street time on Bloomberg Radio and Television. Berkshire Hathaway is now the first U.S. company outside of the tech sector to surpass $1 trillion in market value. Shares of Warren Buffett's conglomerate rose as much as 0.8% to push its market capitalization above the $1 trillion mark for the first time. The stock has rallied this year on strong insurance results and economic optimism. Berkshire Hathaway now joining the ranks of a small group to crack the $1 trillion milestone, dominated by Alphabet, Meta, and NVIDIA. Abercrombie & Fitch beat analysts' sales expectations for the 6th consecutive quarter. It just wasn't enough to impress investors who've grown accustomed to the 90s fashion comeback. The retailer said comparable sales rose 18% in the second quarter, exceeding the 15% growth that analysts had projected. And the billionaire founders of Two Sigma Investments, John Overdeck and David Siegel, are stepping down from day-to-day management after they've been feuding for years, handing control over now to 2 new co-chief executive officers. They'll become co-chairmen and advise the $60 billion firm on quant investing and technology, and their equity stakes will remain unchanged. That, according to a letter to investors seen by Bloomberg. And those are the company stories that we're following this hour. I'm Amy Morris, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week, and attention New England viewers and listeners. Bloomberg 106.1 and 1330 are moving to 92.9 FM starting September 3rd. Listen to Bloomberg Radio in and around Boston on 92.9 FM. It is your news source for business news from the financial center of New England. Bloomberg Radio, moving to 92.9 FM the day after Labor Day.
And if you're there with us the day after Labor Day, you're going to hear stories like this because, this is top of mind for us. Berkshire Hathaway, I got to say, hitting a $1 trillion market value earlier in today's trading session. It is the first non-tech company to do so. I will say it's dipped below it, so it's no longer $1 trillion right now, about $998 billion. So we'll see where it ends up by the close of trading, but still significant.
Yeah, the stock has rallied on strong insurance results and economic optimism. Typically, the milestone is dominated by tech giants like Alphabet, Meta, NVIDIA.
Heard of them, right?
Yeah, you've heard of them. NVIDIA is a big one.
Wait,
today.
early earnings?
Yeah, happening today.
Yeah, we'll be all over it. Having said that, while we're on the topic of appreciation or growing value, not like I appreciate you, but I mean like appreciation and value. Welcome to the show of
Different
obvious.
kinds of value.
This story caught our attention. Fidelity's 401k millionaires hitting a new high. Gen X stepping up and delivering.
Yeah, in the second quarter, Americans between the ages of 44 and 59 ramped up IRA contributions to the highest in 5 years. That's according to a report that was released today from Fidelity. Total IRA contributions for Gen X savers were up 30% from a year ago.
Yeah, rise is notable, according to our reporting by Suzanne Woolley of Bloomberg News. She says the rise is notable given the competing claims on Gen X cash flows. Many have children in college, they've got aging parents, they've got higher health costs, healthcare costs, but are still managing to prioritize retirement savings. This is coming from Fidelity Wealth President Roger Stiles putting this out in a statement. Kind of makes sense because they're getting near retirement, so you got to kind of figure out all these moving pieces.
They are, but there is a long way to go. According to a recent Charles Schwab survey, it showed that Gen X believes an average net worth of $873,000 is required to be financially comfortable. The average balance, though, for a Gen Xer with a 401k at Fidelity was $182,100 in the second quarter. The average Gen X IRA stood at $97,215.
I always think about that. That's a big difference between. Well, that's what I think about. What happens when people retire?
Yeah.
And we talk about Social Security. I mean, that certainly isn't a way to support yourself, and so you do wonder. This is conversations we have a lot.
There's another piece of interesting information in this story about how savers increasingly are taking out loans from their 401ks as well. The percentage of workers with a loan outstanding in the second quarter stood at 18.3%. It's up from the first quarter, but it's still below pre-pandemic levels. That was at 20.1%.
And just give you an idea of how many were surveyed, the analysis from Fidelity covered more than 48 million IRA, 401k, and 403b retirement accounts. That was as of the end of June. So sounds like a pretty big sample.
What if you have multiple accounts, though?
That's a good point.
So I think a lot of people who switch jobs.
How many people do? Do you know what percentage? I guess probably a lot.
I mean, just speaking about it from my own experience. Like
you didn't
if I've
roll
left
them
a
all
job,
into one?
I haven't done that yet. I know I should, but you don't really need to.
No, you don't. Right.
So,
there's like nothing to do. I don't know. That's a good question. That's a fair question. So you do wonder how that distorts some of the data.
Yeah.
Speaking of data, we're going to get a lot from NVIDIA after the closing bell. So we're going to be all over it. We're going to talk in just a moment right here on Bloomberg Business Week a little bit with our Abigail Doolittle in terms of the significance of NVIDIA to the market trade.
We're also talking about private equity and the NFL because the news broke late yesterday that NFL teams can now sell a portion to private equity firms. We get all the details a little later on our program.
And they can buy into a few different teams, which is interesting. And we're also going to check in with the CEO of Babbel. Learning a new language. You can do it. September, special month because of that. All right, for those on TV, the close is coming your way. Tim and I continue on radio.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
It's NVIDIA's world. We're just all living in it. From Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Scarlett Fu. Alex Steele is off for the day. We're kicking you off to the closing bell here in the U.S. And right now, we're looking at stocks being broadly lower. At one point, it was on course for its worst day since August 5th. So that just gives you a sense of the negative prints that we're seeing here. If we drill down, you can see the Magnificent Seven underperforming with all 7 names in decline. Now, drilling down even further, you look at NVIDIA down by 1.9%. We've got about 80 minutes or so before NVIDIA's earnings release, a release that will be as picked over as any jobs report or FOMC statement. Treasury is falling at the long end of the curve with the yield inching higher on the 10-year to 3.83%, Romaine.
All right, but let's get back to the elephant in the room, and of course that is NVIDIA, the big macro event that isn't macro at all. It's been 5 quarters now where NVIDIA has posted triple-digit revenue growth, and that is a streak that likely continued for a 6th quarter based on analyst expectations for that earnings report tonight. That's the effect of being the main beneficiary of billions of dollars in AI spending, But that spending, as we know, has slowed a bit, and that has the market a bit on edge, kvetching about what is easily the most phenomenal stock of the past couple of years. And not just phenomenal, but the most consequential to boot, accounting for 6.7% of the S&P weighting, 11% of the NASDAQ, 14% of the Philadelphia Semiconductor Index. And those weightings mean not only does the company move U.S. stocks, but the importance of AI and chip proxies in Korea, in Taiwan, in Europe means NVIDIA will influence trading across the world too.
There's no question NVIDIA is a large part of market movements because of the representation it is in most indices and most people's portfolios, if they're indexed, that is. But I think the market's moving away from that. It's broadening out.
Now, for better or worse, NVIDIA will indeed dominate the market chatter today and probably into tomorrow, but it's not the only story in town. One of its main distributors, Supermicro, which had rode that AI wave to stardom, plunging almost 30% today after delaying its 10K filing in the wake of that Hindenburg report. And then you have Salesforce, one of the biggest corporate tech spenders out there. They report after the bell, as does NetApp, Okta, Applied Digital, HPQ, and CrowdStrike, Scarlett, each with their own potential to move the market.
Absolutely, but the story of the day of this year, really since the end of 2022, is NVIDIA and its influence on the equity bull market. Bloomberg's Ed Harrison featured this chart in his latest Everything Risk column, and what it shows is the S&P 500 in orange taking off after the Fed's last rate hike in July of 2023. You've got this meltdown this summer, and there's that big dip, but that was brief, and NVIDIA in white and large caps have pretty much recovered. Ed Harrison says we really need to see new record highs achieved for the rally to be confirmed. The rub, of course, being that anything negative about future growth from NVIDIA will have market-wide implications, especially after earnings from the other Mag 7 names raised concern all that AI spending has yet to pay off.
All right, the company expected to report almost $29 billion in revenue in the most recent quarter, double what it did in the year-ago quarter. Dan Morgan joining us right now, Senior Portfolio Manager over at Synovus Trust, which has about $19 billion in assets under management. And I want to start off with that revenue growth story because that has been basically the stock price appreciation story. Even with the slowdown in that growth, Dan, from basically 200+% to now 100% here, does that still leave you, I guess, positive on the longer-term outlook for this company?
Well, Romaine and Scarlett, I would expect that revenue growth rate to start to fall, actually, going into subsequent quarters, just because the comparisons become so difficult, right? But as you mentioned, Romaine, coming into this quarter, consensus at $28.5 billion. Most likely they're going to have to do a couple billion over that and guide into this upcoming third quarter above the consensus, which is about $31.5 billion. I think to really move the stock in the interim. So, but I would expect, Romaine, that the year-over-year growth is going to continue to slow down just because it's harder to keep topping these huge comparisons.
I am curious, though, too, about this slowdown that we've seen in some corporate AI spending. And there's been a lot of talk made when we talk about the Mag 7, how concentrated this market is, but there's a lot of talk about how concentrated revenue sources are for NVIDIA. More than 50% of its revenue coming basically from 5 companies like Microsoft, like Meta, like Supermicro, and Alphabet here. Does that concentration give you any concern?
Well, I mean, if we talked earlier about some of those conference calls, and you look at the guidance that all those guys gave, the FANG stocks, so to speak, the Metas, the Microsofts, they were all anywhere between $40 and $50 billion in CapEx that they were going to spend, and a large portion of that's going to go to data center AI. So when I heard those numbers, I was actually very encouraged by them. Also in the fact that AWS, GCP, and Azure all showed an acceleration in year-over-year growth in the second quarter, which was due to data center and AI. So, but you're right, it's a very narrow group, right? If those guys start to peel back, Scarlett and Romaine, they do have other areas that they're in, but it's so heavily intensive with these, data center spend rates.
Yeah, data center is really the driving force of, at least of the stock. You mentioned that the data center segment now generates more revenue than both Intel and AMD's combined data center units. One thing I find interesting, Dan, is that you bought into NVIDIA back in 2018 before people even talked about AI in data centers. What was it at the time that attracted you to the stock and that, still retains value, even if the spending on AI chips starts to slow down more than we might expect?
You know what's interesting, Scarlett, is the reason that we added that to our buy list back 5 years ago was really just based on the fact that in the past, we had always perceived them as really just a gaming stock where they were producing GPU chips that were used in the gaming space. And they started to come out with chips that were going into the data centers and competing directly against AMD and Intel, and they were gaining market share. And all of a sudden it flipped where the amount of revenue they were generating from data center actually exceeded their gaming segment. And that was quite a few years ago. And kind of in the rear view mirror would always be like, oh yeah, by the way, we have 70% share in the AI chip space. Nobody really cared. They would talk more about the Omniverse. If you remember Meta, Facebook changing the name to Meta and talking about the Omniverse, they had a lot of chips that were skewed towards that they would talk about. But that's why we put it on the buy list. And, it's just, it's kind of like putting Apple on the buy list back in 2005 with the iPod, and then all of a sudden the iPhone came out and exploded. So just, hit a nice home run. What can we say? Clients are happy.
A massive home run, and I'm sure that it comes up all the time when clients speak with you. One thing about these results, we've seen this with, say, Abercrombie & Fitch. It had a beat and raise quarter, but that wasn't enough, and the stock is falling today. NVIDIA could have a beat and raise quarter, but it seems like the whisper number is back. It needs to do more than just beat, doesn't it?
Scarlett, that's the challenge coming in this report. You mentioned, Romain said, over 100% growth on top line for this upcoming second quarter, but everybody's hanging their hat on the Q3 number, right? So if consensus is at 31.5 billion, I've heard whisper numbers as high as 33, 34 billion. So it's almost like even if they beat the estimates, but they don't hit that 33 or 34 billion mark in terms of guidance on the third quarter, it's almost like a disappointment, right? Even though they're growing over 100%. So it's a tough crowd to please right now.
Absolutely. All right, Dan, we'll see how it all shakes out in just about an hour and 10 minutes. Dan Morgan from Synovus Trust. And be sure to tune in to a special edition of Bloomberg Technology. We've got an interview with NVIDIA CEO and co-founder Jensen Huang. That is tonight at 6:30 p.m. Eastern Time.
All right, coming up, we got a lot more to talk about, including what's going on in the ETF space. Inflows starting to heat up here. July, the second best month of flows for funds ever. A sit down with the CEO of one of the largest ETF providers in the U.S.
Plus, PE firms are getting ready to play ball with the NFL after the league's historic vote yesterday to allow private equity ownership in teams. We sit down with the NFL's executive vice president and senior advisor, Joe Seclair.
And we keep a broader eye here on the market here. NVIDIA going to have potentially a huge impact here on that broader market. Stocks on the back foot right now. That could change in about 50 minutes' time. Stick with us. This is The Close on Bloomberg.
Earnings. I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
Up
up-to-the-minute political news, whenever and wherever it happens. I'm Joe Matthew at the Democratic National Convention in Chicago, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Summer can typically be a sleepy time for trading, including ETFs, but this year the funds are seeing a surge. You look at July, $122 billion of flows made it the second best month on record. Now, every month so far this year has exceeded the historical 10-year average, which you can see on this chart. The bars representing the long-term average, the 2024 lines indicating where we are this year. Van Eck has more than 60 electronically traded funds under its management, including a new one it announced today that began trading following the big sector behind today's big stories, and that would be semis. CEO Jan Van Eck joins us now. So, Jan, the ETF we're talking about here is SMHX, which kind of plays off of your existing semiconductor ETF, SMH, but there's a distinction here. Walk us through what SMHX does.
Sure. Well, for the whole ecosystem in semiconductors, it's really broken into this bifurcation between the giants that make the chips, like SMC, and the designers, and then the equipment makers. And if you like an asset-light model, like a lot of people do, and you want to avoid the risk of manufacturing chips, which has tripped up Intel and other companies, then you can actually put together a portfolio of these fabless semiconductor chips, so SMHX.
Is there any overlap at all between SMH and SMHX?
Yeah, a bunch, but not exclusively. So you take out the fab companies, like TSMC is a top holding of SMH, and you take out the equipment manufacturers as well. So it trades differently. Probably not surprisingly, it's outperformed actually over the last 10 years or so.
Can I just follow up with that? Does NVIDIA fall in that category of SMHX because it does?
Oh, yes, for sure.
Okay,
it's
because it does rely on that TSMC too. So.
Right. No, NVIDIA has been the star of SMH as well, but what you're excluding is the fab manufacturers and the equipment makers.
Got it.
And so you're just getting those like 20 or so chip designers that don't require as much capital and have performed really well. And a little bit of the bet, we think, is that in 2 or 3 years, NVIDIA, God forbid, will have competitors, and amongst the competitors will be those companies, the other companies in the fund.
Well, what about for the sort of further along that sort of supply and purchase chain? There's been so much focus on the chips themselves and to, I guess, a secondary extent to the hyperscalers and the data centers here. But what are investors really looking for? I know for right now, everybody wants NVIDIA. They want basically the person or the company that's making the chips. But at some point, they're going to evolve too to try to look for other beneficiaries. Are we seeing that baked into the ETFs just yet?
Well, I mean, I think NVIDIA is trying to lock in its market share, right? I mean, it's got like 70% market share. It owns the AI, and it sees the competition coming. So through its CUDA software, right, they're trying to lock in that hardware dominance. But the other software companies, I mean, you know, you listen to them, it'll take them 2 or 3 years, but they're coming. And they, with a high degree of confidence, feel the same demand from customers for diversification for their data centers.
When do you get to a point where you feel like it's worth coming up with a new product to address that? Like, what's the critical mass that you look for that it makes it worth your while, it makes it worth Van Eck's while?
We want to have a simple, clear, pure play. That's what we look. And we've been looking at this, trust me, with SMH being 20 billion, we've looked for a lot of different ideas, and this is the only one that finally came across our radar screens.
This is another ETF in a long line of thematic ETFs that Van Eck has. Thematic ETFs are once the thing, but they've kind of given way to income ETFs and buffer ETFs. How do you see thematic ETFs fitting into someone's portfolio?
I mean, it's sort of a core satellite concept, right? You want to have the vast bulk of your retirement savings, your non-play money, in, 60-40 portfolio, right? And then it's what do you want to overweight? And I mean, semiconductors has gone from like 2% to 10% of the S&P. So I guess it's kind of beyond thematic since it's so much of it's bigger than the energy and finance sectors at this point. But like one of the thematic plays I like, just to pick one, is India. So just in 10 years, you just know that country is going to be about the size of all of continental Europe in terms of GDP. And the stock returns actually over the last 5 years have matched that of the S&P. So I just say, I want that in my portfolio. I'll call that thematic. thematic, even though it's a country, if I have high conviction over the trend.
How much diversification, though, is necessary in these types of funds to take advantage of those themes? I think back to when we started to see a lot of ETFs in the EV space, but it was just dominated by Tesla. And if Tesla had a bad day, then the ETF had a bad day, and vice versa. How much does diversification matter? Do you need that?
I think you do. I think that's a great question. That's something when we talk about pure play that we look for. But you also, to your point, want a certain maturity to the businesses, right? If they're not even making EVs, right? But they came public through a SPAC or something like that, like that's a little scary. So the good thing about the semi space, it's been around for decades. I mean, TSMC went in public in 1993. So even this idea of fabless has been around for a long time.
All right, Jan, great stuff, and really appreciate you taking time for us here on a very consequential day for the broader markets. A closer look here at the ETF world. Jan van Eck, Chief Executive Officer at Van Eck Associates. Coming up here on the big program, we're going to take a closer look at what's been going on in the bond market. This is still a big week for macro with some consequential data coming at the end of the week. Carissa McDonough, fixed income strategist at Community Bank Trust Services. She'll be joining the big program in just a second. This is The Close on Bloomberg.
Do you think it'll be the case where someday you would be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
All right, let's get a view from the sell side. Time for our top calls. The big movers on the back of analyst recommendations, and we start off today with United Therapeutics. Oppenheimer raising its price target to a street high $575, up from $400, with the analyst positive about the drug maker's prospects to treat patients with the lung disease known as IPF. The treatment, the analyst says, could add $5 billion in peak sales over the next few years. The shares moving higher here, up about 3% to a record high. Next up, Moderna, an upgrade to hold from reduce over at HSBC. The price target staying where it is, with the analyst seeing great potential for Moderna's mRNA cancer vaccine as a future revenue stream. Moderna's vaccine, which is entering late clinical stage trials, is leading competitors in the race to get a vaccine to market. Nevertheless, the shares moving slightly lower on the day. And finally, we have to talk about Supermicro Computer. Losing its buy rating over at CFRA, the analyst saying he's concerned that the server equipment maker delayed filing its 10K annual report to the SEC. This a day after allegations from short seller Hindenburg Research about Supermicro's accounting practices. While CFRA is still positive about the long-term fundamentals, the analyst says probably best to exercise caution for now. The shares, which were down as much as 30%, pairing some of those losses, now down about 19%, and those
are some of our top calls.
All right, SMCI, the worst performer in the NASDAQ 100 today with its 19% drop, Romain, that you mentioned, more than double the second biggest decliner. Let's turn now to market action in Treasuries on the heels of today's 5-year auction, which saw the lowest results since April 2023. You can see right now the 5-year at 3.66%, the 2-year seeing some buying there, pushing the yield lower at 3.86%. The 2-year, of course, ultra sensitive to Fed policy. I want to bring in now Carissa McDonough. She is fixed income strategist at Community Bank Trust Services. Carissa, it is good to speak with you. I know that everyone's fixated on equities, in particular one big cap growth name in equities, but there is a lot of economic data coming up at the end of the week, notably core PCE, which people will really gravitate around. How are you thinking about expectations heading into this data point, given the pricing of Fed cuts, expected Fed cuts?
Great. Thanks so much for having me. We are believing that, inflation is actually becoming under control. I think the survey data that we've seen earlier is not necessarily matching with kind of historical hard data. And I think kind of each inflation data print that we've seen coming out, and PCE is no exception. We would expect that to stay with this whole notion of the Fed has been, very careful in leaving rates where they are, and we think that that will follow suit and show that inflation is coming under control.
When you look at what the market is pricing in right now, 4 rate cuts through the end of the year, 2 full percentage points of cuts in 2025, how comfortable are you with that pricing?
If you had asked me that question before Powell's speech last Friday, I would have said, very measured pace, like this Fed has been very careful, like I said, with all the data points. It's very deliberate. But, when we heard Powell himself come out and say, well, it's time to start cutting, not necessarily believing that we're going to have possibly 2 in September, but I don't think that that's off the table. I mean, let's not forget that, we had the minutes come out from the July meeting, and there were members of the Fed that believed that cuts were appropriate at that meeting. So if Powell is now on board, I don't think, 1% by the end of the year, 2 percentage points. Actually, we're seeing closer to over 2 percentage points through early 2026. I don't think any of that is off the table. The Fed has a lot of history to base their decision making on, and I would say that this is one of the more successful Fed policy cycles that we've had, but we are at a transition point.
Yeah, certainly so in hindsight, and you look back on it and all the criticism that they got for the delayed start to this cycle here. Now they kind of find themselves in that same position again. I am wondering, though, as an investor, Carissa, I mean, if you buy into this idea that rates are coming down, we can debate by how much and how fast, but if they are coming down here, are you comfortable now extending duration, not just in the Treasury space, but also on corporate bonds, and for that matter, even something like mortgage bonds as well?
Oh, excellent question. Duration is absolutely our top trade at this point, and we've already had a significant move in longer rates. They've come down by close to 0.5%. But if we look at long-term 2s, 10s spreads, and we're finally getting back to maybe a not inverted yield curve, where we might see some positive yield curve action here. If that long-term historical average is something like 50 basis points or higher, then that suggests that long-term Treasuries still have room for rates to continue to drop. So yes, long Treasuries, top trade. We really like mortgage backs here. That kind of, clarifies that duration bet too. So
well,
yes.
Well, I am curious about the balance, and I don't want to get too wonky here, but you have a 2-year right now, basically at 3.9. You have a 10-year that's basically about the same, slightly less here. What if we run into the situation where we do see a meaningful drop in short-term rates as the Fed starts to cut, so that 2-year drops? But if we don't see that similar drop in the 10-year or even on the longer term, on the 30-year here, does that sort of mess up that trade at all, or is there sort of a balance there?
No, you are still well positioned if you have that duration bet, and I would note that there's plenty of, you've got corporate exposure, you've got other kind of shorter term exposure. We're not suggesting that 100% of your portfolio is supposed to be in long treasuries, although we are kind of long versus the ag duration. We're around like over 6 years at this point, but you should have representation across the board. But no, even if you're just clipping a coupon in long treasuries and you have a little bit of a yield move down, that is still kind of a more magnified trade duration-wise than the benefit that you would get from a drop in 2-year rates. So that logic still holds.
All right, Carissa, great stuff. Carissa McDonough, fixed income strategist at Community Bank Trust Services. A closer look here at the health of the fixed income market. When we come back, we're going to take a closer look at the health of the private equity market. With fewer than 32%, with just 32% of PE firms launching so far this year, 32% fewer, I should say, than in 2023. We're going to take a closer look here at how the market is doing. Suneya Sinha over at Raymond James will be joining the program in just a second. This is The Close on Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about?
According to the Wall Street Journal, OpenAI is in talks for funding around valuing IT above $100 billion.
So I had a little sneak preview.
The top names in business are on Bloomberg.
Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still, and forget AI. I need a basic technology adoption.
Nobody covers business like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Scarlett Fu, and it's T minus, what, 40 minutes? 50 minutes before NVIDIA's results?
Yeah, we get the closing bells in about 30 minutes. Of course, NVIDIA coming after the bell tonight. And, you know, we kind of forget. There's like about, 20 other companies also reporting earnings, but nobody.
No, it doesn't matter.
Nobody cares about them, although they should. I mean, there's some consequential ones in there, like Salesforce, of course, which normally used to be the bellwether. And then you got these kind of second-tier software companies that might have an AI story, so maybe we'll mention it after the 4 p.m. hour. But, of course, all the oxygen in the room is going to be sucked out by Jensen Huang and NVIDIA.
And then after that, what happens? Does everyone just kind of do this? They wait for PCE on Friday, and then the jobs report the following Friday, and we're kind of done?
Yeah, I don't know. But, I mean, this has been the hot story, and we should point out here, of course, as we come back, we have headlines crossing the Bloomberg terminal right now on the AI space. The money continues to flow there. A new report out right now by the Wall Street Journal, a new funding round for OpenAI. Of course, Microsoft also participating in this. We don't have any numbers here, but it really gets to the broader idea here that this right now is where the money is going and maybe where it might go for some time. We do, though, of course, want to talk about things other than just NVIDIA and AI and focus a little bit on what's been going on in the private capital market, specifically private equity. This year, through last Friday, 848 private equity funds have launched. That sounds like a lot, but it's 32% down from where it was at the same time last year. Here to discuss the state of private capital, where that money is going, and, well, where it might not be going, is Sunaina Sinha-Haldia, Global Head of Private Capital Advisory at Raymond James, and she joins us here in Studio 2 in New York. Great to see you here.
Thanks for having me.
I'm actually glad that headline crossed the wire. I mean, we didn't bring you on to talk about AI and NVIDIA, but as I'm sure you know, this is where all the attention, and for a certain extent, a lot of the money has been flowing to. When you think about the state of private equity and the idea that so much of what it does has been thematic investing, sort of following where the puck is going, those sort of moonshots here, how much has AI either helped or hindered the state of the private equity industry?
Well, I think what AI has done is certainly give a hockey stick effect to a number of businesses who, if they develop AI products, it can be a great inflection point in valuation. Now, traditional private equity buyouts, as you both know, only tackles sort of profitable, steady-state businesses. It's the game of venture and growth capital to really fund those moonshots. So while AI has been a great story for the markets in general and is a great promised land for many businesses, the reality of what actually exists in the state of the art in many businesses who are making AI plays, that's a story that's yet to be told.
One of the big issues in the private equity space, where it's really ailed it, has been, of course, the big rise that we saw in interest rates, which now may actually come down, but also the whole issue, too, that some of the returns that were promised in the most recent vintages, at least for right now, haven't panned out. Are we maybe at a point where that is going to start to pan out, that these issues will be resolved?
I think there's a whole slew of the market, most importantly the limited partners that fund private markets, that are waiting for a change in the interest rate cycle to drive an M&A boom and therefore drive a return of capital boom to them. It has been slower than anyone expected. Last year was one of the lowest years for return of capital in the last 15 years, and so far year to date is the second lowest. Just goes to show that limited partners, the endowments, foundations, pension plans that fund private markets are saying that unless you get me return on capital back, I'm not likely to re-up at the same level as I was in the past. Now, this will resolve over time, and the interest rate pivot will certainly help, but it's been a struggle over the last 18 months, no question.
I think about what the co-president of Apollo said not so long ago in June. He was saying that, I'm here to tell you not everything is going to be okay. There are going to be fewer realization and lower returns on the horizon for much of the industry. How much of that have we already seen? How much of that is still to come?
I think in terms of the realization part, he's absolutely right. It's been a very tough 6 quarters or so. Now, private equity runs on a clock. It's a 4 to 5 year investment cycle followed by a 4 to 5 year harvest period or exit period. We've run up against the back end of that, and the industry is now facing companies that they've held on to for 6, 7, now 8 years. I think the big risk is that of an aged assets problem, but with that clock also comes an impetus that everybody has to do something and do something soon. Otherwise, they're going to run out of that time clock. And so we have this pressure building where that's that interest rate pivot plus the elections that everyone wants to get past before the private equity sponsors really come to market to sell their businesses. And I think that we're going into a tick-up. We've been seeing the tick-up for the last 2-3 quarters, but that inflection point will really happen after the Fed starts cutting rates.
Okay, after the Fed starts cutting rates, how soon after the Fed starts cutting rates?
Well, if the Fed starts cutting rates and we get past the election and the elections kind of settle in, they're priced into the markets in terms of valuations, you're looking at about a quarter to 2 quarters thereafter. It takes about a quarter to sell a business.
All right, Sunaina Sinha-Haldia, thank you so much for joining us. Sunaina is Global Head of Private Capital Advisory over at Raymond James, normally in London, but she joined us in New York today. Now, speaking of private investing, coming up, a touchdown for PE firms seeking a stake in NFL franchises. Will break down the fallout from the historic NFL owners' vote. This is The Close on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, where's the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
The private investing and sports world are buzzing today following the NFL owners' landmark vote. Team owners voted 31-1 to allow PE firms to buy up to 10% stakes in their franchises.
Who was that one?
Someone in Ohio. It's a move expected to attract billions of dollars in fresh capital. We sat down with Joe Seclair. He is currently the NFL's executive vice president and senior advisor, also serving as its former CFO. Here's what Joe shared about what led up to that final decision.
The committee's been working hard on this for a year. Over the course of that, we have many committee meetings, and we also updated the full membership several times during the process. So everyone was pretty much up to speed as to the direction we were heading. But when our ownership policy, we view that as, one of the fundamental strengths of our business model. Our ownership policy, the way we share revenue amongst the clubs, our debt policy. These are all things for a boardroom, not a locker room, but these are really important to our business model. So when you're looking at making a change to one of those, we spend a lot of time. So the 90 minutes that we were in there yesterday, there was not a lot of deliberation, but it was really just methodically going through the process, reestablishing and reminding everyone what our goals were when we started, going through the process of the last year, the meetings we had. We had a lot of discussion in the marketplace with industry experts and PE fund managers. So it was really just going through all of that and then laying out what the policy is and really focusing the full membership on some of the specific elements of the policy that we felt was important. So that took time. There was a little bit of conversation on the floor. I wouldn't call it deliberation, but a little bit of conversation.
How did you arrive at the 10% limit?
Well, that actually goes to the point of being very deliberate and measured. One of the things that, as we looked at what the other sports leagues did, as you know, they're much higher. I think our owners just want to take one step at a time. You know, this is a very new emerging asset class. I think we could all have thoughts about where the market will go and what the market dynamics are, but no one really knows for sure. We do think that the program will grow. More funds will look to invest in sports. I think many of them look at it as an indirect way of buying into the best media content there is. So I think more funds will be interested. And as far as the league goes, I think more owners will look at this over time and think about how it works for their franchise. So we wanted to start at a lower percentage and then go from there.
Obviously, anyone who invests in anything gets a say to a certain extent in what goes on in that business. It's obviously a much different structure when you're dealing, say, with individuals and families that are a little bit more contained. With the whole PE structure, obviously you're dealing with the PE firm itself, but obviously all of their limited partners that might be investing in that. How much say are some of those limited partners going to have, or are they going to have to funnel that through the general partner?
Yeah, it's a great question, and that is actually, there's been a lot of attention to that. People hear about private equity investment. What does that really mean? In our case, the controlling owner, per our league policies, pre-existing league policies, has full control over every aspect of the team. Limited partners really have no governance say at all. And in this case, it's the same thing. These are non-controlling limited partner shares, no governance rights, no say in how the team operates.
In terms of timeline, you have said that the NFL is eyeing the first sales to be announced at the December owners meeting. Do you anticipate there to be multiple sales announcements at that time? Well, we didn't say there would be a sale. What we told the owners yesterday is that we would try our best, now that we put the policy in place, we would try our best, if anyone was interested, to accommodate a sale, to go through our normal approval process. So if there are any transactions are ready to be approved, we'll do our best to get them approved this year. Don't know if there will be any. Okay. What's the process then for each investment? Does the league need to approve each separate transaction, including when the firms exit some or all of those stakes? Yes. Our typical policies are any sale transaction has to be approved either by the membership or some of it under certain terms are delegated to the finance committee. But all of our approval processes would still apply exactly the way they do with individuals here.
What is the financial health of the NFL right now?
Financial health is excellent. We are the largest league by many measures. Every team is profitable. We have a long-term media deals, long-term collective bargaining agreement. Financial health is excellent.
Every team profitable, so every team in theory could stand on its own. They don't necessarily need the cohesiveness of the NFL as it provides it.
Well, they're all profitable. I mean, it is part of the. I don't. When you say stand on their own, I'm not sure what you mean by that. They have to be part of the league.
Speaking,
I mean, they have to be part of the league to drive their business, but they're all profitable. You know, I look at the other leagues, and you mentioned the NBA earlier. It's seen moving forward with expanding its teams after signing that big media rights deal. The NFL currently has 32 teams, which is like a magic number when it comes to your playoff format. Is there any consideration being given to expanding the NFL beyond the current 32? There's no real conversation. You know, our commissioner has addressed this question several times. I think the last time, maybe last Super Bowl. You know, down the road, is there an international division of some sort? Perhaps, but there's no real conversation going on right now about expanding. I ask because given the demand from institutional investors beyond the 4 that you approved to come in and make proposals to buy stakes, football and sports is an emerging asset class. So, you know, there's not enough supply. There's plenty of demand, though. There is plenty of demand, for sure. So when you look across other leagues, what do you see as the single biggest benefit and also the single biggest drawback when it comes to allowing outside capital to invest in the league? Well, we hope that we've addressed, if there are any drawbacks, we hope we've addressed them by being measured and starting off slow. I think probably one of the biggest issues to address is just making sure that your fans understand that it's not going to change the operations of the business. Again, going to your prior question, no say in the operations. People hear private equity and they think about that. They think about taking control of companies, et cetera. That's not going to happen here. So I think we've tried our best to make sure to communicate to the fans that none of this really changes. This is just financing for owners. It's an option to access new pools of capital for financing, and that's it.
What about sort of the longevity of that capital? Obviously, when you're dealing with investors and the nature, at least, of what private capital is, obviously they are long-term investors, but they're not necessarily buy-it-for-life investors that I think the NFL has been accustomed to for so many years. What was the discussion around the potential that there could be a churn in those investments much quicker than
great? It's a great question. As we've looked at this and studied this, going back to trying to predict market dynamics, one of the things we arrived on was liquidity expectations. And you're right, a lot of private equity firms, they typically buy and hold for a short period of time. One of our policy parameters is that they have to hold for at least 6 years. But even beyond that, the funds that we're talking about, these global funds, they have smaller funds within them. Some of them are longer duration, and some of them will be making the investments. So I think it remains to be seen. But I think that goes to what I said before about we see the program expanding down the road. If there's sales, we believe there'll be buyers.
I am curious about the league's stance on players, active players, taking ownership stakes in the teams.
Well, our current policy, the one that we passed yesterday, would not allow that. I mean, that is a concept that we've thought about, but I think we'd have to think a lot more about that down the road.
That was Joe Seclair. He is NFL Executive Vice President and Senior Advisor, and also the former CFO of the league. And thank God for that story and NVIDIA's earnings today, Romaine, because it's late August and there aren't a whole lot of catalysts in the market today.
Yeah, well, we're going to get them this week, of course. NVIDIA coming after the bell tonight. And don't forget, we get some inflation data on Friday during what's normally, I mean, given it's the last week of August, would be just a pretty sort of blah kind of day here. You take a look at the S&P. I mean, the good news is we're well off the lows of the day. Remember, it looked like we were headed for a pretty massive sell-off a little while ago. We still have about 14 minutes until we get there. And just keep an eye, too, on some headlines crossing the terminal there. The Telegram CEO, now formally charged in France for the alleged criminal use of that Telegram app. Of course, something that we'll keep an eye on there. But, of course, all eyes really on NVIDIA. We should point out NVIDIA actually, too, one of the biggest drags on the broader market today.
It's down 1.5%. And of course, options indicate it's going to have a big move after hours trading and tomorrow, no matter what it announces. Also, Super Microcomputers, which is a distributor for NVIDIA, the biggest decliner in the S&P and the NASDAQ 100, has delayed its financial results, its financial report.
Yeah, absolutely here. And just going back to NVIDIA, too, I mean, we talk about the market impact. It's weighting in the various indices. So I was looking at sort of, the options implied move. I think it's like 10%.
Yeah.
They were averaging, coming into this quarter, 8% moves up or down for the life of all the reports they've given. There were only 3 companies that even had an average higher than 5%. It was Microsoft, Alphabet, and I think Meta was the third here. So basically, you only have 4 companies that even have put these types of outsized moves on average, and NVIDIA is still by far among them. Despite the fact that, of course, I mean, it was kind of a smaller company just, I don't know, 2 years ago. I mean, has any company added this much market cap?
It's been a straight shot up. Yeah, well, it went from a graphics, a computer graphics, video game processor to what, Bitcoin mining company, and now, of course, the poster child of AI.
Yeah, of course, we're keeping an eye on that. And of course, we just mentioned the Telegram news there with the Telegram CEO being formally charged in France as, of course, that deadline there in France for the authorities there to do something. We'll keep an eye on that case. But of course, as we march closer to these closing bells, with just a little more than 11 minutes to go, all eyes really are on NVIDIA, the outsized effect that it could have on the market trading in cash session tomorrow. Katie Kaminsky joining us. She's the Chief Research Strategist over at Alpha Simplex Group. Here to talk about, I guess, the broader market moves. But Katie, we got to start with, I guess, the micro move, and that is NVIDIA here. Now, just talk about the importance of this right now, because it's been years. I can't remember the last time we had a stock here that had this much importance on one particular earnings report, the ability to either lift this market or completely tank it.
This is, I think, fascinating. And if you look at today, I think the thing that has been the most surprising is just how I think everyone's been expecting it to pop, and that generally expectations are positive, and today has been somewhat of a negative day. So I think that, to me, has been a little bit interesting. But just the fact that the market is so focused on this one stock, it tells us how vulnerable we are to some of these narratives. And tomorrow could be a very interesting day.
So looking now to the market on close imbalance, S&P 500, 1.5 billion to the buy side. NASDAQ 100, 250 million to the buy side. Dow 30, 445 million to the buy side. The Mag 7 stocks seeing 15 million to the sell side though.
It's like 50, but it's not what it was just even a year ago here. I would think that would be a good thing, right? I mean, you want a little bit more idiosyncrasicity or something. I don't know if that's a word, but you know what I mean.
Yeah, exactly. You want a little bit more idiosyncrasicity, I guess you might say. And what I would say is that, it just shows how much we've had a polarized and definitely crowded positioning, and that the market has been really focused on some key names, and those are driving a lot of volatility. I would point out that we have seen a lot of rotation with what has happened earlier this month and even in July. So I think that there is some sort of diffusion of that crowded behavior, but it does make us more vulnerable to individual data. And I think that's why on a week like this, that's pretty quiet, all eyes are on NVIDIA today.
I like what you said about crowded behavior and giving rise to risks and, how that leads to over-positioning perhaps. Can you tell us a little bit about the other narratives that are out there, particularly as they affect other asset classes? And I think of, for instance, the carry trade unwinding, the yen being the carry trade that everyone focused on. How far along that narrative are we? Has that been resolved?
So I'm really glad you asked that, because honestly, from a trend follower's perspective, this summer has been a seismic shift. We've seen massive flux and changes in asset class positioning outside of equities that is more indicative of concern of a potential recessionary trade. Let me just give you an example. We've seen commodities go from long signals to much more short signals. We've seen fixed income signals go from short to long, and especially in the dollar. And given what happened earlier this month, the narrative has also changed there, that now signals are long FX currencies versus the dollar, so looking at a weaker dollar going ahead. So I think we are in a pivot where we're going to see very different behavior in the next few months, and cross-asset themes are definitely showing that things have shifted.
Different behavior in the next few months. Does that mean we might get delayed reactions to things, given that it's going to be pretty slow trading for the rest of this week and next week, of course, until after Labor Day and people really come back and are ready to get back to work?
Yes, that's correct, because September is typically a challenging month, and October for equity markets. And given the amount of uncertainty and all the focus on the pace, the size, and just sort of the timing of the Fed, I think there's going to be a lot of volatility, and the fact that the markets have really shifted more towards focus on economic weakness or economic growth, and just a very different narrative than thinking about inflation, which is what we thought about earlier this year.
But I mean, we're still not kind of past that, Katie. And I am curious. I mean, I know the market's already we're already celebrating the drop in rates. It still hasn't actually happened, but everyone's priced for it. And in fairness, the Fed has kind of signaled that they're going to do it. But is there going to be a fundamental shift, I guess, in allocation, in strategy, once we actually do see the whites of the eyes of those rate cuts, or is everyone already positioned around it already?
I think this is a good point, because for fixed income, it actually really still matters. Why does it matter? It matters because inflation is very important for long-term cash flows. So I do think we're going to see a lot of volatility around the yield curve. We're going to see potential for steepening in the yield curve, and that's something you typically might see as you see cuts. So I think that it's not over. It may look better now for inflation, but we could definitely have a pop back up in inflation that affects fixed income markets going forward, especially in the eye of cuts.
I am curious about macro conditions, because part of this whole rate cut narrative and the idea that we might actually be sticking that proverbial soft landing that we've been sort of hoping for the last couple of years. But we've seen some softness in the economy. We've seen it in consumer spending. But I want to pose the question to you about what we've been seeing in the commodities market as of late. There's a lot of weakness there, particularly when it comes to oil. And I know a lot of this is kind of ex-U.S. more is what's driving that rather than what's happening within the U.S. here. But in the past, those types of drops and those types of softness that we see in industrial metals, in oil and other products have usually been a harbinger that something is wrong with our economy. Is that not the case this time?
So this is exactly an important point from a technical trader's perspective. From a trend following perspective, precisely what we saw in COVID, cross-asset themes tend to move first. So commodities, for example, short signals in commodities can be an indication that there's weakening demand. The fact that people are flocking to fixed income suggests that there may be more risk out there. So we're definitely seeing that there's more of that potential concern for equities. So the probability has been repriced for a potential recession going into the second half of this year.
Catherine, what do you see as the biggest risk for the rest of the year?
I think it would be economic data that comes out as a surprise. Why? Because people are definitely at high valuations. If we start to see that this narrative isn't as stable as we thought, and that's precisely what we saw earlier this month, a little bit of indication that there's some economic weakness is something that might spook investors that perhaps cuts came a little too late. And that's why that's the thing I would be watching the most this fall.
So that following that, which assets are priced to reflect that possibility versus those that are not?
So this is probably more cross assets, so things outside of equities. Unfortunately, equities tend to fall last. What we do see is that commodity prices have priced in quite a bit of weakness, and you're also seeing the dollar also under pressure. Fixed income has rallied, but I think commodities is probably the sector to watch the closest, and that has been in a downward trend since earlier this summer, particularly some reversals in metals, as well as the energy prices changing directions as well.
All right, I just want to wrap this up, Katie, and we're going to kind of circle back, of course, to the thing that no one wants to talk about, which is NVIDIA again. But it's more. This is more a question really about big tech and sort of these large mega cap names that have really led this market higher. As we sort of transition to a new rate cycle and maybe a new economic cycle, do you think we could potentially get a new market cycle that is broader and a little bit more diversified than what we've had over the last year and a half?
I would hope so. I mean, I think right now it's unclear how we get there because I felt that way in the last 2 months as we saw a lot of rotation. But I guess if we start to see an environment where things stabilize, where lower rates helps companies, you might have a scenario where small cap companies can do well, and you might continue to see that rotation. So I think the question is going to be how do cuts impact the economy overall, and how do companies react to that? So it is possible that we could have a little more broadening in that scenario.
All right, always a smart conversation. Going to have to leave it there. Katie, Dr. Katie Kaminsky, Chief Research Strategist over at Alpha Simplex Group, helping us count you down to those closing bells. Less than 3 minutes to go here. And we have a slew of earnings, Scarlett, coming after the bell, including NetApp, including Okta, Salesforce, CrowdStrike, Victoria's Secret. Am I forgetting one?
Yeah, there might be one.
Oh, okay. I think NVIDIA. Yeah, obviously that is really going to dominate the conversation, but it raises the question too, and we're taking a look at some of those names right there on the board.
Mm-hmm. You included HP as well, which is another tech company that, former tech giant and now less so. One thing that's interesting about Salesforce, of course, is what it says about perhaps further acquisitions. All
right, a full breakdown of all the market action and, of course, all of NVIDIA coming right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu, taking you through the closing bell, a global simulcast. It starts right now. Carol Massar and Tim Senovic joining us in the radio booth. Alex Steele. She was just too afraid of those NVIDIA earnings, decided to take the day off.
She's not
here.
afraid of
But
anything.
we welcome all of our audiences across all of our platforms here, including our partnership with YouTube, on what I'm told, Carol Massar, could be the most consequential day in the history of America.
Oh, man. Okay, now you're like pushing it. But it's an important one for the markets. We know that NVIDIA, what happens in terms of earnings, how it trades, it has impacted the trade overall, the equity markets a lot. The sell-off that we saw in NVIDIA and then the big bounce back. You can even, I feel like you can see it in the lead up to it, like the volatility that we've seen in the markets overall today, Tim.
It's not just NVIDIA, though. I mean, certainly a big story.
It is about NVIDIA.
We're still getting earnings.
Yeah, but it's still about NVIDIA.
Yeah.
Oh, come on. We got
Romaine,
Salesforce.
tell them it's
we got
about
Okta.
NVIDIA.
We're going to hear from Afirm a little later. There's other other companies out there.
Firm's not going to move the market like NVIDIA does.
Come on.
That is true.
Come on, guys.
Well, I mean, all
are
those.
you going to back me up a little bit?
I actually do back you up here. I mean, look, I mean, we talk about the outsized importance of NVIDIA because of its weightings, but of course, some of those other companies you mentioned, of course, will give us a little bit of a better read about kind of economic conditions. NVIDIA is kind of in its own world, and we talk about this idea here that when you have a company that's so outsized in the market here, how do you push back on that if you're an investor? Do you just go along for the ride? This is sort of like don't fight the Fed, don't fight NVIDIA.
You have to go along for the ride because, I mean, if not, then you're going to underperform, and that's the risk out there for any active investor.
All right, we're going to walk you through all of those earnings, including NVIDIA, so let's get right to the numbers here. On a closing basis, everything pretty much in the red across the board. The Dow Jones Industrial Average down more than 100 points or 0.4%. The S&P down more than 30 points or 0.6%. The NASDAQ is going to close out the day down by more than 1%, and the Russell 2000, Carol Masser, closing the day down by about 0.7%.
All right, so a little bit lower.